24,400, where we saw addition of more than 5 lakh shares, and for 24,500 call, we saw addition of 4 lakh shares with PM around 103. On the put side, 24,300 was the most active one, where we saw addition of more than 8 lakh shares with premium of almost 216. Now, support for Nifty seen somewhere around 24,100, which is the recent low, and resistance is now seen at 24,400. Two stocks that I'll be focusing on. First one is M&M, where we saw fresh longs on Motor Day, and second is Dr. Reddy's, where we saw fresh shorts building up on Motor Day. So these two stocks that might be in the focus today as well.
Okay, thank you so much for that, Darshan. But on that note, we're going to slip into a very short break. Don't go anywhere, because after the break, we'll get to what the auto sales numbers were looking like for the month of October.
I think most convincing is from India and maybe a little bit of China also to US. Why? Because you see the desperation which these guys seem to be selling in October. If it was to go into China, that would make less sense. I mean, it would make more sense if Chinese market was itself doing very well this month, so that there is absolute desperation. Oh my God, I'm underweight China, and it goes up every day and it is bugging me. No, China is actually down. And then I tweeted also recently some report which said that Goldman Sachs, because all these brokers know exactly who's selling where, that actually China also, they've had net sales this month.
Generally, what our research has shown, that whether it's a Democratic or Republican administration, markets tend to do well. In fact, they've done better under Democratic administrations. The two best performances in modern history have been under Bill Clinton and Barack Obama, when the S&P and the Dow were the best performers, followed then by the Republican administrations. So I don't think there's a lot to fear of even if a Democratic administration comes. But of course, Mr. Trump comes, he might change the rules of the game. He might include tariffs. He might move a more closed economy. The US has always profited and carried the world on his shoulders, and he may refuse to do that over the next 4 years if he wins.
Welcome back. You're watching Power Breakfast on CNBC TV18, and like I said, we'll talk about the auto sales numbers. Now, automakers posted a largely strong set of numbers in the month of October. So Darshan is here to tell us more details on that. Darshan?
As you said, overall sales for the month of October for all the auto companies were largely better than estimate, with two-wheeler domestic wholesale volumes were up 17% and PV industry wholesale volumes were up 2%. For the festive season, two-wheeler volumes were up almost 12%, and for PV it was up 8%. So again, here also it's largely better than estimates. Now, talking specifically about companies, first one is M&M. Here both the segments, auto and tractor segments, have done well. For the auto segment, it was largely led by SUVs, and for the tractor segment, good monsoon has helped company to report better than estimated growth. Second is Maruti. Sales were largely better than estimate, but it was largely led by exports. One segment which remains under pressure for Maruti is the entry-level segment, which saw sales dropping almost 20% year-on-year. Next is Tata Motors. Here, we were expecting, our brokerages were expecting there might be a decline in the sales, but company has reported sales which were almost unchanged again the same month last year. Total sales were down 0.3% at 82,682 units against 82,954 units. For TVS Motor, again, sales was largely in line to estimates, and company has regained second spot in electric vehicles. Here, total sales were up 14%. Motorcycle sales have registered growth of almost 14%. Eicher Motors, it has reported highest ever monthly sales for Royal Enfield. Total sales have come more than 1 lakh units and it's up 31% against the same month last year. For Hero Moto as well, total sales was largely better than estimate. Again, company has reported record sales of almost 6.79 lakh units, and it says on Dhanteras Day, its growth was almost in double digits. So overall, sales for the month of October were largely better than estimates, but two-wheelers have outperformed four-wheelers.
Okay, two-wheelers have outperformed four-wheelers. That's the word coming in from auto sales numbers in the month of October. But markets start somewhat 2081 on a healthy note, with the frontline indices gaining up to 1%. And market veterans Ramesh Damani, Sameer Arora and Atul Suri share the big themes to watch out for and where the market is headed in the new Samvat. Listen in.
I think the two themes that we're betting, not necessarily from Samvat to Samvat, but over the next 3 to 5 years. The first theme is this, what I've said previously, the digital public infrastructure. India has leapfrogged a generation of infrastructure from analog to digital, from highways to PAN card issuance. So I think there are maybe half a dozen companies, and they're still trading at fairly modest market caps. Not necessarily price to earnings ratio, but modest caps. And compared to the opportunity that I see ahead for them, these companies are buy. So whether it could be eKYC, it could be PAN, it could be Aadhaar, or ONDC, enormous opportunities in front of these companies. I think some of these companies will prove to be great winners over the next 3 to 5 years. So I certainly would invest in them, but not for 1 year, but over 3 to 5 years. The other sector that surprised me myself, which I have bought, is the pharma space. And we're all familiar with the Dr. Reddy's and the DVs of the world, which are outstanding leading companies in this sector. But we've looked at the smaller mid-cap companies which are developing intellectual property from things like obesity vaccines, dengue vaccines, obesity pills, dengue vaccines, antibiotics, new range of antibiotics. I think there are a lot of rich pickings surprisingly in that sector, because for the first time these Indian companies are doing genuine, serious intellectual property. I think the market will start recognizing and rewarding them over the next 3 months. So marginally, wherever I put the money for the things that I've sold, I put it in DPI and I put it into the pharma space.
If you look at last 3-year returns, Nifty is up less than 12% per annum. You can do it from today back 3 years, or maybe 12 point something. And the 500 is up 15 point something per annum for 3 years. In those 3 years, 4 years of 2004 to 7, the 500 index was up something like 40% per annum for 3-4 years. So this bull run is not like that. But the one thing that has spoiled it a little bit is that the results of this quarter are pretty mediocre. And therefore, I think, depends on what you call a bull run. We call a bull run as somewhere in the range of our history, which is mid-teen, more than debt, more than other things, but you're not going to make 20-25% with these kind of results.
There is no sector or theme that is absolute clear-cut winners. What you're seeing is in every sector, there are going to be winners and losers. So I do feel for the next few months, things may be a little more stock specific. But beyond that, I feel that the government, the country's macros are fantastic. As I said, the government has a lot of bullets. The bullets have been retained. They've not been fired. And I do think that the government will take action to revive the flagging demand and the economy. And I do think that maybe towards the second half of the year, the market would really do a big pullback. So that's my sense. Going to be a little mixed, more stock specific in the next few months. But the second half of the year, I feel, would be much, much better at an index level.
Okay, on that note, we're going to slip into a very short break. And after the break, we'll get you what's happening in the world of commodities. So stay tuned in.
Be a bit more circumspect if Trump came into power as opposed to if Kamala came to power.
of the US elections. Yes. You know, for our viewers, we promise this is going to be long term, but let me get the very near term out of the way, right? Let me go across to the wall and just
Welcome back. You're watching Power Breakfast on CNBC TV18, and let's move on and talk about what's happening in the world of commodities. While geopolitical tensions obviously continue, where is gold-headed? Manisha is joining in with us to tell us more in the world of commodities. Good morning, Manisha.
Morning, and thank you for that. Well, I'll start with the crude oil prices, where we have seen reports over the weekend coming in that OPEC and allies will delay output hike that was earlier planned for the month of December. So the crude has been under pressure in the recent few weeks because of weak demand, higher production, especially coming in from non-OPEC countries. So OPEC clearly seems to be dealing with this right now. OPEC has slashed nearly 6 million barrels per day in the last 2 years, and they have been seeking to ease that out. But looks like it's going to be delayed by 1 more month right now, and that seems to be supporting the crude oil prices. Remember, the U.S. crude oil production is at a record highs when it comes to the markets there at around 13 million barrels per day. So various factors, fundamentals really impacting this one. But we've started Asia on a stronger note because of the OPEC and allies decision onto this one. Well, this week is going to be quite an important one because with the U.S. presidential elections, and the markets also are looking at the U.S. Fed monetary policy meeting. Well, that's on Wednesday, but not just the U.S. You also have monetary policy meetings coming in from UK, Brazil, Australia, Poland, Norway, etc. And that in turn really seems to be supporting the gold prices right now. The weakness in US dollar also has been supportive. It is the weakness in US dollar which also seems to be supporting the metal prices right now. And then apart from that, the China National People Congress meets on 4th to 8th of November, and there's a possibility of a 10 trillion stimulus being announced. That in turn also seems to be supporting. So overall, most of the commodities have opened on a positive note, whether it's about crude oil prices, gold or industrial metals, or are trading quite on the firmer note.
Okay, thank you so much for that, Manisha. Surely keeping an eye out on all the commodities over there. But let's move on to some news coming in, very important international updates. And we are entering the final stretch of the US presidential elections. The latest NBC poll shows the race is still too close to call because of a massive double-digit gender gap. The race will likely boil down to how the candidates perform in the key battleground states. NBC's Erin Kilchrist has more details on the candidates' closing strategies.
Make sure you fill out your ballot. I did mine. I'm going to put it in the mail.
Harris using an optimistic closing message, trying to show a contrast with her opponent.
I see an incredible number of our young people, our young leaders. Oh, it would inspire you to see how they are organizing for change.
How you doing?
Releasing this final closing ad, a 2-minute message aimed at undecided voters watching Sunday afternoon pro football.
We see in our fellow Americans neighbors, not enemies.
The Trump campaign says their final stops are data-driven, targeting locations they believe they can drive supporter turnout. Former President Trump will spend tomorrow across 3 states, North Carolina, Pennsylvania, and his final stop, Grand Rapids, Michigan, at midnight, where he's ended each of his previous presidential campaigns.
So we got to get our country straightened out, or we're not going to have a country. All right? That's all. And you have a chance in 2 days. And if you don't vote, you're stupid. You're stupid.
And with that, it's a wrap on this edition of Power Breakfast on CNBC TV18. Thank you so much for tuning in. But don't go anywhere. Bazaar Morning Call up next.
So November is going to be important because you've got, as Madhu was saying, US elections, but you've got a couple other things as well. So the dateline will come up on your screen. Tomorrow you get the jobs data out of the US. Then you got the China NPC, and then you got election day, which is 5th of November. Result day. I mean, will we get the result on 5th? We don't know. And then, of course, you got the Fed decision, which is the 7th of November. So this is, the lineup of events. Later, of course, you get the state election results as well. But I'm just focusing on these global things. 2 points each. US jobs data, still remains the most important for the pace of Fed cuts. We got the first cut, which was deep, 50 basis points, but now many stalwarts are saying maybe that was a mistake. The Fed is tied to its forward guidance. They've said they have to cut, so they will cut. But the data is going the other way. All the data which we've got till last night is all strong. So, we'll see. remember last month, after the 50 basis point, the September jobs data came, which was much stronger. So this one now will tell us, tomorrow's data will tell us whether September was an aberration or something else. Does the market need to reprice expectations of what the Fed will do? Now I come to US elections. We'll talk more about this, but very quickly, the Electoral College and how they decide the president depends. Essentially, it comes down to 7 swing states. Pennsylvania is essentially the key state because it's got the most number of electoral votes, and that's key to winning the US election. Expect most news networks to so-called call the US election by, for us, it'll be Wednesday, 8:45 in the morning. So, we'll be air on Bazaar, and I think around that time, news networks in the US will call the election. There could be, there have been contested elections as well. 2020 is an example. So it's possible people go to court. The Republicans or the Democrats go to court and we don't get a clear verdict. But historically, recount has not changed the outcome per se. So that's essentially point number 2. Then you got China, NPC, right? And this is important because China has very smartly deferred this to happen, to coincide, or actually they want to wait and see what the result of the US election is, as Madhu was also saying, and have the flexibility to respond to a Trump victory if the need be so. This is a newspaper which said that Chinese policymakers plan to mitigate any potential impact of geopolitical surprise, and they could announce a much bigger stimulus if a Trump win intensifies headwinds for China. Remember, he's threatening big tariffs, etc. 60%. We'll know if that is just election rhetoric or this is something actual. And of course, we get to the FOMC. By the time we get to it, I think a lot more things will be clear. But for now, markets have not changed their consensus expectations of a 25 basis point rate cut. They still think that a 25 basis point cut is what we will get.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's the beginning of a new week, and this is, in some ways, the biggest week of November, and of course, in some ways, the biggest week this quarter as well. Lots of big, huge events lined up, which have market implications. We will discuss all of them as we go along. I'm Prashant. With me, my colleague Surbhi and Nigel. Guys, hi, good morning.
Hi, good morning, folks. I guess the big Diwali week is finally behind us, so I think most of us are coming back post the festivities, and I think the market wants to also take fresh guard because of the kind of cues that we have lined up with the election in the US, the FOMC meeting, and this final big meeting in China that everyone's talking about. So there's just so much going on, isn't there?
Well, as Prashant has been saying, it's going to be a November to remember. It's going to be a big one coming up for the globe, for equity markets as well. So let's get straight to the action.
Absolutely. Before we get to the action, by the way, someone was telling me that you should weigh yourself post after Diwali season and before Diwali season.
No.
Before, but I did after. And I think I've gained a few kilos.
Those are numbers we do not look at. So we avoid them.
Absolutely. Well, let's just quickly begin with, of course, the dateline. I think that is essentially something we've got to you. It's not new, but just to, in a way, put it out again. US elections are tomorrow, which is the 5th of November. You've got the China NPC, National People's Congress, which starts today, runs till the 8th, which overlaps the election result in the US. And then on the 7th of November, which is Thursday, you get the Fed decision. So this is essentially, the week which is in front of us. Now, let's just turn the clock back and take you to Friday when you got the jobs report. Absolutely remarkable. So you basically had US jobs numbers, which were much lower than expected, but the markets were unfazed. Now, the actual number, 12,000 jobs added in the month of October, as compared to about 100,000, which was expected. The impact, of course, coming through from strikes and hurricanes. Now, the thing is, on Friday evening, that was the Muhurat session when the numbers came, I was saying that markets should remain unfazed, absolutely. That we should not see too much of a reaction because it's strikes and hurricanes, and this was kind of well advertised. But the actual reaction was was even more extreme. You had equities which reversed the slight temporary sell-off that we saw. S&P was up 0.4 by close. Nasdaq was up 0.8%. And this is the rates market. If you look at US Treasuries, they corrected the knee-jerk rally that they saw. Yields had fallen sharply, and by close, the 10-year was up 10 basis points. You got a very weak jobs report, which essentially means the normal reaction function would be that the Fed's behind the curve, they need to cut more, yields should fall sharply. Yields ended 10 basis points higher. Now, that is something you don't see very often. By the way, the 10-year real yield has ended about 2%. Historically, if you go back last 4-5 years, 2% is kind of the danger mark, but I think we're in a slightly more different environment, so I won't sort of fixate on that just yet. The dollar index ended about 0.3%, 104.28 is where we left off on the dollar index. Consensus still expects, after the jobs data and everything, still expects a 25 basis point rate cut on Thursday, that is the 7th of November. The US election, and we'll get the results, hopefully we'll get the results when they're supposed to come, which is tomorrow night. For us, it will be Wednesday early morning. So Wednesday morning around the same time, I think we should be able to by this time, about half an hour from here, by about 8:30 in the morning, 9 o'clock in the morning, we should know who is the next US president. If, of course, things are not murky as they were in 2020 and 2016, and it's not very, very close. But it remains a binary risk for markets. Betting market averages, which were favoring Trump, have also kind of converged to what polls are showing, and the polls are showing that both Trump and Harris are in a kind of a dead heat. Okay, there's just one more thing I want to point out. Last week, there was, and I think it was kind of missed or not too much attention paid to it. There was a Reuters article which said that the much-awaited fiscal stimulus plan will be announced during the NPC. That is not the sort of story. They put out a number. The article floated a package worth about $1.4 trillion with promise of more if Trump wins the election. And I think this is the one which we need to watch out for as well. And this will all play out in the next couple of days or so. Just to circle back and closing the levels here, resistance for the Nifty. We ended higher in the Muhurat session, but of course it's a 1-hour low-volume day. Resistance at 24,372, which is the Thursday high, and then 24,498. These are the two levels to watch on the upside. Supports come in at 24,073. You got for the Nifty Bank, which did not break the low of 50,194. It posted a positive weekly close. Resistance at 52,330 and then 52,835. And support zone is between 50,382 and 50,194. I think if you're trading day to day, and especially the indices, I think it's just better to wait a day, 2 days, and then take a call. By Wednesday morning, I think the picture will be much clearer. And I'm sure you'll get an opportunity to do what you want to do, because expect at least the indices, broader global indices, the big ones, to be volatile going into the US election. Surbhi.
Absolutely. What a big week lined up, right? So you need to pad up, get the coffee, your tea, or whatever is your fix, get that ready to get through it. Before I start talking about Asian equities and how they're doing, just a word on oil as well, because what we were discussing last week has actually transpired. OPEC Plus was to increase its output in December. They were talking about an output increase of about 180,000 barrels. But now that's been pushed back by a month, and that's why there's a bit of a bidding on the upside on oil prices as well. So once again, Brent is moving closer to the 75 zone. So just keep that in mind. Now back to equities in Asia. Actually, to start off with, the color is green, considering the huge week that we have ahead of us. Most of the markets are up and about. Japan, by the way, is closed today. So just keep that in mind. That's why, that's a cue that's not available. But a lot of the other markets that are trading are actually fairly positive. We also have the rate decision from Australia this week. Tomorrow they're coming out with the rate decision. No changes expected in Australia. Now on China, considering that's the big event here in our neighborhood in Asia, the 5-day NPC meeting, which is the National People's Congress of China, which is their parliament, that meeting will get over on Friday. It's a 5-day event that's going on. And all kinds of bets are doing the rounds in terms of the size and the extent of the stimulus. Nomura, for one, feels that the extent of the stimulus could be up to 20% higher if Trump gets to the White House instead of Harris. So a lot is perhaps hinging on the way tariffs will play out. In fact, under Trump, going by a lot of the announcements that we've heard and the claims we've heard that tariffs could go up, that's, imports coming into the US from China, tariffs could be up anywhere between 60% to 200%. So therefore, they're expecting a bigger stimulus in China if Trump does get the White House. By the way, in the last 1 month, there's been a lot of underperformance in the Chinese market. The mainland Chinese index, the Shanghai Composite, is down 6%. Hang Seng is down almost 10%. But, and now this brings me to India, this has not led to a stoppage of the FPI exodus that we've seen in the same period. In fact, if you forget the Muhurat session for a second and just, I'm rewinding back to the Thursday session before getting into the Diwali weekend, we had a lot of selling that day as well. I mean, FI has sold once again in the cash market, almost 5,800 crores. Domestic institutions offset about less than, half of it. And on the Muhurat session, for what it's worth, I mean, the session closed positive, but the FPI selling continued even there. Small number, 200 crores was the selling on the Muhurat day. So keep that in mind because the FPI numbers are nowhere supportive. The level that Prashant also mentioned, even I'm watching for that quite carefully. This is 20,073 because that's the low. If you talk about the consolidation that the market has been, we've not breached this level, and this is going to be extremely crucial to watch this week as well. Now, just a couple of areas that are going to be in focus. OMCs, not only because of the move in oil, but because we've got a hike on both ATF and commercial LPG. So let's see how stocks react. It's about a 3.5% increase in ATF prices. I went by the Delhi rates that have been announced. If you look at the other pocket of the market that I'll watch out for today, that's going to be autos for sure. What is the month of October telling us? That the struggle on the passenger vehicle side continues. That's real. Numbers have been weak. Hyundai, just 2% growth. Maruti, domestic sales down 2.3%. Tata Motors, passenger vehicles, absolutely flat. The only exception is Mahindra & Mahindra with that 20% gain. On the two-wheeler side, things are much better. Eicher, for instance, Royal Enfield sales are up 30%. TVS sales are up 14-15%. Hero's done well, 18% higher. We'll be speaking to the management of Bajaj Auto as well. So again, the complete disconnect between two-wheelers and four-wheelers, that's very much on. Then, of course, we'll talk about tractors. M&M has done really well on tractors as well, by the way. So watch out for that stock today. Lots of interesting results. I'll leave you with the list for the day. ABB, Amara Raja, Bata, some of the railway names like IRCTC and IRFC as well, Raymond Exide. So it's a pretty interesting session for a lot of these large mid-caps that are reporting numbers today, Nigel.
Well, that's right. And October went to the bears. The question is, can the bulls fight back? And if you look at it, the last week or so, actually the broader markets have suddenly started doing quite well. So most market men, most rational voices that we've heard, they've said that the large caps could outperform. But at least in the past week, the pullback has been far in, the mid caps, the small cap, as well as the micro cap, in comparison to what the Nifty has done. That's telling you the animal spirits are back. There is a fair bit of participation as well in the broader markets. And that sharp dip that we got, it seems to have got bought into. In the near term, though, you expect the headline index to be fairly volatile. What about the FIs? Well, they're diametrically oppositely, placed in comparison to what it was in the previous series. So at the start of the October series, they were net long, and we know what happened, right? They didn't get it right. The clients, on the other hand, they were net short. Now, this time around, the start of the November series, well, the clients are net long and the FIs are net short. I'll tell you what, this sort of a combination is not such a bad thing. In percentage terms as well, if you pull it up, the FIs, well, 23% of their positions are on the long side, while you have 77% on the short side. Two strikes were a bit active, the last couple of days. The 24,400 call, 24,300 put. And you just plug in some numbers, you look at the recent levels that you're looking at, and in the last week or so, almost every day we went to around the 24,500 odd mark. And the highs come up for you on the screen. Almost on a day-to-day basis, 24,440 to around that 24,500 odd. And that's where the resistance zone comes in at. So 24,500, 24,550, that's the near-term resistance. You get support that comes in at around the 24,000 mark. That's from where we recently bounced up. And otherwise, if you're looking at a sharper correction, then maybe, in fact, the 200 DMA comes into play. But for the time being, at least, it appears the bulls want to defend this 24,000 odd mark. Stocks that I'm looking at, well, Welspun per Corp, they just came out with an order win just a few minutes back. So they received a large order of around 1,300 crores odd. This is the second big order that they have received in the last 35 to around 40 days or so. And the US business has been struggling. This entire order gets executed in FY26. So that's the stock that I'll keep on my radar as well.
Okay, all right, got that, Nigel. So lots to watch out for individual stocks and, of course, market levels. Let's get started then with the equity call of the morning. Chetan Sheth of Nomura says that the coming week is possibly the most pivotal one for Asia ex-Japan stocks, with two major events on the calendar, US election and China's NPC meeting, which may have significant implications to to the multi-month outlook for Asia ex-Japan stocks. He says Donald Trump is likely net negative for Asia ex-Japan, while Kamala Harris is net positive. That's Namira. Remember, I was telling you that they're saying that the extent of the Chinese stimulus could be 20% higher if Trump gets to the White House.
Some Teflon coating, just in case, right? Anurag Singh is with us. He's managing partner at Ansett Capital. Anurag, good to have you with us here. Thank you for your time. Prashant this side. Just a quick word on the impact of US elections. Who's better for Indian equities, specifically, Anurag, in your opinion? Trump or Harris?
Prashant, morning. Monday morning to everyone. Prashant, I don't know. I was surprised when I hear a very comfortable pro-Kamala positive voices, right? I don't understand the economics in that sense. So first of all, we are based in US. For US markets, of course, Trump is better, right? And we saw that between 2016 and 2020. Even for Asia Pac, Prashant, I think here is what most markets underestimate. If Trump comes, it'll be kind of, we can pretty much assume that all the wars and geopolitical risk that can, go towards, some sort of settlement, right? Whether it is Middle Eastern war, whether it is Russia, Ukraine, and all of that. And I think if that happens, I'm sure that's going to be very, very positive for global market. So I think people just underrate the Trump's positive movements that can kick off, once he assumes the power. That said, Prashant, I don't know what the media says and what kind of media is getting circulated in India, but assume everyone is biased. But my sense is Trump is headed for a very strong victory. Now, I'm not a pollster, I'm not a political expert, but the feel is that the people have had enough of, the current administration.
Yeah, everyone, Anurag, you put it well. Everyone is biased. Absolutely. Just one thing, though, with Trump, and I completely agree with you. Maybe a better outcome for all these conflicts around the world. Maybe you will be able to get at least one, if not more, these conflicts to an end quickly. But the other thing is trade, tariffs, right? Now, he's talked about matching tariffs and higher tariffs, not just for China, but matching tariffs for everyone. So if you want to sell in the US, we'll impose the same tariffs that you impose on US goods into any country. The other is, most are saying and those who agree with your point of view, that the dollar will be higher between 3 and 5% if Trump were to win. So how does that square for emerging markets? Anurag, go on.
So let's look at tariffs, right? Again, I think on media here, we quickly see the economists on the left calculating, 10% to 50% tariffs on flat tariffs on all countries, all products, and then they come up with some number. I think this tariff thing is just a bargaining chip from Trump's side. He's a deal maker, but at the same time, he's not the one who will kill businesses, and certainly not the US businesses, right? So in that sense, I think we can assume some pragmatism that he is willing to negotiate with countries, country by country. And of course, we don't assume that, US will become a, export surplus country. That's not going to happen. Things will keep coming from China and rest of the world as they do, right? So it is just to position that, look, I'm not going to give a free run to everyone. But I don't think it's going to be a blanket move or something like that. Outside of immigration, I think everything else will be very pragmatic and very, country by country, right? So that's on tariffs. Let's look at the dollar. Prashant, dollar is just mimicking the 10-year yields in US. I think as long as the 10-year yield keeps rising, and that's a seasonal thing in the last quarter, I think it will stay strong. But eventually, it will have to follow what happens within Europe and vis-a-vis the 10-year yield in US and rest of the world, right? So my sense is dollar will continue to stay stronger, mostly because European economies have their own struggles and they are really struggling between how to balance this. We saw the UK budget. There is a gap there and 10-year yields are rising there. So I think it's more a function of relatively where you stand, and US is still doing better there.
Anurag, hi. Good to have you on the show. So let's talk where you're putting money. Give us a sense on the portfolio mix now, and how much is it US equities? Are you putting some money to work here in India? And would you change anything depending on whether it's Trump or Harris. And we'll have the answers by Wednesday morning, right?
So, Surbhi, look, I look at Indian markets, I understand there is a lot of money to be made in Indian markets, and there is, and there'll continue to be. But I think sitting here in US, you need to have that very fine sense, especially most of the money in Indian markets is now being made in mid and small caps. Large caps being, having attained the sense of entitlement and the valuation that they can. So my money mostly right now is positioned in US. Largely because of the valuation comfort that we have out here. And we continue to like, within US, we continue to like technology, financials, communication, and discretionary, right? There is a lot of money to be made once Trump, if there is a Trump victory, banks will particularly do well. Energy may not do well because, look, there will be more drilling, so more oil consumption. Healthcare by default does well all the time, either administration that comes in.
Okay, Anurag, thank you very much for joining us. We just hope that we actually get the results by Wednesday morning, which is by this time here in India. And it's not, it doesn't go into a spiral and then we have to wait for a few days. Hopefully it's a clean one, right? And we'll see. And we'll chat again. Thank you very much for joining us here on CNBC-TV18. Well, let's get you all the corporate interactions which are lined up here over the next 2 hours or so. At 8:40, we have with us Amit Mahajan of Bharat Defence to talk about their second quarter earnings. 9 o'clock, you'll hear from Abhishek Kumar of JM Financial Institutional Securities. IT stocks slipped sharply after Capgemini revised downwards its revenue estimates. Divina Mehra will be with us at 9:20 to talk market. She's a market master of the day. 9:30, Bajaj Auto will be with us to talk about the October sales numbers. Vishnu Malpani of Azad Engineering will be talking to us at 9:40. They've signed a 700 crore contract with Mitsubishi Heavy Industries. 9:50, Narayana Health on their second quarter numbers. It's the economy with Lata. She'll be in conversation with Nitul Kotecha of Barclays, Neeraj Gambhir of Axis Bank, and they talk about the impact of US elections on India macros.
Well, time to slip into a short break, but we got a lot of stock-specific action to track in our special Top 10 segment. We're looking at Mahindra & Mahindra, Eicher Motors, Hero MotoCorp, Tata Motors, Zentech, Azad Engineering, Premier Energies, as well as NMDC. All of them will be reacting to positive news flow, while you have Sun Pharma as well as Moil that will be reacting to negative news flow.
Welcome back. So we've got lots and lots of news flow to go over and some earnings as well. So let's straight away get to the CNBC-TV18 list of top stocks to watch this morning. Can we see? I think everybody is here. So our team is standing by with, of course, the major ones for today. And Sudarshan, of course, has been looking at lots of those auto sales numbers. So Sudarshan, what's the report card for October looking like?
So October sales for all the auto companies are largely better than estimates. If you talk about the two-wheeler wholesale volumes are up 17% year-on-year, and for passenger vehicles, it's up 2%. And if you talk specifically about the festive season for two-wheelers, retail growth was at 12% and passenger vehicles at 8%. That is largely better than estimates that all the brokerages were factoring. Now talking specifically about companies for M&M, both auto segment and tractor segment have done well. And auto segment was largely led by SUVs, and for tractor, good monsoon has helped company to boost retail sales. For auto, total sales were up 20%. For tractor, total tractor sales have increased by almost 30%. For Eicher Motors, it has reported highest ever monthly sales for Royal Enfield, which has come at 1.10 lakh units and up 31% year-on-year. And company says all its new and existing motorcycles have continued to perform well, and with upcoming launches, company will be able to sustain the current growth momentum. For Hero Motor, again, highest ever monthly sales. It has reported total sales of 6.79 lakh units against our expectations of 6.30 lakh units. And also on Dhanteras, company has recorded growth that are in double digits. Last is Tata Motors. If you talk specifically about the Tata Motors on standalone basis, we were expecting sales to decline on YY, but sales were flat. And for JLR, company says Land Rover US retail sales were up 25%, and for Jaguar, US sales were up 4%. So overall, for the month of October, total sales were largely better than estimates, but two-wheelers have outperformed four-wheelers.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's hop across to Upasana. Zentech came out with the numbers. The stock has seen a big run, but those numbers look quite good, Upasana.
Totally, Nigel. Now, revenue EBITDA PAT beats street estimates, and companies on track to meet its FY25 guidance on the back of strong execution. Now, coming to numbers of the company, revenue stood at 242 crore, which was up nearly about 2.7 times. EBITDA stood at 79 crore. Up almost about 2.6 times, and EBITDA margins took a dip of 110 basis points at 32.8%. This is mainly due to lower gross margins. Now, PAT for the company stood at 65 crore, which was up 2.8 times. Now, looking at company's FY25 guidance, mind you that the company has given a revenue guidance of 900 crores, and as of H1 FY25, the company's revenue stands at 495 crore. And FY25 EBITDA margin guidance the company is given, that is around 35%. So all in all, good set of numbers coming in from Zentech and its Q2 FY25.
All right, Upasana, thank you very much for that. So keep an eye out on that one as we open up for trade today. But Sun Pharma should also be in focus on the back of some not particularly great news for the company. Vinny is here with details. Vinny, good morning.
Good morning. Not such great news coming in for Sun Pharma. Now, what has happened is that over the weekend, the District Court of New Jersey has actually given a preliminary injunction for Sun Pharma. This was against Insight, which had filed against Sun Pharma for this drug. This drug is called Lexelvi, and this is mainly used for the treatment of alopecia. Now, Sun Pharma had received a US FDA approval for the launch in July 2024, and then this issue that started between Insight Corporation as well as Sun Pharma. And now there's not a favorable decision for Sun Pharma because their launch will be delayed because of this injunction that has come in. So obviously they will be appealing to the courts, but we'll have to wait out for a positive decision coming in on this front, because when you look at Nomura, they had factored in the earnings for this drug around $10 million in FY25, around $80 million in terms of revenue from this drug in FY26, and $150 million in FY27. So there will be some bit of an earnings impact that they are expecting on Sun Pharma, 0.4% impact in FY25 and around 3.1% impact in FY26. Nomura continues to maintain their neutral rating target price of 1,850, but this is surely a negative news coming in for Sun Pharma. Delay in terms of a launch where they were expecting good revenues over the next few years from this drug is a red for the stock.
Okay, Vinny, all right, got it. So Sun Pharma, not such great news this Monday morning. Thank you for that. Let's go across to Vamakshi. She's watching for Azad Engineering and Premier Energies. Vamakshi, morning. What's the news?
Well, good morning, Surbhi. Azad Engineering is expected to open higher because the company has signed a long-term contract as well as price agreement with Mitsubishi Heavy Industries Limited. They will be supplying highly engineered and complex rotating and stationary airfoils for advanced gas and thermal power turbine engines. And under the current phase of this contract, it is valued at $82.89 million, or roughly around 700 crores. So it's a big contract coming, for Azad, and given that I'm going with the green for this counter. But apart from that, keep an eye out on Premier Energies as well. Subsidiaries of the company have received multiple orders from 2 large independent power producer customers, and these orders in total aggregate to 560 crores, which includes 513 for their solar modules and nearly 47 crores for their solar cells. The supply for the same is expected to commence from December of this year onwards. So overall, it bodes well for the company. So going with the green for Premier Energies as well.
Indeed, the solar modules and cell companies, they've been winning orders and looking quite strong. Waaree Engineering as well, Energies, that one ended at the high point of the day, even on the Mohra trading session. Well, let's get to a couple of stocks that I'm tracking. MOIL, they have revised their prices lower for different grades, but that's more or less on expected lines. So we'll see whether the stock reacts, because we already have an international benchmark. So that's one stock. The other one is NMDC. Out there, actually, the production and sales numbers are looking good, particularly for the month of October. So the offtake has improved dramatically by close to around 17%. Year to date, still it's as flat as can be. Till the past month, actually, it was a degrowth, but post the good performance in October, well, there is a flattish number that we're seeing, which is good news. The stock could react positively in trade today as well.
Okay, so MOIL and NMDC also make it to our list. With that, actually, let's recap all the stocks that you should keep on your radar today. The ones that have positive news flow around them are some of the auto names like M&M, Eicher Motors, Hero Moto, Tata Motors. Then there is Zentech, Azad Engineering, and Premier Energies on some of the auto wins. NMDC as well on the better October performance. Stocks with negative news flow are Sun Pharma and MOIL. So more green than red today. Okay, let's go across to Manisha now and get a roundup of all the commodity cues that we are getting. Manisha, morning. What a heavy week, right? So many triggers from the Fed meet to the US election. What's the overall sense you're getting?
Well, absolutely. With all of these events happening, it's the gold prices which seem to have firmed up yet again as the week has begun. The US dollar decline has been another added factor. So, well, yes, US presidential elections, US Fed rate decisions, but it's not just the US who's headed for a Fed rate decision. It also is about UK, Australia, Brazil, Poland, and a few other countries which also have monetary policy meetings this week. So the week promises to be quite eventful there. But the best of gains really have come in for the crude oil prices right now, with OPEC and allies deciding to delay output hike yet again is something that really seems to be supportive. Well, it was earlier also delayed by 3 months and now done by 1 month is what we understand. 180,000 barrels per day of an increase, which was expected to start from 1st of December, will now happen from January, is what the OPEC and allies have said. So that really seems to be supporting the market. Well, there also are statements that the China National People Congress meeting that is slated to happen between November 4th to 8th could announce $10 trillion of a stimulus, and that seems to be supporting base metal prices also. So overall, most of the commodities have opened Asia on a firm footing today.
All right, Manisha, thank you very much for that. So there's a lot of printing expected, a lot of fiscal stimulus expected, and gold is the beneficiary. Gold and precious metals are the beneficiary, of course, trading at an all-time high. We'll take a quick commercial break here. Prakash Diwan will join in with some stock-specific ideas when we return on the other side. Stay with us.
on the street they say, "Ye dil mange more," right? Now that you're listing, you also.
Welcome back. Let's get the fundamental conversation going. We have Prakash Diwan joining us on the show this morning. Prakash, always good to have you on. Hope you had a good festive weekend. And I'm actually going to go back to the stock that we were discussing on More a Day. I'll start from there because we want to discuss your take on the auto numbers. And once again, it's Mahindra & Mahindra standing tall, 20% growth when it comes to their passenger vehicle business. And even tractors have started firing in. Now, what about the stock? It's already had a dream run in the calendar year, but it is off about 10% from the peak. How much more on a Mahindra & Mahindra? And would you still advise buying in now at these levels? That's the question.
Good morning, Survi. That's absolutely $1 million question. What do you do with a stock that's performed so well over the last couple of years, has done well even in this year? And there's still, this doubt that people have on whether, this rotational change, the sectoral rotation that you see in the markets typically on closer to peaks, will autos be out of it? Now, my sense is if you look at the numbers, they are in sharp contrast to what the Bajaj Auto management commentary was, right? The anticipation was probably they were trying to manage expectations and, people read it as a caution. But numbers tell you that buying has come back, especially the two-wheeler side. What's interesting about the M&M numbers is I'm not surprised at the bump up that they've seen on the SUV portfolio. That was bound to happen. They probably lead that portfolio by a decent margin. People haven't been able to compete as much. It's the tractor segment, which is the most interesting, which has seen a pickup after a fairly long gap. And seasonally, of course, this is a good month to start looking at improvement there. My sense is if that happens, you could probably, the second order effect is look at Escorts Kubota. That is a stock that also kind of rallied, lost some ground, has come back to a level where it could probably, do some tactically for the next 6 months, it could probably outperform a lot of the other auto names. On M&M especially, I think each of the businesses is waiting to kind of start scaling up on its own. Whether it's the EV portfolio, and remember, they're going to be launching the EV3 or whatever that new series of portfolio vehicles that they have this year. So in 25. So if that were to do well, they'll start competing in that segment very, very aggressively. So M&M has got more sum of parts kind of a thing. There is room, but it'll probably take some time. But Escorts is what you need to look at.
Anything else? Hero, because the two-wheeler guys, like you're saying, TVS has done well, Hero has done well. And I don't know, would you be a contrarian at all? They say you have to buy great businesses when the tide is, not high, all of that. So I don't know. Maruti or even a Hyundai, I don't know. None of the numbers are going in their favor, but would you buy now?
No, I think rest of the names have a valuation, don't have that kind of valuation comfort, and especially because most of the good stuff is priced in, especially two-wheelers. They'll have to continue doing well to justify where they are. So you'll probably start seeing things happen after Jan. And, this is a market phase of the market, Subhi, where you will probably get very good entry points, is my sense, till about Jan, Feb. So I'm not in a hurry to add anything new unless it's compelling enough from a valuation perspective.
Hi, Prakash. Good morning. What's the view on NMDC? Finally, the dispatch numbers are looking better in October. They were disappointing the previous few months for a whole host of issues, whether it was rains and some environment clearances as well didn't come, regulatory clearances didn't come about. But your view on the stock?
Good morning, Nigel. So I think it's definitely, let's look at what could happen on the metal side, on the ferrous side, that is, globally. And if the China demand continues to remain up, and if there is this whole anticipation of a stimulus and a higher stimulus, I don't see any reason why the metal rally will sputter out. And from that perspective, ores will continue to do well. In fact, there's always this lag. And we've just started seeing, iron ore kind of come into that phase where it has started matching up or trying to catch up with the underlying metal prices. So my sense is NMDC is very favorably poised. It's just that execution of some of the, expanded capacity is something which could take longer than what you anticipate. And if that doesn't kind of come in the way, you'll probably see a very nice secular uptrend going into the next 6 to 12 months. So quite positive on that. and there is valuation comfort in this case. There's nothing that you're overpaying from a price to book or even the price to earnings growth kind of a model. So my sense in NMDC does make sense for. In fact, these are times when you buy these kind of stocks which are boring, which are slow to grow, but they do grow. So look at that. No fireworks, but yes, very powerful.
Okay, all right, got that. Prakash, stay on. We need to discuss a lot more other stocks with you as well, but let's quickly get an earnings call in. Paras Defense is the company and the stock on our radar, and the company delivered a good performance for the second quarter gone by. The revenue growth was fairly strong. In fact, I'm looking at numbers now. Look at this. Revenue is up 43% in the second quarter, and revenue has grown 55% in the first half of the year. Not just this, all of this is happening with pretty smart margin expansion. Plus, they've announced a lot of new order wins in the third quarter as well. So let's put it all together and get a full outlook going with Amit Mahajan, Director Technical and R&D at Paras Defense. Amit, good to have you on. And I really want to start over there because you have been, till now indicating that at an annual basis, you'll grow at 20 to 30%. But look at the second quarter, look at the first half, you're growing at 55%. So you want to increase the outlook for the full year itself? Are we talking about more than 50% growth in FY25?
Firstly, good morning and wishing you all a very happy Diwali. I think indeed, yes, this festive season has brought in a lot of smiles on our faces. I always maintained that 20 to 30% was a conservative one because when you're working in defense, you're working on national security projects, a lot of things depend on the platforms that are to be developed. But as you see, the tailwinds are on our side. Most of the development efforts have gone past in the past few years. What you see today is an amalgamation of a couple of things. One, a very, very strong order book, which we have and we continue to maintain. And along with that, what is happening is the phase of our transition from a component manufacturer to a complete system manufacturer is almost giving you the results that you can see. So the submarine periscope that we have started deliveries, the effect of our electro-optics division doing well, and defense engineering stepping up. If you see the contribution that defense engineering has given in this particular quarter or the whole H1 to take with is substantial. And that along with profitability, this is something this is going to be the new normal. And I think, yes, my estimates were conservative and I would like to keep it that way.
You'd like to be conservative. Okay, got it. But I think the actual numbers are speaking for themselves. It's interesting that you brought up this whole transition aspect where you're moving from being just an individual component supplier to being an entire subsystems manufacturer. Is that the reason why the margin profile has also improved? Again, I'm looking at first half numbers for a wider picture because from about 24% margin, you're at 27%. So is this the new run rate? Would you end the year at 27% and is this a sustainable level?
Yes, this is the new run rate. And the reason for this is when I'm making a complete system, consider me to be the manufacturer of most of the components that I'm putting it together. So I'm retaining a lot of value in the system within the company. And that is giving the boost to my profitability.
All right. Hi, Amit. Good morning and good to see you in. So what should we work with in terms of margins then? We should work with this 25 to 27 range. Would that be fair?
Good morning, Nigel. Always nice to talk to you. Yes, you can look at, I would rather say 25 to 30% because the Q3 and Q4 are yet to come. These are legacy-wise been very, very strong quarters for us. But I think I would be conservative by saying whatever way we are going, we will maintain Q3, Q4, and the margins would look similar or slightly better.
By the looks of it, it seems that you want to surprise the street at the end of the third quarter. So let's see whether or not that happens. A couple of other factors. Defense engineering is 55% of their mix right now. Where do you see that number stabilizing it? And also, if you could give us an updated order book. As on date, what is it? In the past, you have said you expect the order book to scale, I think, to more than 2,000 crores in the next few years. But by the end of this year, where do you see this number stabilizing at?
So the order book already stands at in excess of 850 crores.
Yes.
So that's a good visibility for a company like ours, where if you see the last year's revenue, you're looking at anything beyond 3x, and that's something which is way ahead of our estimates. We're going to be very, very comfortable if our order book is in excess of 2x because that gives us good visibility for the next 1.5 to 2 years. And I think we as we speak, our order opportunity size is swelling like it's going beyond our estimates as well. So it's all good. The order book will sustain. It keeps coming in although we deliver, our order book still keeps growing. So everything looks fine. The opportunity size also is getting better. The space sector is booming. The electro-optics division and the opportunities related to electro-optics are doing really great. Our subsidiaries opportunities have also multifolded, although they have not contributed to any revenues. But the RF and microwave division has substantial opportunities lying in front of them. And the Control Paras JV, as you already know, that it has a great funnel.
All right, Amit, we'll leave it there. You're sounding very, very confident, at least in terms of the runway for work, right? And so no problem with regards to the amount of work that is available for you in various sectors as you outlined. That's Paras Defense. Let's turn our attention back to the market and let's bring in Anuj, who's standing by. Anuj, good morning. It's a big week.
Morning, Prashant. Big week indeed. A lot of global cues. Arguably the biggest week of the year for global market. And of course, for our markets, the new day, new week, new month and new samvat. So let's see. October was a painful month for the bulls. November started well, albeit with low volumes on the Muhurat day. But you know what? The mid and small caps started to show some signs of life last week. So let's see if that can continue this week. On the Nifty, there are two levels that I'm watching out for. On the downside, the October low of 24,074 is the most important level. And on the upside, the 20-day exponential moving average of 24,661. That's the most important level to watch out for. In terms of Nifty outlook, the first support is 24,172, Thursday's low. And then the bigger support is 24,073, the series low. The resistance comes in at 24,372, Thursday's high. And then the bigger resistance is 24,450 to 24,500, the expiry week highs. For 5 days in a row, the Nifty fell from this zone of 24,450 to 24,500. So that's why that becomes an important level to track. On the Bank Nifty then, the levels that I'm watching out for, it's one shade better than the Nifty, of course. Also defended the October lows. The first support is 51,300 to 51,350, and then 51,000 to 51,200. And then, of course, on the resistance, you have 52,005 to 52,220. And then the bigger resistance is 52,500 to 53,000.
All right, Anuj, thank you very much for that. So that's the setup this morning as we go into our session. We'll take a quick commercial break here. We will come back in just a bit from now. A technical sort of experts, Mitesh and Sudarshan, with what you should be doing with regards to individual stocks. Stay with us.
With the trajectory that we've seen on them, on a lot of the parameters, they're above, what Swiggy is right now, which is not to say that you're any less. It's just that you're at different stages of growth in your life.
Correct. I think, look, there's a lot of context. We each have our own context, and we are in very, very exciting categories. And our strategy, our capital allocation, everything's going to be a function of our excitement and what we can go after in each of these. Like Rahul mentioned, we've demonstrated the profitability in the food business. We feel good about its future going forward. As for quick commerce, I think it's in a once in a lifetime category. And I think we are seeing consumption patterns change for consumers, and there's so much to be done. So our endeavor will be to make sure that we do the fullest of our ability to make sure that we grow and serve customers well and make sure that everything comes together nicely.
But for quick commerce, you recently said that the peak of the investment is behind you, but right. You're still not a contribution margin positive either. So, I mean, what is the trajectory there for quick commerce? Because even for your peer, that has been the growth driver. Right. So how are you looking at the quick commerce business for you in terms of is it also going to be the growth driver for you? And sort of trying to get a sense of the path of profitability on that front also.
See, maybe I'll take this. I think on quick commerce, what really amazes us is the way consumers are reimagining, things or what can be delivered to them. So it's almost like every quarter we have to recalibrate around, what is the number of categories that we have to be there, what is the number of SKUs we have to launch. and there's a recalibration happening. Growth is accelerating. So there'll be a certain amount of, say, new store additions that we'll continue to do. The old stores continue to mature well, which means that they become profitable over a period of time, and the new stores come in because consumers want a lot more. Right. So I think it's a recalibration of our overall growth trajectory in line with the demonstrated path to the contribution margin that we continue to will demonstrate.
Okay, welcome back. There's 14 minutes to go for the pre-open session to kick off. Now, markets are starting somewhat 2081 on a healthy note, with frontline indices gaining up to 1% or so. This was, of course, after the Muhurat session that we saw on Friday. We spoke with market veterans Ramesh Damani, Samir Arora and Atul Suri, who shared with us the big themes that they are watching out for and betting on indeed in the new Samvat. Listen in.
I think the two themes that we're betting, not necessarily from Samvat to Samvat, but over the next 3 to 5 years. The first theme is this, what I've said previously, the digital public infrastructure. India has leapfrogged a generation of infrastructure from analog to digital, from highways to PAN card issuance. So I think there are maybe half a dozen companies, and they're still trading at fairly modest market caps. Not necessarily price to earnings ratio, but modest caps. And compared to the opportunity that I see ahead for them, these companies are buy. So whether it could be eKYC, it could be PAN, it could be Aadhaar, or ONDC, enormous opportunities in front of these companies. I think some of these companies will prove to be great winners over the next 3 to 5 years. So I certainly would invest in them, but not for 1 year, but over 3 to 5 years. The other sector that surprised me myself, which I have bought, is the pharma space. And we're all familiar with the Dr. Reddy's and the DVs of the world, which are outstanding leading companies in this sector. But we've looked at the smaller mid-cap companies which are developing intellectual property from things like obesity vaccines, dengue vaccines, obesity pills, dengue vaccines, antibiotics, new range of antibiotics. I think there are a lot of rich pickings surprisingly in that sector, because for the first time these Indian companies are doing genuine, serious intellectual property. I think the market will start recognizing and rewarding them over the next 3 months. So marginally, wherever I put the money for the things that I've sold, I put it in DPI and I put it into the pharma space.
If you look at last 3-year returns, Nifty is up less than 12% per annum. You can do it from today back 3 years, or maybe 12 point something. And the 500 is up 15 point something per annum for 3 years. In those 3 years, 4 years of 2004 to 7, the 500 index was up something like 40% per annum for 3-4 years. So this bull run is not like that. But the one thing that has spoiled it a little bit is that the results of this quarter are pretty mediocre. And therefore, I think, depends on what you call a bull run. We call a bull run as somewhere in the range of our history, which is mid-teen, more than debt, more than other things, but you're not going to make 20-25% with these kind of results.
There is no sector or theme that is absolute clear-cut winners. What you're seeing is in every sector, there are going to be winners and losers. So I do feel for the next few months, things may be a little more stock specific. But beyond that, I feel that the government, the country's macros are fantastic. As I said, the government has a lot of bullets. The bullets have been retained. They've not been fired. And I do think that the government will take action to revive the flagging demand and the economy. And I do think that maybe towards the second half of the year, the market would really do a big pullback. So that's my sense. Going to be a little mixed, more stock specific in the next few months. But the second half of the year, I feel, would be much, much better at an index level.
Okay, let's get to our technical experts who joined in on the show. Mitesh as well as Sudarshan join in. Good morning, gentlemen, and hope the weekend was good. Happy New Year to you as well as your family. Well, let's take stock of markets. Mitesh, you go first. The GIFT Nifty suggesting a 60-65 point pullback. What's your view? Would you look to buy into the dip, or do you think that things will be far too volatile? You'd rather not trade the index?
No. Good morning, Nigel. Seasons and New Year wishes to you and the entire CNBC family. I think, the Nifty has clearly defined zone of two levels. On the upside is 24,500 and then 24,800. And on the downside is about 24, 170, 150 area, where in the last 3-4 sessions, we have seen the intraday low being made around these levels. The overall structure is weak, but also is the fact that this 24, 170 is now emerging as a strong support pivot. There's a trendline support there as well. So the way to approach the market is that you go short if it breaks 24, 150, or you go short around 24, 500 and take a 50, 70 point kind of a stop loss. Unless until you see a weekly, some kind of a strong reversal on the hourly and the 2-hourly charts, I won't be, inclined to take long positions. So for the time being, the bias is slightly negative, but around 24, 150, 170, if the decline again stops, then you might get a 300-400 point kind of a bounce back, and you might want to take a long position with a very tight stop of about 50 points.
Got it. All right. So 24,100, that could be a level where you want to take a bit of a buy call, but otherwise, for the time being, staying out of it. Sudarshan, what about you?
Yeah, good morning. See, the Nifty is now in a trading range for the last 6 days, 24,000 approximately and 24,500. And today we are likely to open right in the middle of this range. Now, once we are in a range, well-defined range, and we are not on the boundaries, but in the middle of it, there is no trade. So I would suggest that it's best to avoid the Nifty and the Bank Nifty till a much clearer picture comes. Remember, last time, 2 weeks ago, the Nifty went inside a range and eventually broke down from it. So we don't want to find out where it goes till it actually decides. My view would be focus on stocks, just let the index be.
Okay. Gentlemen, good morning. Mitesh, what would your trades be? Stock specific?
I have a mix of buys and sells, and technology still, after that decline which happened in the last week, still looks like could possibly see slightly lower levels. So Tech Mahindra is a sell with a stop at 1621 for targets of 1560. Disclaimer that we have some put spreads on the bearish side, so there's vested interest. HCL Tech is a sell with a stop at 1780 for targets of 1720. A buy on ICICI Bank on a mild decline, say around 1282.83 with a stop below 1263 for targets of 1320. And a buy on Bank of Baroda. It's a conditional buy. I would want to see the stop price get past 255, and then take a buy position with a stop below 249 for a target of 270.
All right, Mitesh, got that. Thank you for it. Sudarshan, over to you. What about individual stock level action? What would you go with today?
Well, I would go with an all-buy list because in a trading range market, the larger trend is still up, and we are in some kind of an oversold area. So stocks can be considered for buying, starting with Chambal Fertilizers, considered buying with a stop under 470. Cipla, which had a big gap up, and the chances are that the uptrend that started due to the gap will be sustained. Buy with a stop under 1520. Coromandel, again, there is a theme apparently going on in fertilizers, which is reflecting in the charts. Buy that with a stop under 1640. And finally, Escorts is a buy with a stop under 3610. So there are a lot of mid caps which are now giving signs of life.
Okay, all right, got it. Thanks, gentlemen, very much for that. We'll come back to you in a bit as we start, moving towards market opening. Right now, a quick break. We'll be back with the pre-opening trades, and Abhishek Kumar of JM Financial Institutional Securities will join in. IT stocks, remember, on Thursday were under heavy selling pressure because of some concerns in terms of global majors like Capgemini. So what lies ahead? We'll discuss this with him in just a bit. Welcome back. So the cues overall have been all right. I mean, Asian markets have been largely in a shade of green, and in terms of individual stock action as well. I mean, our list had more green than red this morning in terms of the stocks to watch. Let's go back and take some more comments from Prakash before we go on. Prakash, I don't know if you managed to hear that conversation that we had with Paras Defense. I mean, the company is sounding very, very optimistic. Numbers have been showing up as well. Now, defense was a great theme till we got into the midst of this October correction. I don't know. Do you see it coming back anytime soon? If not defense, if you have sort of widened that to other PSUs, would you look at anything today? For instance, some railway stocks are reporting today. We'll hear from IRCTC and IRFC. The numbers are today.
You know, Surabhi, what happens is when smart money pulls out of these high-valued sectors or themes, it starts looking for value in other sectors and themes. I doubt if defenses come back to a stage where it offers value again. There could be growth, there could be, and hence there could be momentum at some later stage. So to answer your question specifically, I don't think railways and defense coming back so distinctly so soon. It could probably happen only middle of next year when the earnings start justifying that. Because Paras, for instance, I mean, with the 87, 88 crore quarterly run rate, it could do well in the next 2 quarters, but still, end of the day, you just have about 101 P multiple. So that's quite stretched. I would look at things much later. The rotation will get you much of, you know, what Mr. Damani mentioned. I think some of the names like Protean, governance and all of that are so promising. He didn't name it, but all the businesses that he described are residing in that name. Look at some of those names, NPST. These are names that you would look at from the next wave of growth much more safely as compared to defense.
Okay, all right. Prakash, before we let you go, I want to understand what's your view on Welspun Corp. The stock went very, very close to around 800 rupees, and then it came down to around 700. It's been in a bit of a range, but earlier, you know, around an hour or so ago, they won an order of around 1,300 crores. That builds on to another 2,400 crores that they won in the United States just a month or so ago. So now United States business that wasn't firing for them is going to look blockbuster in FY26. What's the view on the stock?
No, I think you're right. You know, I just read about this new order that came in the morning. But, you know, would you really wait for the US tariff, potential tariff, you know, revision announcement after the presidential election outcome is known and then buy it or not? That's the question. But their order book, as you rightly said, is very clearly in place. And the worry is now only beyond FY26 what goes through. So from that perspective, there is some room for growth. The price hasn't adjusted to this new reality or this new salience. You could probably see at least a 15-20% kind of this thing. It's a great stock to add on dips. The management also has envisioned a huge expansion for all its businesses, including Wellcop. So I think it's quite positive. If you're okay with the run-up that's happened in the last 1 year, don't look at that. Look at what could happen going forward, and it definitely seems to be a market outperform.
Okay, all right. Got that, Prakash. Thanks very much for that. I think we also will have Chandan Taparia joining us in the next couple of minutes. The pre-open rates are also kicking in. Let's see. I mean, right now we've got a bit of a red gash, but it's not even a minute. So we'll wait for the pre-open to settle. Chandan, hi. Festive greetings to you. Hope you had a great Diwali weekend. Tell us, how do you look at the market setup now, and what are the trades for today?
Good morning, Surabhi. Thanks for having me. Yeah, we really enjoyed Diwali, and my extended weekend is still going on. And wishing everyone again a happy new Samvat, new year. So talking about market, it remained range bound. Nifty has got stuck in a range between 24,100 to 24,500 zone from last 7 trading session. We witnessed some profit booking on Thursday, but on Murat Day, it witnessed some recovery of 100 points and remained range bound. But still, we are in a range where supports are intact, but multiple hurdles are visible in the market. If I come with the weekly chart, I'm getting the sense of lower top, lower bottom. But on the daily chart, some sort of support-based buying is seen in the market. Looking at the data internal, we have seen a spike in India weeks, but at the same time, your put-call ratio is rising. So somehow getting the sense of range-bound bias between 24,100 to 24,500 zone. For the day point of view, Nifty needs to hold about 24,250 to witness some recovery to higher band of the trading range. If 24,500 is surpassed, then short-term bottom could be placed in the market as of now. Looking at the Bank Nifty index, here we have seen some recovery on 3-4 days back, but now the range bound bias is clearly visible. Supports are intact, but upside is being kept. So 51,250 to 52,250 is broader 1,000-point range for Bank Nifty, and it requires a decisive range breakout to commence the next leg of rally. Now, looking at the stock wise, we believe that selective stocks can do well in such kind of market scenario. First, it is buy on City Union Bank, a long consolidation breakout, holding well from last 2 weeks. Stock is inching upwards with high top, high bottom. Rollovers were better, which indicates further momentum could be there. Even after the profit booking in the broader market, the stock is holding well, which clearly indicates a rally towards 186. One can buy with support of 174. Second trading idea, there is buy on MFSL, Max Financial Services Limited. MFSL has seen a positive price pattern similar to a pollen flag on the daily chart. Strongest sector, positive price pattern indicates up move could be there. We have seen some build-up of long position, so one can buy with support of 1260 for a target till 1340 level. Last trading idea, there is buy on Coromandel. Coromandel has surpassed his falling supply trend line on weekly chart. It has seen a breakout from his falling channel and turning upwards. We are expecting some short covering. Declining volatility of the counter also indicates some surge, so one can buy with support of 1660 and Coromandel can head towards 1760 marks.
Okay, all right. Chandan, good speaking with you and good getting that perspective as always. Thank you very much for joining us here on CNBC TV18. Chandan Taparia there with some specific trades coming through. The pre-open is kicked off, about 38 points, 20 points, 25 points. So, I mean, trying to find a level, 24,335 or so is where it is trading at right now. IT services stocks all sold off on Thursday sharply. And then on Friday during the Mahurat session, we ended barely, the IT index ended barely in the green. Capgemini cut their revenue estimate for the year. And that is basically, that caused that big reaction on Thursday. Abhishek Kumar is IT research analyst at JM Financial Institutional Securities is with us. Abhishek, good morning. Good to have you with us here. Thank you for your time. Just your thoughts on the reaction that we saw. Was it, what does it mean for the Capgemini outlook mean for IT companies? And what does it do to any hopes of revival?
Yeah, hi. Good morning and thanks for having me here first. So I think Capgemini's guidance cut was largely because of the slowdown that they are seeing in European market. That is something that has been flagged off by Indian IT services players as well. But we need to keep in mind that Capgemini has much higher exposure to Europe and France in general, which is witnessing a slowdown. So I wouldn't read too much from Capgemini's guidance cut for India IT services players. Even Capgemini and a day after Cognizant, right, they said that spend patterns are improving, especially in US and BFSI, and which is a common theme in terms of commentary across players. And I think that is a slightly, better gauge of how the demand will shape up, in FY26.
By the way, those are numbers coming in from Bajaj Auto, and interestingly, they've actually missed the mark slightly. Very, very flat trends for the month of October. This total sales growth has been just about, I think, 1.5%. So pretty flat. 4.79 versus our poll, which was expecting 4.89 lakh units to be sold. We'll, of course, be talking to the company as well as we go forward, try and get an assessment. They've kind of flagged off some of these demand concerns even earlier. Though one would wonder, one needs to look at the details, because some of the other companies like Hero, for instance, they've had a very, very strong October. Hero's sales are up about 18%, TVS is up about 14%. So we'll try and figure out if there's been some sort of pushback of demand into the coming perhaps months as well. So that's Hero MotoCorp. But back to the conversation on IT and what the read-through from Capgemini really means for us. Now, Abhishek, we've seen a pretty decent move on a lot of IT stocks even after the Q2 numbers, though I don't think any of the larger companies are screaming from the rooftops and are saying that, hey, we're getting back to double-digit growth. So now in terms of expectations on earnings and what the stocks have done, what would your advice be on large cap IT?
Yeah, so you're right. After the results, we didn't see much earning upgrades for large caps. We saw for a couple of mid caps, but for large caps, earnings were largely flattish, and a negative reaction after no earning upgrade tells us that multiple re-rating that we were seeing for past 3 to 6 months is kind of has run its course, and for incremental movement in the stocks, we need earning upgrades to come through. So that's the setup. Having said that, I think, I believe we are in a better position now getting into calendar year 25 versus where we were a year back or at the same time last year. And I say it because, the uncertainty around rate cut is now behind us. US presidential election outcome will be over by the time budgets are freezed. Clients will have clarity getting into next year. We are already seeing early signs of discretionary spending coming back in banking sector, which generally is a precursor. So while we may not see any triggers in the next 2-3 months, given a seasonally soft Q3, I think the setup for IT budgets, etc., next year definitely looks up. And the recent correction that we have seen in large cap names kind of opens up some upside for people to take position in these stocks.
Okay. Hi, Abhishek. Good morning and good to see you, Ben. Let's wind the conversation down then with your top picks from the sector.
Yeah, so we like Infosys in large cap, followed by Tech Mahindra and Wipro. So that's my picks on the large caps.
Caps. Mid caps.
Mid cap, we like Persistent Systems. It has done very well. We also like Coforge, but our pecking order would be Persistent followed by Coforge.
Got it. Thanks a lot, Abhishek. Appreciate you joining in and giving us inputs on the sector and how you see things shape up. Wishing you a good day ahead. Well, it's 9:10, so let's get Sudarshan back in. Sudarshan, what's your 9:10 call?
Well, consider buying Coromandel with a stop under 1640.
Mitesh, what about you?
I'll go with a buy on BOB if it starts trading about 255.
Okay, all right. Mitesh, I want your view on HDFC Bank. That one seems to have made some support at lower levels, but it's still to cross that 1800 odd mark, which it did earlier this year. What's your view on the stock?
So I'm quite positive. It is clearly outperforming the markets too. I think 1780, 1800 is my first target zone. I think once it clears that, we'll have a bigger rally. But for the timing, that's the trading target. And traders looking to buy into this one should keep a stop below 1710.
Got it. Okay. Thanks a lot for that, Mitesh. We'll come back to you at around 10 a.m. today. But let's focus on a few names. And Sudarshan joins us to tell us more about MCX. Okay. All right. I think we'll go to Sudarshan on MCX in just a bit. For the time being, Vinny joins in to tell us about the news flow on Sun Pharma. Vinny?
Yes, so we have a news flow coming in from Sun Pharma over the weekend where the company said that the district court in New Jersey has actually granted a preliminary injunction which was Insight Corporation had filed against Sun Pharma. This was for the drug Lexelvi. Now, over this drug, they had received an approval from the US FDA just in July 2024. But then since then, there have been some issues coming in, and now this injunction means there's going to be a delay in terms of the drug launch that one is expecting. What brokerages are saying, and specifically Nomura, they have highlighted that, for the revenue from this drug that estimated and priced in around a $10 million sales coming in FY25 from this drug, around 80 million in FY26 and FY27 a $150 million sales from this drug. So over the next 2-3 years, they were expecting around a $200 to $300 million sales for Sun Pharma from this drug. So we will be seeing some bit of an earnings impact coming in on this because of the delay. This drug is mainly used for the treatment of alopecia. Keep an eye out on this one. Sun Pharma is expected to be a bit subdued in trade.
Okay. All right. Thanks a lot for that, Vinny. But let's go to Sudarshan. As promised, he's here to tell us about MCX and also give us a few inputs on Mahindra & Mahindra. Sudarshan?
So first, talking about MCX stock performance, if you check of the last 1 year in 2024, stock has doubled. And if you check since October 2023, when the stock migration was done to TCS platform, stock has almost, it's 3 times. Now, in the last 3 days, stock has been volatile. Now it's down 5% from the record high. So we try to find out if there is any reason of this stock fall in the share price. And the data crunching of last year suggests that this month, that is in the October, average daily turnover growth has slowed down considerably. On YOY basis, October turnover is up 55% versus average growth that company has seen of more than 105% in 2024, that is from January till September. Even on month basis, we saw turnover declining in October. It's down 21%, and it's the biggest decline that company has seen almost, or say, in more than a year. So we'll have to say that if there is a reversal in the trend, or in the month of November, again we'll be seeing the growth company registering of more than 100%. That we'll have to see. Now coming to M&M. So we have a few brokerages that have upgraded the stock, and this has come after the company has reported sales for both the segment, that is auto and tractor, and sales for both the segments have come in higher than estimates. GS Goldman Sachs is a buy call and target is with 3,600 per share. Also, it has added the stock to Asia Pacific conviction list, and it says SUV order backlog and upcoming battery electric vehicles will boost the growth, and farm equipment is entering a phase of improving underlying market dynamics. Kotak Institutional Equities has upgraded the stock to buy and target is with 3,150 per share. It says company will continue to outperform industry growth, and tractor segment is expected to witness uptick during H2 of FY25. Even on the valuation front, it finds stock trading at an attractive valuation.
Oh yeah, M&M has been the sort of the North Star, right? The shining star for the auto sector. Sudarshan, just very quickly, I don't know if you had a chance to look at the Bajaj Auto numbers that were just flashing. I mean, an 8% drop in domestic sales. Was this kind of a lackluster performance expected? Because the other two-wheeler guys have all done really well, right?
Total sales have come in below estimates, and the concern is domestic. Now, if you just check the Hero's commentary, what did they say? They said that the 100cc segment and 125cc segment for them have done well. And now just go back to Bajaj Auto's comment after Q2 earnings. What did they say? In this segment, that is 100 and 125cc segment, company has been losing market share. So I'm just assuming that this might be one of the reasons that Bajaj Auto's total sales are coming below estimates.
Yeah, I think that's a very valid point. We'll keep that in mind, that maybe it's the entry-level bikes that have done really well in rural, which is why Hero's done better than Bajaj, at least in October.
Yeah, but I mean, if you compare it by margins, Bajaj margins
are
absolutely
head and shoulders higher.
So maybe play in the slightly higher, not slightly, but the higher priced and sort of more premium bikes in that sense. So that's Bajaj in the pre-open. Let's have Hero up as well. Take a look at what Hero is starting at. And then we'll look at Mahindra & Mahindra. Hero is starting about 2% higher. So, I mean, it's a small pop, nothing major. 51.27. Mahindra & Mahindra. Of course, M&M has been guiding for better growth in the tractor segment. So, keep that in mind. Stock starting about 0.5% lower, 2,800 or so. Look at MCX as well, which Sudarshan was pointing to. MCX, of course, sold off, very sharply. I think it was Thursday session when it came off very sharply. And there were talks that maybe there'd be a large block and this buzz, but sort of, course, highlighting the volumes as well. Well, you got the market, which is starting slightly lower. Nifty is down about 0.25%, 24,260. Nifty Bank is starting at about 51,600. It's down about 0.1%. The Sensex is down about 0.25%. Mid-cap index is down about 1/3%. So that's where we are starting at. IT index is 0.6 lower. The IT index on Thursday sold off. I think it ended about 2.5-3% lower. Friday was just about in the green. The heat map coming into view on the Nifty, the 50 stocks, it's what, 35 stocks lower and about 15 stocks which are starting in the green. So overwhelmingly, it's down. You're basically just reversing, that 1 hour 80-90 point gain that we saw during the Muhurat session with this near 0.5% cut on the Nifty so far. But let's get to stocks.
It's all about autos and extreme sort of, divergent moves playing out. Look at Bajaj Auto. The stock is down 2.5% this morning. And even if you look at the decline from the peak, Bajaj Auto is now the stock that has fallen. The third, stock which has fallen the most from the peak. First is IndusInd Bank, second is Tata Motors, and then there's Bajaj Auto. The cut from the top is now almost 25% from Bajaj Auto. So that's been the kind of price adjustment that's been happening. On the flip side, you have Mahindra & Mahindra. The market is continuing to reward the fact that they're building on those gains, building on the good performance. So 3.5% up on Mahindra & Mahindra. There's some buying on Eicher Motors as well. So that's how it's playing out. There's some buying on Cipla, about 2.5% higher. The good run from last week is continuing for Cipla. But again, if I flip it to a Sun Pharma is the poorest performing stock on the Nifty right now because of that legal issue in the US. They won't be able to launch one of the key drugs that was anticipated, and there could be a hit of about 2% I think this year to the estimates, and more than that for next year as well. So Sun Pharma, Bajaj Auto are the two weak names. The Nifty is now down 150 points. Infosys, Reliance, BEL, BPCL, there's L&T as well. Lots of large cap stocks looking at selling. The Bank Nifty is down about 0.5%. So there's Axis Bank as well on the way down. But I think Reliance and Infosys are the two big boys along with L&T. They're really putting in the pressure on the bulls this morning. We don't have much leadership to speak of as of now on the upside, apart from names like M&M and Cipla. There's a bit of buying on HCL Tech and Tech Mahindra, but nothing more beyond that. So it's turning out to be a tough morning. The motor chair was short-lived. And again, we're dealing with a 150-point cut straight away at the start.
Well, that's right, Surbhi. A few stocks that were doing well in the last few days that have come in for selling. Prudent Corp, that's down, I think, close to 8-9%. So the stock had done well, actually, in the past week. That's come in for some profit-taking. Poly Medicure, I think the stock did a 25% run in the past week itself, post its results. But that one as well is lower in trade, and volumes are fairly decent on that one. Lokesh Machines, that's another one that's down close to around 6.5%. So volume's not very high on that one, but that stock is lower. KEC International as well, the stock is down close to around 5% as we speak. So that stock has taken a bit of a hit. Bajaj Hindustan is another stock that's lower in trade. Zomato among the top volume movers. Zomato as well as Suzlon, both of them have come in for some profit taking. So keep an eye out on both those two stocks. Vare Energy as well, it ran quite well post its listing. Listed at around the 2,400 mark. It went down to around 2,250 odd. And from there headed towards 3,000 rupees. But today it's pulled back close to around 100 points. What's doing well? Well, one stock that's standing out is Azad Engineers. They won a big order. We'll get the management in just a bit. That stock, in fact, is running away. It's up more than 10% in today's trading session. And Gillette continues to do well. We had pointed out the stock actually a couple of weeks ago on Bazaar itself that it had done nothing from the end of 2019 onwards. Then it was finding its own. Numbers were quite good. That stock, in fact, is up close to around 5% as we speak. So very few stocks actually gaining. There are only 500 stocks that are advancing, close to around 1,700 stocks that are declining. Prashant.
170 lower on the Nifty now. So 24,130 is where the market is trading at. So this is giving back that Mahurat session gains, but also some more after that. So, that's the picture up on your screen, about 0.7% lower is where you're starting. Lots of names, and I can sort of dive into it in just a bit from now. But, let me count what is easier to count, which is stuff which is higher. So you've got Lodha, which is up 6%. That is Macrotech. It's a big mover on large volumes. Max Healthcare, the hospital company, that is up about 3%. It's done very well. Last 5 days, it's come up from lows of about 880 to 1,040. There is CAMS, which is up about 3%. Another one of those names which has done very well was about 4,200 4 days back, at about 4,700 now. UTI AMC, again, 4 days back, stock was at about 1,170. Stocks at about almost 1,400. So these are all sort of UTI AMC, of course, is also the cheapest AMC name. The other one, of course, is Birla Asset Management Company. But, I mean, it's not moving. UTI is the one which is moving. Jyoti Structures, Reddington, Rainbow Hospitals has had a sharp move. Rainbow has moved from 1,300 to 1,600. What, 7 or 8 days flat. So those are some of the moves that we are seeing at this point. Almost 200 down now, 24,100 is where we stand at. Devina Mehra is our market master of the day, founder and chairperson, MD of First Global. She's with us. Devina, it's always a pleasure. Great to have you with us here. Season's greetings, and wishing you and everyone at your end a very happy Diwali and Happy New Year. Just a quick word, Devina, on US elections, and do you think that is the one, and how will it play out? A simple question for our viewers, what they'd want to know is, who's better? Is it Trump or is it Harris for Indian equities?
Good morning, Prashant, and I have happy new summer to you as well as to the viewers and everybody in the CNBC team. It is very hard to say what would be better for Indian equities. For one thing, I mean, the whole impact on US equities itself is not that easy to foresee, and this is like a few steps removed as far as their political stance on for example, the Israel war. The Democrats have been just as of hardliner and supportive of Israel as Trump. So it's hard to see, though. I mean, whatever be the other reservations on Trump, I must say the last time he was president, he was actually fairly good for the business and the economy. I mean, he did do a lot of good things. However, distasteful many of his other things are.
Okay, well, I think we'll have the answers. We just have to, it's the cliffhanger. The wait is another 2 days, and then we'll finally know, and then markets can decide what's good or not and make their peace with it. But Devina, the bigger issue is this fall here in India, and it's relentless. Even this morning, when we typically don't discuss markets here and now with our guests at this hour, but it's just an illustration. It's a 200-point fall suddenly with no fresh negative triggers. Now, we all thought it's China first, but the Chinese market is down. Hong Kong is down 10% in the last 1 month. Mainland China is down 6-7%. So this whole exodus of FPI money, I mean, what have you made of it? It's clearly not over. And the market's now coming down to very critical levels. Technical analysts are saying maybe a test of the 200 DMA will happen. What have you made of the October correction in India, which is now moving into November?
Okay, two things. First, of course, I'll sound like a broken record that there is really no correlation between the FPI buying or selling and the market movements over, even when the domestic mutual fund industry was not so big, or even when the retail participation was not so large. So looking at what's happening in China and therefore what is happening in FPI and therefore what will happen to India is totally the wrong lens to look at it. As far as the correction is concerned, this is something that I'd been anticipating for a while. So if you go back to my earlier interviews, I have been saying that, the correction is very much on the cards. It will happen. Only I have been a little nuanced at like 2 tiers, which is the large cap mainstream stocks and indices. While there will be a correction, I have not been worried that it would be a very sustained crash. And the reason for that is, of course, that 2010 to 20, the returns were very much below the trend line. So you got basically fixed deposit returns for that whole decade. And that created the room for the bull run. We are still not much above the trend line. In fact, we are not even at the trend line. So given that the risk of a sustained crash is limited there, but there have been enough areas in the market which have been very frothy, which again, I have been talking about in my previous interviews also. And that's where you need to be careful, whether it was this IPO frenzy or, there have been phases of this PSU defense, and all kinds of shady small and micro caps. I mean, there are, of course, good companies there as well. But once this kind of froth comes, then the good, bad, and the ugly, everything goes up. And as the past history shows, many of those stocks never make a comeback. So, that's something you must remember. So to recap, we are not that worried on the larger mainstream indices, while there might be interim pain. But there are enough areas where things will never come back.
By the way, I just want to mention here that the levels that we are quoting at right now, we're very quickly coming to the lows. I mean, that lower end of this range that we were talking about, Prashant highlighted that. I was also mentioning that. Yeah, I mean, we're getting very close to testing those levels now, Nigel.
Indeed. We're moving towards recent lows. Actually, the 24,000 mark, that's the round number. That's the number that you do want to break today. So for the time being, though, that it appears the gates opened out, and in fact, the selling just started, particularly in the broader markets. Now we have only around 450 stocks that are, advancing. Well, Devina, good morning and good to see you win as always. Trump will be good, I guess, for the US economy. From an India perspective, who's better?
That's, as I said, speculative. And often, in many of these news-driven things, even the first reaction of the market is not what it eventually is. I have been reading this book called Business Adventures, which talks about incidents which happened in 1960s and 1930s. And so often it happens that, market goes one way every day. The media finds reasons why it happened, and then the next day it goes another way. And then there are enough reasons on that side also. I think this is, and as I said, in any case, the FPI flows do not determine Indian market direction. But we were talking about how much the market is down. I was looking at, you were talking about how much the market is down, and I was looking at past 16, 20 years data. And all of that shows that almost every year.
I think
Devina's network. We lost you there, Devina. If you can hear us, but stay with us. We're just going to try and reconnect that connection in just a bit, and we'll come back to you. 500 stocks are higher, and you've got about 1,900 stocks which are lower. That's a steep one-way kind of a decline that you have on your hands at this point. PVR Inox is down 3%. That's at about 1530. It's down sharply. You've got PG Electroplast, which is down 3%. Just sort of highlighting some single stocks. Supreme Industries is down 3.5%. All on decent-sized volumes for this point in the day. Kirloskar Brothers is down 3%. Look at Star Health. I think Star is down 5%. It had reported numbers on Thursday, was it, or Friday after market hours last week. Stock had seen a correction, but that's a pronounced one coming in this morning as well. I think PCBL, Polymed, some of these names we've highlighted. Vari Energy, big mover on Thursday and then on Friday as well. And that is coming off about 4.5%, 5%. I think Devina is back with us. Devina, please, you were saying you were comparing this correction to the previous ones. Go on.
Yeah, so I was looking at the 16-20-year data, and it was nearly every year you have a double-digit correction. I think there are only a couple of years that are exceptions to that. So it is not so, while you are going through it, it appears very, very massive, but it's not really so. We all know in theory that equity returns are volatile, but when you are living through it, it always seems like the end of the world. But it isn't. If you look at just the move that the market has made in this financial year itself, and we know because we were hedged going into the financial year, we were hedged going into the election results. But now, while we hold some of those hedges still, they are so far away from today's prices that they're not very relevant anymore. So, just don't lose perspective. But of course, there's been this list of stocks that's been circulating on social media even last week, showing how many stocks are down 30, 40, 50% and even more. And that always happens. That the frothy areas of the market, as I said, many stocks never make a comeback. So more than half the stocks that have ever been listed in the Indian market, you can say, have gone to zero. So don't forget that.
No, I think the market's a great teacher. It always tends to remind when you're, in that exuberance mode. And I think we're in that period now. By the way, I just want to point out that the cut on Bajaj Auto is now 4.5%. It has become one of the weakest stocks in the Nifty, but it's not alone. Even Hero Moto, which relatively speaking, if you just go by the numbers, Hero's delivered better sales growth in October than Bajaj, but even Hero's turned. It started positive, and look at the selling come through very, very quickly on that stock. And then the crunching issue for the market really is Reliance. Reliance is down to 2.5%. I think we'll have Mr. Rakesh Sharma join us in the next couple of minutes. Before we... I think he is ready. Okay, Mr. Sharma, good morning. We will let Devina go on that note. Devina, thank you so much for being with us. Great to have your perspective, and we look forward to talking again soon. But it's a market that's falling rapidly. We have a lot of stocks to address as well, so we'll quickly move on now. Mr. Sharma is with us. Sir, first of all, Diwali greetings to you, your team, and all at home. And we wish you a wonderful new Samvat as well. Having said that, now I come to the performance. And I remember that, this was something that you had indicated in our earlier conversations as well. But the market is wondering why so much pressure on domestic sales while exports are picking up. What really happened in October?
Well, good morning and happy Diwali to all of you. Actually, it has been a smashing festive. Though it started a little bit tentatively before the Dussehra, but by the time festive actually closed, it's been, I think, the best ever festive after COVID. At least I can say that from our point of view, that our retails have been the highest ever in this period. And the right frame of reference actually is to compare like for like. It is to compare the festive of this year, which is about 30 days. There's a little bit of a tail of festive still going on in the north. But the 3rd October to 31st October, with a similar period last year, which is 15th October to 10th or 12th November, something like that, because that is the right frame. And if we compare from that frame, then our sales have been, overall sales has been double digit. Our area of focus, which is the top half of the industry, which is the 125cc plus segment, has grown upwards of 20%. We have sold over 200,000 pulsars, which is like way, way above the last high which we had achieved. And even three-wheelers has had a smashing month with about 56,000 units of retail. And I think the previous festive was 45 or 46,000. So a very big difference. The EV business has soared. We've had tremendous sales in the two-wheeler side, touching almost 36,000. A lot of places, units, a lot of places are facing stock outs right now. There's a little bit of stock imbalance. The EV three-wheelers is over 7,000 units, which was, doing about 4,500, 5,000. So when we look at retails, actually, it's rather good news. But if you look at just October to October, it doesn't suggest that, because people are, and particularly if you look at the wholesale sales to the dealers, because October, whenever the festive falls within the month, October then becomes, at least for us, a destocking month, and so will November be. So we look to decode the performance and how we are faring. We look at like-to-like comparison on a retail basis.
Okay, all right. Hi, Mr. Sharma. Good morning and good to see you, Ben. We've taken that clarification on board. So you're telling us that the numbers, the domestic numbers in particular, let's take that piece out of the way. The two-wheeler and three-wheelers, because of the difference in the retail and wholesalers. Otherwise, you're saying demand is strong. You have hit various records. So that will reflect in November as well, right? You'll see some part of that good work that will reflect in November. It's not as bad as it's looking at in an absolute number. Is that correct?
No, at a retail level, it is a very, very strong performance. In fact, as we were entering the exiting quarter two, even as an industry where we had thought that industry would sort of clock 8% in this financial year, 6 to 8% is what we had said, it was trailing at about 5%. But now with this super performance in festive, and of course, there would be some bit of advancement of sales from November, December, because nowadays the festive has become, the peaks have become sharper. So, okay. But I think this has bolstered the industry performance, and I think the outlook then becomes positive at, this back to the levels which we were anticipating, about 8%. And in that, the construct is that the top half is outpacing rest of the industry by at least 30 to 50%, So, so it's actually good news that what it is indicating is that people had held back their purchases as they were entering the festive zone in September and then in October, and it all came through in the last 10, 12 days of October. So it suggests that the industry is in good shape.
Sir, we are hearing you and trying to really understand. So I think one point is very clear. You're saying that the retail numbers have been very good. Wholesale has a destocking issue because that, the channel needs to be cleared up. on retail per se, just so that we have the numbers, could you give us the retail growth for the month of October?
Again, I won't look at the month of October, because if I give you the retail numbers for October, they are in the 30% range, because it's an unfair comparison. Because in this October, both the festives, Dussehra and Diwali, occurred in October, whereas last year, only Dussehra was there. So the right frame of reference is to look at the festive of this year, which is 2nd October to 31st, and 15th to 12th November, which is then covers both Dussehra and Diwali. If I take that frame of reference, then the area of our focus has grown upwards of 20% in retail terms, which is the 125cc plus segment. EV two-wheelers is a triple-digit growth. It's almost doubled, more than doubled. Retails have more than doubled over the last festive. And three-wheelers has also, grown at about 13-14%.
So that's helpful, sir. Again, the other number that we'll kind of hold on to is you're saying that 125cc and above, which has obviously been Bajaj's stated, target market, that is where you have grown 20% in retail terms, if we sort of look at the like-to-like festive season. So that's another clue we hold on to. But now let me ask you about the 125cc and below, which I know is not your core target, but I think that's also a segment where you were looking at a lot of potential disruption with launches like the Freedom 125, right? So just take us through what's happening in the 125cc area as well, and what your projections would be in that side of the market, the entry-level segment. What should we expect in the months to come?
So I think, Subi, you're referring to the 125cc, the below 125cc, that is 110cc, that is what it is there. There also we have grown, but we've grown in single digit. Our strategy has been through product and innovation to upgrade the 110cc buyer, particularly the one who is, at the upper end of the 110cc. And that we have been relentlessly pursuing through various product interventions. And the biggest disruption was the Bajaj Freedom, which is 125cc. But it is really targeted not just at the 125cc, but at also the 110cc. It is targeted at all those customers. They may be residing in the scooter segment or in the 100cc segment or the 125cc segment, who are rather more sensitive to fuel economy. And because, Bajaj Freedom halves the cost of operations. And it has had a great month. We have retailed about 17,000 units. We have dispatched about 30,000 units, and we are in a sort of a stock out situation. In many cities, for example, Mumbai and Delhi, where the penetration of the CNG network is quite good, we are already finding that within the first month or so, because really September was the first month where we had stocks in the pipeline. And we are already finding that it is commanding a share of up to 9 to 12% in the 125cc segment. So we are very hopeful that this will continue as we continue to sort of get into more and more territories which have got CNG network.
All right, Mr. Sharma, very quickly, on the EV two-wheeler part, you had indicated the way you'll have grown your market share, which is good. It's 20-22% odd. Could you tell us what is your current updated number? Because it appears y'all and TVS are going pretty much neck to neck, though y'all have gained market share big time, in the last 9-10 months or so.
That's right. When we opened the year, it was about 11.5%. We are at about 20% plus. And we've had and that is basis Vahan. But as you can imagine, the crush of retails has been so high that everything is not getting reflected in Vahan. But that is the case, I'm sure, for everyone. We have a very strong momentum in our retails. And we are making, in another 2 weeks or 3 weeks, we would be introducing a best-in-class product, which would be taking aim at a segment where we are lagging in share. And when we will, hopefully, with that and with subsequent introductions, which will unfold over December and January, we will have a very, very potent portfolio. And I think we should continue this trajectory of sales performance and keep improving our position.
All right, so you're in second place right now. You're holding on to that.
No, if I just look at Vahan, I would say it's a very close third, because I think it's just about
with TVS.
100 units, which is separating the number 2 and number 3.
All right. You know, the domestic numbers are still looking a little bit muddled, though you're sounding very, very confident and optimistic. So we'll take that, in the month ahead as well. But exports is definitely looking good. And that's the bright spot in these numbers. Exports are getting better. What about Nigeria? Earlier it was 15, 20,000, then it moved from 20, 25,000 odd. For the last month, what was the number from coming out of Nigeria?
Yeah, like we've been saying that exports is on a steady improvement path. Nigeria last month jumped up to about 33,000 retails, which is, you rightly recall that it was 25,000 in September. So that's very good. It's a very good sign. But Latin America has done extremely well with the 20% growth. We've also recorded, in the last 12 to 18 months period, I would say the highest retail numbers in places like Bangladesh, Philippines, and a host of other countries. So all these things will continue to drive the exports business smartly on the recovery path. But, one point which I would like to make on exports is if you take the year-to-date growth, it's 9% in volume terms, but it's actually 15% in revenue terms. And that captures the fact that the mix led by, markets in Latin America and parts of Europe and Asia have started to really do much better. So really, when we look at the revenue growth and obviously the EBITDA growth, then it's much, much higher than the volume growth.
Okay, all right, Mr. Sharma, we leave it there. So good luck. Thank you very much for sort of putting all of those numbers, both local and exports, in perspective for us. We wish you all the best of luck. Thank you. We'll take a quick commercial break here. We're going to come back. 250 points lower on the Nifty, by the way. We'll have the management of Azad Engineering join us to talk about the 700 crore contract with Mitsubishi Heavy Industries. Stay tuned. That's coming up.
Welcome back. The Nifty is under pressure and the broader markets as well are seeing selling. But I'll tell you what, one stock that's bucking the trend is Azad Engineering. It's surging in today's trading session. The company has signed a long-term contract worth around 700 crore rupees with Mitsubishi Heavy Industries to supply highly engineered and complex rotating and stationary airfoils for advanced gas and thermal power turbine engines. We have with us Mr. Vishnu Malpani, the whole-time director at Azad Engineering, who joins us on the show. Hi, Vishnu. Good morning and congratulations. This order seems to be a big one and the street has definitely taken note of it. Give us a few details on this. What's the quarterly, what's the monthly execution, if you could tell us? How would revenue recognition be of this particular order, the execution timeline and margins you'll enjoy on this? So timelines as well as margins. Please go ahead.
Sure. So good morning. First of all, thanks for having me on the show. I think our journey with Mitsubishi started back in the year 2012. And, Azad, since being in the manufacturing of highly engineered and critical parts for mission and life critical components, the entry barriers in this industry to work with a Japanese client like Mitsubishi took us several years. We started with the qualification of one part and, slowly engine by engine, part by part, we've come to a point today where, the Japanese customer today trusts us with their, with their contracts, with their part. So today we've reached that point in our journey with them where we should probably be able to scale up our business very, very quickly. And if you remember, I don't know if the street took a note of it or you took a note of it, in 2020, 12 is when we started. 2022, Mitsubishi laid a foundation stone for a dedicated plant for them. So this is an attempt for from them to increase our wallet share with them. So we are a growth supplier with them. Today we hold about 1%. We are slowly going to increase it to 1 to 2 to 5% slowly. And this contract is a testament to them blocking our capacity and then blocking our capacity for the future, in the coming years. So this is going to really help. And the execution period of this is going to be, in about 2 quarters, 1 or 2 quarters, we should have the plant up. And 3 to 4 quarters onwards, we should start generating the revenue out of it.
And
so
margins?
That's where. So the margins are going to be pretty consistent with our existing, so we are going to have, similar margins, blended margins as a company. So I think that is not going to change. So any order that we take in our business, generally is at a blended margin of 30 to 35% at a company level. So we ensure that is always done. So the margin remains. Yeah.
Got it. Vishnu, hi, good morning and congratulations. I think all of you must be thrilled, right? I mean, as you said, to get to a point where you're able to work with a client like Mitsubishi. So absolutely great news. Just a quick word. This is a long-term contract, which means this becomes a kind of a recurring business for you. And what should we expect?
So this is this is a recurring business, obviously, for us. We are qualifying parts, and today we finished qualification of most of their part numbers, right? And for some of the parts that we are manufacturing for them, I think we are the only supplier outside of Japan. So this is in conjunction to that. So this is going to be a recurring revenue. This is a 5-year contract of 700 crores that we've done. And, so these contracts generally get renewed after a longer period of time, etc., when it comes to the closure. So in terms of, for Mitsubishi today, you should look at it as, Azad is probably the best cost supplier and also in terms of quality. So we are providing those solutions to them. And that is why this contract is more like, tying down our capacity for the next 5 years to be dedicated to them for a single client. So that's.
And after 5 years, you, basically post the execution of this, you kind of look at another one. And there are price escalation clauses, etc. in this, or this is a fixed price?
So these are standard, long-term contracts that happen in the industry. So, so this is a long-term contract and pricing agreement. So this details, the pricing that is going to be there for the next 5 years. So it's
Vishnu, you said that I think right now, in terms of Mitsubishi's supplier base, you are at 1% and you want to go up to 5%, right?
So the aspiration is to grow our wallet share. I think, if you recall any of our previous discussions, we've constantly been talking about how we are targeting an addressable market of $28 to $30 billion. And today, wherever Azad is, we are at about 1.5%, 2%. So our endeavor is to grow our wallet share with each of our customers. And, any player that we compete with globally today has been around for 50, 60 years or probably more. Azad's been there for about, 14, 15 years. So I think it's our constant endeavor to increase our wallet share. And I think this is an opportunity or a testament to what we've been saying. So
no, absolutely. And the markets are taking note of it. The markets are extremely happy with the kind of association that you're making with these global majors. Also, you're getting orders from Honeywell. So just now, give us a breakdown of the order book. How much is now Mitsubishi? How much is Honeywell? And with these kind of big orders coming your way, especially in the last couple of weeks, what is the order book growth that you envisage for this year and next year?
So I think, so our order book has grown significantly since our IPO. If you remember, around the IPO, we were at about 2,000 odd crores. And, if you net off the Honeywell and the, contract with Mitsubishi, we were at about 3,200 crores, roughly. So, this would add another 1,200, 1,300 crores in addition to what we have. So we are looking at about an order book of upwards of 4,000 crores as we speak right now.
And this would be executed over how long? 4,000 crores covers you for how many quarters or years?
These are different contracts put together. Some of them are for 3 years, 5 years, 7 years, and 10 years. So these are long-term contracts from that perspective. Yeah.
Okay. So you're right now at 4,000 crores, and just give us some projections in terms of the pipeline ahead. What is the order book growth this year? And as you're looking at a scale up with a lot of these, MNC giants, what would the order book projection be, say, for even next year?
So I will not be able to comment on a lot of numbers, but I can tell you that we have contracts that are being discussed with customers at an advanced level, and I think you will see a similar growth in our order book that you would have seen so far in the market. So we have the next few months where in a week or so we should be coming up with our results, and we should talk about it in greater detail at that point, I think.
Well, we'll push you for more. Yeah, we'll push you for more numbers at that point of time. But I just want to understand, because I'm looking at your quarterly run rate, you're still going at around 100 crores per quarter. And this order of 700 crores, as you said, you'll start executing it in the next 3 to 4 quarters. So your quarterly run rate will have to go up, right? Do you think this entire 700 crores gets executed over FY26 and FY27? Just want to understand that. I missed that part.
No, so it will be executed over 5 years. So
over 5 years.
So we're building an independent plant for them. We should take about 2 quarters, and then we should ramp our business up with them over 3-4 quarters. So we should start supplying to the new plant. But talking about our quarterly run rate, see, about 4 years ago we were doing about 100 crores per annum, right? So from there, 100 crores a quarter is a big sort of jump in terms of us utilizing building capacity and then utilizing it. I think similar trend is going to be continuing, because we're constantly, like you see, our order book is constantly getting added. So we're also building capacity with the new plant coming in. So
Got it, Vishnu. I understood that point. Over the next 5 years, you'll be executing this entire contract very quickly. We don't want a fixed number for the coming fiscal, but I'm going through an ICICI Securities note, and they are very, very bullish on the company. They are targeting the number. They're saying they're at around 1% of the targeted market. They're expecting you to go to 7 and then to around 10%. But they believe that you will grow by around 25 to 30% consistently over the next 10 years or so, all the way till FY23. Would you believe at current juncture that's on course?
Yeah, at this point, I think we're in the process of finalizing numbers, and in a board meeting, etc. So I would not be able to comment on the short-term or the long-term guidance, but I think give me a week or so and we should be able to talk about this again.
Okay, well, we'll leave it there. Thank you very much for joining us, Vishnu. Appreciate you taking out the time and being here on CNBC-TV18. Thanks indeed. Good luck. Narayana Health is the next management on the program. The hospital recorded an in-line set of second quarter numbers. Revenues came in healthy, but EBITDA margins contracted. International business revenue fell at 19%, largely due to a slowdown in patient volumes from Bangladesh. We have Sandhya J, Group Chief Financial Officer at Narayana Health, now joining us. Sandhya, good morning. Great to have you with us here on the program. Thanks very much for joining us as always. I want to start with exactly that, the international business, international patient volume. Could you talk to us about that 19% drop that you saw? What is the situation in third quarter so far? What is it as a percentage of your overall numbers?
Sure. So first, let us start with the numbers. Our international business last year, same quarter, was about 8%, above 8%, 8.7% actually. That has dropped to 6.6% this year. So we've seen that kind of dip, and that's why you're seeing that 19% year-on-year drop. We haven't seen any significant improvement in terms of the international numbers. One, because there is a visa restraint that people are not able to travel. And second also is that in quarter 3, even otherwise travels are not as robust as they are in other quarters. So we are anticipating that we will continue to see decline in the international business. Having said that, we've always guided that our endeavor is to be able to show growth in the domestic business. And that's where our focus has been. So to that extent, we are very happy that we've been able to report a 13.5% growth in the domestic business, which has been able to offset the impact of the losses that we've taken on the international business.
So what could be the domestic business growth, Sandhya, for the full year then?
We aren't guiding that number, but we can definitely expect in line with the performance that we have delivered so far and improving from here.
This international patient volume drop-off happened in Q2, right? I mean, started in Q2, essentially.
It had started in Q1, but because there were already patients who had come into India, so there we were finishing off the procedures, but further travel had got reduced significantly. So therefore, the full impact we were seeing in Q2, and it is only, I don't think it's going to get better from here, at least in the short term.
Okay, all right. So we'll have to take that on board, that the international patient contribution will perhaps remain under pressure. But let's talk about the domestic business, Sandhya. Give us some color on how occupancies have been and how, whichever metric you look at, average revenue per occupied bed, or I think you look more at revenue per patient, right? I remember that conversation always. So give us some color into how revenue per patient has improved this time.
Sure. So just a little step back to the context of the domestic business. There are like two sides to that performance. One is our flagships were under some pressure in this quarter. One, of course, because of Bangladesh, we already spoke about, but also because Kolkata is a very important portion of our mix, and there was a lot of political tension in Kolkata, and therefore that part of the business was under some amount of stress. So that's one side of the picture. The other side of the picture is the other units, which is the non-flagship units. All of them fortunately performed quite well. In fact, many of them hit their highest ever revenues. In fact, we ourselves as a group have hit our highest ever revenue this quarter. We've crossed 1,400 crores as a milestone. So it's like a little bit of impact from international and from the political situation in Kolkata, but also a lot of improvement in terms of the performance of the rest of the group. So that's just a broad context. In terms of our average revenue per patient, the IP ARPP, it moved to 1,35,000. It was 1,29,000 last quarter, and 1,18,000 the same quarter last year. So that's a healthy 14% YOY and close to 4% quarter-on-quarter growth. In terms of footfall, our total footfall was about 7.7 lakh patients this quarter. Again, that was almost a 9% growth quarter-on-quarter. So again, a good growth in footfall. Having said that, this number is moderated because of the impact on the flagships.
Just rechecking the number, your average revenue per patient stood at 1,35,000 in this quarter versus 1,29,000. That's in Q1? Or yes, was it the previous year? In Q1. Okay, so from Q1 it's improved. Okay, yes. Okay, that gives us some sense. So Kolkata and Bangladesh lending some pressure to the business.
Indeed. Sandhya, what about your occupancy? I missed that number. Was it at 60, 65% is what we were talking about the last time around? It's in that vicinity?
Yes, we are in that same range, though our non-flagships have seen greater than 70% occupancy. So that's been a very healthy occupancy across all our non-flagships. Flagships have had a little lower occupancy.
Okay, all right. Let's focus on Cayman then. You know, your operations out there saw a decline of close to around 7%. You have commissioned a new unit as well, which in the near term could be a margin dilutive. So could you tell us how do you see that business shaping up from here on, and by when can we return back to normalcy in terms of margins, profitability?
Sure. So we did see some scale down in terms of acute high care procedures because we were getting ready for the new hospital. So some of the doctors took early leave to ensure availability when the hospital goes live, etc. And also because the revenue base of Cayman is very small, so small variations bring that fluctuation. There was one more event was like that there was a shutdown for about 7 to 10 days in August because of hurricane. So we almost lost 10 days of revenue during that period. Cayman is a hurricane-prone geography. And then during that period, transportation, etc. gets severely impacted. So this resulted in a dip in revenue. But the costs were all fully loaded up because the hospital is ready for commissioning and we're going through the approval process. We've got one set of approvals as of last week, and we have to get another set of approvals, which will happen over the next few weeks. So therefore, we are also seeing the full effect of the dilution, which is coming because all the medical hiring is done and all the overhead costs are being incurred, but there is no top line coming in from the facility. So that also is impacting margins. We've always guided that we need at least 4 to 6 quarters to be able to bring back the full scale in terms of margin. Just I want to give a little color saying the underlying margin of the India business has actually grown. The overall dilution has come mainly because of Cayman and because of the investments we are making in integrated care. So that dilution impact which is coming on from Cayman will slowly taper down over the next 4 to 6 quarters.
Right. So in the near term, we should work with a margin band of around this 23 to 25%. Would it be fair?
I do not want to guide, but it sounds fair.
Okay. All right. You have lined up a big capex, as you've mentioned in the past as well, of more than 1,000 crores. But the street would be interested to know about the return ratios, ROE, ROCE. Is there any target band you're looking at? I was reading a couple of notes which suggested that you'll be in that vicinity of around 22 to 24%. Would that be, an aspiration?
Definitely. The only point is that a lot of our capex investments are happening in greenfield assets. So, which means that during the build out phase, which is the next 3 years, there would be the capex coming on the books, but we will not have commensurate revenue. So, all these assets have to start delivering return to be able to hit the target ROCE band. So, there will be a period in the interim where ROCE will dilute. So as you would have already seen from Q1 or Q2 of last year to Q2 of this year, you've seen a ROCE dilution because of the investments we've made in land and the Cayman capex going fully live, etc. So that dilution we will see in the short term. But once all the assets go online and the returns start coming in, we will go back to our target ROCE.
And that is 22 to 24%.
Upwards of 20%, yes.
Okay. All right. Sandeep, we'll leave it there. Thank you very much for joining us. Appreciate you being here on the program. Good luck and speak to you again soon. By the way, at the bottom of the screen, the second big IPO to list at a discount. The first one was Hyundai, which listed at a discount. Afcons becomes the second large one, which has made it to the market below the issue price, which was 463. So it's listed at 426, now at about 447, which is about 3.5% lower at this point. Look at the volumes, tremendous, huge. That's a Shapoorji Group company, and it's a new listing in the market. I mean, the market, of course, has been under pressure with about a 1%, a little over a 1% fall on the Nifty at this stage. We are trading below the 24073 level, which is the 25th of October low. So the next you could look at all sorts of levels, but the next number which we put out was 23,893, which is essentially the low that we saw on the 5th of August. That was a swing low from where the market sort of, saw a one-way kind of a move all the way to a new all-time high in September this year. So 23,893 is the next sort of support on the downside as we look at levels from here on. Mitesh is with us with what he'd want you to do with this kind of a market. Mitesh, good morning again. Thanks for joining in. Almost a 300-point fall now. What would you recommend?
So, Prashant, I think below 24,170, we have added onto our put spreads on the Nifty. My belief is that the next level is 124,000 being a round number, and, the open interest on the option side. That's the first target, and we've kind of just touched that. And the other one is 23,570, 600 zone. There's a weekly average, there's a weekly there's a gap on the daily charts over there as well. So I think there's a good chance that we might actually, head towards 23,600 or levels just below that. And unless until we start capturing 24,250 again, I think the view would be to sell on rallies. Having said that, on the stock side, I have a sell on GNFC. Keep a stop at about 615 here. Look for a target of around 575 to about 570 on the downside. And the other one is a sell on Hindalco with the stop at about 685 and a target of 650 on the downside.
What a morning it's turning out to be. 300 points gone, 24,000 bulls Finding it very, very tough to defend that. Mitesh, thank you very much. This is a tough-looking screen. Prashant, it's almost as if whoever's the new US president is going to sanction India or, I don't know, put 200% tariffs on us. The way I think this kind of a sell-off, the ferocity of the fall, I think probably it took a lot of people by surprise this Monday morning.
I think so too, Surabhi. At least I don't think anyone expected. But, we'll see. You've got a full day in front of you. And it's still 1.25% kind of a fall. Yeah. I mean, it looks, of course, in point terms. But, it's an index which is at 24,000. Just breaking 24,000 now. So we'll have to keep an eye. I mean, the broader market is looking, actually, it's looking even worse because almost, 5:1 in favor of declines is the number out there. So very few things up in the green. The vast majority is down and out. There you go. That's essentially the 5:1 declines to advances ratio that we are looking at. So some nervousness ahead of US elections, all of that, of course. But I think it's a reversal of the Muhurat day gain, which was worth about 100 points, and then some as we move into the second hour of the trading this Monday morning. I think we'll take a quick commercial break here. Commodities in focus. Manisha is going to be here with just that. Stay tuned.
Well, cheers to the festive season that's raising the bar literally. India's alcobev makers are toasting to the record sales and new launches, hoping to make this the most spirited quarter yet. This quarter alone typically brings in about 30% of the year's volume in the prestige and above category, fueled by celebrations like Diwali and New Year. Let's start with Radico Khaitan, which has seen steady growth in its premium segment during the festive months, marking a 15 to 20% volume increase year on year over the last few years. Meanwhile, Amrut Distilleries is also celebrating success both at home and abroad after 5 years of 30% festive season growth. This season, Radico Khaitan is launching the gold edition of Jaisalmer Indian Craft Gin, aiming to capture the high spirits of the festivities with a product as luxurious as its audience. Amrut is also making headlines with its limited 2 Indies rum, which is premium blend, is specifically crafted to appeal to Indian.
Okay, well, it's a crunching fall for equities here in India. Let's figure out what's happening elsewhere in the world, especially in the world of commodities. We've got Manisha joining us. Manisha, what's top of mind for you right now?
Well, Asia, for one, has started on a positive note across commodities, and that is because the dollar index has declined below 104. So that clearly has been supportive. So whether it's about precious metals, industrial metals, and for crude oil prices, we are starting Asia with stronger gains here, especially for crude oil prices, where it has been a remarkable increase here. We are trading above $74 a barrel for the Brent prices. And this is after statements coming in over the weekend that OPEC and allies will delay their planned output hike of 180,000 barrels per day by 1 month. It has been delayed earlier once as well. This was done by 3 months, and now with 1 month more put forward, that means that the output cut only will begin by 1st of January 2025. Well, we have seen crude prices under pressure because of weak demand, especially from China, and then there has been high production continuing from non-OPEC as well. OPEC has slashed nearly 6 million barrels per day in the last 2 years, and that means that this is the kind of spare capacity that OPEC has. So even if it does not increase output, that tells you that there is enough spare capacity in the world and there is oversupply. And then when you look at the US markets as well, we are looking at record high productions there. And the US presidential election candidates, both of them, by the way, have promised to increase oil production going forward. So this is one commodity which is really not bothered on who comes in as the new US president, whoever comes, has promised higher oil production, opening up of shale gas. So that tells you that more production is what we could be looking at going forward from non-OPEC as well. And then you have plenty of events happening in this week. The US presidential elections is going to be one part of it. You have the US Fed rate meeting on 6th and 7th. That decision would come in on 7th of November. And then the US PMI trade data that comes in between Wednesday and Thursday as well. More importantly, it's not just about the US Fed meeting. You also have monetary policy meetings coming in from UK, Australia, Brazil, Poland, Norway, and a couple of more countries there. And then more importantly, China could be spending or giving out $10 trillion worth of stimulus. That would mean more demand coming in from China, which also is positive. Many of the industrial commodities and the crude oil prices seem to be taking stems from that as well.
Okay, all right, Manisha, thank you very much for that. So let's see what are the cues that we're going to get from those two major power centers, the US on one side and China on the other. It's a big week, and I think nerves are really showing up ahead of that. Well, with that, I think we have a couple of stocks to look at before we hand it over to Lata. Vinny is joining in. Sun Pharma has obviously had a rough morning along with the rest of the market, but Sun Pharma has fundamental news surrounding it as well. Vinny, fill us in.
Absolutely. The fundamental news is because the US court, the district court in New Jersey, has granted a preliminary injunction for Inside Corporation against Sun Pharma. This was specially for the drug, which is Lexervi. Now, this drug was expected to give Sun Pharma a revenue in the next 2-3 years that we would look at would be somewhere around between $200 million to $300 million. Now, obviously, that is something that has been delayed now, and that is why we are seeing Sun Pharma see a bit of a fall in its stock price today, 3-4% downtick that we're seeing. In July 2024, they had received this approval, but since then there have been problems. So now everyone was watching out for this clearance coming in, and this delay is something that is impacting the stock price today. Now, Nomura also is saying that, they could expect some bit of an earnings impact coming in because of this drug in FY25 around a 0.4% impact, FY26 a 3%, and in FY27 a 5% impact on terms of the earnings of the company. So keep an eye out on that, some bit of an impact going forward as well.
Okay, all right, Vinny, thanks for that. Well, the bears are catching serious momentum on the way down. What was a 300-point fall till about 3-4 minutes back is now a 350-point fall. So, yeah, this is, unusually heavy selling for so early on as you start a big, big week where cues are coming in. Maybe, Prashant, it's just, I think, just people taking positions and perhaps being on the sidelines if they already weren't ahead of these big events?
I think so. I mean, some amount of liquidation, right? Yeah. I mean, I don't think anybody would take a one-way bet, right? I mean, taking a short position or something of that sort. Maybe just some sort of profit booking. Because we did get a bit of a rebound. I mean, very, very short-lived rebound after the sharp selling that we saw. And many of those, I mean, if you look at stock specific, these are all names which had rallied quite hard over the last 2-3 days. I mean, take a look at the recent listing like Vari, etc. But of course, it's not limited to a few, but some of the big volume-led gainers across the broader market are all names which rallied in the last 3-4 odd trading sessions. So, some of that, of course, getting unbound as we head into the next 3 or 4 days. And actually this week we'll have a new US president by Wednesday morning. You'll have the China stimulus somewhere in the next 3-4 days, and of course a 25 basis point cut from the Fed on Thursday as well. So it's a big one, and I think a little bit of a softer kind of screen, a bit in the red as we go into all of those things. Well, we'll take a quick commercial break here. We're going to come back. Lata will be in conversation with Mithul Kotecha of Barclays, Neeraj Gambhir of Axis, and they talk about what else, but the implications of a Trump or a Harris victory on rates, currencies, emerging markets. Stay tuned. That's coming up in just a bit.
For luxury spirits while enhancing Amrut's profile on the global stage as well. Now, Indri is also making waves, winning a prestigious gold medal at the Whiskies of the World Award for its Diwali Collector's Edition 2024. The award not only underscores India's presence in the world of fine whiskies, but also highlights the trend towards premiumization, one that is sweeping the industry. Now, let's zoom out to the broader industry trends. Last year, festive season saw a 12% spike in premium and luxury spirit sales, according to CIABC data. With consumer spending high, 2024 is poised to outdo that with even more new launches and robust demand. Many in the industry are leaning into the premiumization strategy, hoping that these high-end products will help offset inflationary costs that have been cutting into the margins. Back to you. Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7.
Today on It's the Economy, we are discussing the obvious, the US elections. On the face of it, a Trump election is seen as higher tariffs, lower corporate taxes, and higher fiscal deficit. This translates to higher equities and lower bond yields because both higher inflation and higher supply of treasuries to bridge the deficit would be bond negative. But let's discuss more. What's the impact on emerging markets and more so on India? I have with me Neeraj Gambhir, the head of markets at Axis Bank, and Mithul Kotecha of Barclays Bank. Gentlemen, good morning and thank you very much indeed for joining me. Mithul, let me start with you. Is something priced in? I mean, we're seeing equities fall, Indian equities, Chinese equities. So is the market already pricing in a Trump victory?
I think that's the way that the market has been moving in recent sessions. And what we've seen, notwithstanding an Iowa poll over the weekend, which did seem to show Harris taking a lead, but generally the betting odds and the market has been shifting towards a Trump win. And even though it's still very, very close, and I think we've seen that. I mean, for example, we've looked at the premium that's in the US dollar, and we think the dollar premium is already about 3% priced in for a Trump victory. That's just in the DXY. And, you know, I think you could argue the same for other assets as well. So that said, if we do see a Trump win, we could still, in our view, see some continued moves in the same direction. But some of that is priced in already. And of course, if Harris wins, you would see a reversal of some of that premium that's been built in on expectations of a Trump win. So, for example, you could see a weaker dollar and lower rates to some extent as well, as US rate markets have been selling off under the expectation that we would see much wider fiscal deficits under a Trump or a red sweep outcome coming through in the elections.
Oh, yes. I mean, 4.38 on the 10-year after dismal jobs data clearly indicates that they're not pricing in a weak economy or rate cut, but rather a Trump victory and perhaps higher tariffs and higher inflation. Neeraj Gambhir, thank you very much for joining. What would it be from an Indian point of view? I'm not asking you an EM point of view, because a China reaction and a South ASEAN reaction would be very different from India, which has a much less cantankerous relationship with the US on trade matters. So what would be the outcome for India if it's a Trump victory?
So first of all, on the fixed income side, I think if the Trump victory means significantly higher or even somewhat higher from here bond yields, I think it's in general bonds negative across the world. And I think domestically also we've seen the bond yields actually react to it, although in a very sort of calibrated and muted way. Only 10 basis points higher moves so far, but it certainly kind of makes the whole story about a sustained lower interest rate regime in the US a bit questionable. The second point is on the currencies. I think currencies, if we see Trump victory resulting in a stronger dollar, then obviously it is all EM negative, and I think we'll continue to see an impact of that on Indian rupee as well. Although Indian rupee seems to be very, very range bound right now, well managed in terms of central bank intervention, and its move so far has been one of the lowest in EM. So I think that we will see some bit of a muted response on both the sides because both these markets eventually react a lot more to the domestic data as compared to the international data, but there is going to be some rub-off effect of higher yields and the higher dollar on the domestic markets.
But Neeraj, the extreme reaction seen in case of a Trump victory is the raising of tariffs on China. And of course, in general, that's at least the rhetoric. If that were to happen, China would react with depreciating its currency, and the expectation is that India will have to do competitive depreciation. So does a Trump victory mean weaker rupee? Can we go with that equation?
A lot of this will play out over the next 6 to 12 months period after the US, president is inaugurated, which is in January. So there is a lot of talk right now. There is a lot of rhetoric right now, but how much of that translates into actual action remains to be seen. I think if the higher tariffs are probably given at this point in time, but does that mean a 10% global higher tariff as Trump has talked about, or a 60% tariff for China? I'm not sure how much of this is negotiation tactic or how much of this is actually going to be implemented. In general, if you see higher tariffs from US, it also basically means higher inflationary environment in US, right? So that is, again, in some senses, the question is whether Trump wants to see a stronger dollar or a weaker dollar. So there is a lot of these variables which are at play at this point in time for us to take a very strong directional call. I think we need to see how this entire story plays out and how the entire tariff, impact plays out over a period of time. But yes, if they follow through with higher tariffs across the board, and we see continued strength in the dollar, then obviously it is weakness for emerging market currencies. Again, I'm saying that Indian rupee is very well managed. It is basically very strong central bank hand at this point in time. So I'm not sure if we will see the same level of weakness in rupee as we would probably see in some of the other emerging market currencies.
Yeah, I guess the more less affected both in terms of economy and currency. Mitul, nobody's pricing in. I mean, we should also consider a hung government, right? A deadlocked government because of different majorities in the presidency and in Congress. If that were to happen, if that were the outcome on Wednesday morning or by Wednesday evening, what should we be prepared for in terms of currency and rate reaction?
Oh, look, I think that would certainly, if there is a split Congress, it would certainly send a more muted signal to the market, right? I think clearly what we've seen is a reaction here potentially to a red sweep or a Trump win being more extreme. And the chances of a blue sweep seem to be more limited because at this moment in time, the polling seems to show that Congress, in terms of the Senate, is more likely to shift into Republican hands. The House could stay Democrat, but again, it's a close call. But the chances of a red sweep and a Trump win seem to be more higher. But if there is a split Congress, some of the more extreme policy measures, probably on either side, would be tampered down. And in that sense, you may even see a bit of relief in markets in that sense. Rates may be more contained and therefore emerging markets may find some relief. The dollar may also lose a bit of steam in a split Congress, and you may see some relief there as well for EM assets. But overall, I think we are gearing up for a very binary outcome at this point in time. There is a lot of de-risking that's been taking place among investors in the last couple of weeks or so. So we would also see a very significant chance of an increase in volatility post the election outcome, either in any outcome, where we could see this sort of binary event coming through. And so, again, I don't think that emerging markets are out of the woods. I don't think asset markets generally are out of the woods. I would agree with the comment that the Indian rupee and Indian assets are far more isolated and unlikely to be impacted as much, especially given the stance that the RBI has on the currency, and we may see some resilience there. But again, I think the implications may still play out in the next several weeks. We may not even get an outcome so closely or soon after the actual election itself, and there's a risk that it could drag on for some time.
Okay, then very quickly, can you give me some ranges, Mitul? There is a view, of course, that, as Neeraj pointed out, this rhetoric is more to get bargaining power and not exactly actually implement 50-60% tariffs on Chinese goods and across the board 10% tariffs at all. Tax cuts perhaps are more likely. So in that event, do you think, what is your range for the dollar index? What is your range for the US 10-year?
I think in terms of the dollar index, firstly, look, as I said, we've got a bit of a premium that's been built in. We could still see a potential 3% trade-weighted gain in the dollar index in the wake of the election outcome if Trump wins. So we could see more upside there. We haven't got a forecast for a dollar index, but we would still see potentially an average move around that level. But we would see the CMY on a trade-weighted basis, if there's 60% tariffs, could drop around 3-ish%. on a trade-weighted basis, more on a nominal basis. Other currencies that we've looked in Asia, like the Korean won, Thai baht, would also be quite vulnerable and could fall quite sharply. So again, the bottom line is it would suggest dollar higher, US rates also higher. But again, as I mentioned, rates have already moved a lot in the US. Part of that is on better data in the US. So we may not see such a sharp move in US rate markets on the back of it because so much has been priced more recently. But look, it's unlikely that US rates are going to come off quickly if Trump wins. We probably may see a knee-jerk sell-off. The yield curve may be moving higher across the curve in our view.
Yeah, I mean, the Chinese currency has fallen significantly. It was, I think, end October 29, I remember seeing 7.14, even more, 7.15. And now it is 7.08. So clearly we are seeing a lot of reaction over there as well. Neeraj, what would be the ranges you will work with for the rupee and Indian bonds? By the way, Indian bond yields have also risen from, what, 6.7172 to 6.8687 now.
Yeah, so I think assuming that we have an extreme case of Trump victory and markets move quite significantly post that, I think I still will see, 10-year bond yields capped at around 7% for now, because I think even the US reaction may be a bit extreme, but I think Indian reaction will be somewhat more muted. On rupee, I think even a 1% move is difficult to imagine. We're currently at about 84 level. I would think that beyond 84.5 or maybe 84.75 in the worst case, I think it's very hard to imagine that rupee will move. So I would expect somewhere close to 0.5% to 0.75% move on rupee and maybe another 10 to 15 basis points on bonds. But that's really if the markets are actually quite volatile in US post the election results. By the way, I agree with the comment that we may not have a result for quite some time in US. In that case, the markets may need to sort of contend with this volatility for some more time.
Okay. Let me end with a monosyllabic answer from each of you on what is a more certain event. What do you expect from the Fed, Mitul?
That is definitely more certain. I mean, look, we think 25 basis points this week, 25 in December.
Neeraj?
I think 25 this week is given. I'm not very sure of 25 in December.
Okay. Well, as you say, we have to be prepared for a much longer and a great deal of uncertainty. Thank you very much for educating us, bringing us up to speed, Neeraj and Mitul. Thank you very much for watching the show. We wrap up on Bazaar. Chart Pass is coming up.
How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. on air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted.
Hello and welcome to Chartbusters. I'm Nigel, with me is Mangla. Well, the markets are under pressure, but we have got a new kid on the block, that of Afcon's Infra. They've listed at 7 to 8% discount in comparison to its issue price. We have with us Mr. Srinivasan, who's the MD of the company, to discuss more with regard to how things are shaping up. Hi, Mr. Srinivasan. Good morning and good to see you, Ben. Well, the stock listed at a discount of around 7% odd, but that dip has got bought into. So the street clearly would like to understand what's the way ahead for the company. Now, the last reported order book that we have is around 32,000 crores. And you had briefly mentioned that your L1 enclosed around 8,000 crores worth of order. Could you tell us what is the updated order book and where do you see you ending this fiscal year with in terms of an order book position? Please go ahead.
Good morning. We have started the year with about 31,000 crores of order book. And during the year, including L1, we have booked about 20,500. Out of which 11,500, we have got the orders in hand. Another about 9,000, we are L1 at different stages. After our meeting last time, probably we have another 1,000 crore L1. So with that, 9,000 crore is L1. If typically we don't include L1 jobs in the order book, but if we take L1 also into account, our order book as on date is about 45,000 crores. And we are looking at normally between 2.5 to 3.5x of our book-to-bill ratio. So therefore, we are very comfortably positioned as things stand today.
All right. So you're closer to 45,000 crore in terms of an order book. The remainder of this year, two-part question. One, the remainder of this year, what are the kind of order inflows that you're expecting? Because a lot on the street, expect domestic ordering pace to come off a little bit. So if you could give us a sense of what kind of inflow are you expecting in the second half of this year? And what is the execution that we're looking at in this year? What kind of revenues can you do?
That is something we have already bid for quite a few projects, which bids of which are to be opened yet. We do expect to book a significant amount of orders, at least not less than another 5,000 crores or so. And in terms of revenue growth, we have been growing at over a 20-year time frame, 18.5% CAGR. While 25 could be flat, on a longer term horizon, we expect to maintain about 15+% CAGR. Last 5 years, our CAGR is about 16%. And therefore, we expect around 15+% CAGR over the next 3 to 5 years.
So this year will be no growth, right?
This will be a flat year, like marginal growth could be there. About
why is that, sir? Why, if you could explain why exactly is that? Because you're
last
gaining
couple of
orders,
years, we have on a calibrated manner booked much less orders. And that has resulted in a less number of orders available for execution during the year, which is resulting in a flat turnover for the year.
Okay. All right. Flat turnover this year, but post that, you're expecting to continue to grow at around 15% CAGR on revenues. What about your margin profile? Could you tell us how do you see margin shaping up? The last time you joined in, you had mentioned that exports, they enjoy higher margins in comparison to what the domestic business does. And I asked you this because your margin profile is even higher than an L&T. So what's the internal hurdle rate at which you accept the order or you reject it? Please go ahead.
In terms of EBITDA level, we are at a fully diversified setup, we are probably one of the highest. 11.6% EBITDA is what we achieved last year. And we would sustain the EBITDA 11 plus on an ongoing basis. There could be further improvements, but at this point as a guidance, I would put it 11+% EBITDA would be a sustainable basis for Afcons. And in terms of, I would not like to compare with the competitors. Suffice to say that on a fully diversified setup, our EBITDA is at the highest level. In terms of overseas business, I would say our margins are about 200 to 300 basis points higher than the domestic markets.
Right. So what exactly are you expecting in terms of an overseas/domestic mix going forward? What will be this ideal mix? Because currently, while domestic ordering, a lot of people are expecting it to pause a little bit. Exports also, we aren't seeing great growth in export markets. So if there is any particular geography that you're focusing on, what's the ideal mix here?
We are looking at, yes, we have been maintaining a 70-30 ratio between domestic and exports for the last few years. While we would like to sustain that ratio in the periods to come, temporarily our export order book has come down a bit. In the current pending order book, if you look at it, 76% is domestic, 24% is exports. And going forward, we would like to sustain 30-70 between exports and domestic. And while order booking slowdown everyone is talking about, our size is such where for our requirement, procurement of orders should not be a problem. For example, when everyone is talking about a slowdown in the current year we have already booked the highest ever order book of, including L1, if we take it, 20,500 crores, which is the highest ever booked by Afghans. Right. Therefore, it's a question of focusing on the right jobs and going for the right jobs where comparatively competition is less, a complex job that will take us to wherever we are. In terms of geographies, we continue to be bullish on Africa and reasonable in neighboring countries, and Middle East, Saudi Arabia market we are bullish, and we are entering into newer geographies in erstwhile East European countries, in some of those countries where there is a good funding available from various sources. There we believe opportunities are higher.
Okay, all right. Talking about funding, your debt will come down to around 1,200 crores from 1,800 crores, as you told us, and it will result in savings of around 55 to 60 crores. That's because of the IPO. But since you have such a big order book and your working capital requirement could move up as well, where do you see the net debt number headed? And also, what could your effective cost of borrowing be?
The cost of borrowing for us has been one of the lowest in the overall setup. Our cost of borrowing currently is around 9.4%. We don't expect a significant downturn unless there are rate level changes or other thing. In terms of rate of interest rate, our interest in absolute terms will come down because 600 crores today we are paying to the bankers towards loan repayments, and some part of general corporate purpose also could go towards that. But we would use this, I would say, to leverage. And in terms of working capital, we don't expect a significant increase. For the simple reason, even in terms of order book, as we have explained earlier also, we follow a risk management process where cash flow negative projects are eliminated. Therefore, we do expect a larger non-fund based facility requirement than fund-based requirement. As we had explained to you earlier, our working capital number of days is 63 days net working capital, and we hope to sustain between 60 to 70. There is not going to be a significant variation in terms of working capital. And you would notice that we are one of the best in the industry in terms of working capital management.
No, so 600 crore interest that you pay, just quickly before we let you go, I'm looking at the objects of your issue. 500 crore goes towards prepayment of borrowings and 350 crores towards funding long-term working capital requirements. So that's nearly 850 crores of, otherwise borrowed money being off your book. So should we see around 85 to 90 crore of interest cost reduction on an annual basis? Is that the right calculation?
It's various factors, because interest is something which goes up during the year and comes down towards the end. And the government in the first 2 quarters are, in terms of payment time cycle, a little elongated. Taking all that into consideration, I think we should look at interest coming down. But in terms of absolute number, I am not in a position to say how much.
All right, take that point. Wish you good luck for the remainder of this year, and congratulations once again on listing on the bourses. Now your responsibilities towards shareholders increases a lot more. We promise to keep having these quarterly conversations with you to keep your shareholders and our viewers abreast of what's taking place in the country. Thank you so much, sir, for joining in.
Thank you. Thank you very much. It has been an exciting journey, and thanks for your support as always. Thank you.
All right. With that, we'll shift focus to our special segment. We get you ideas of profit from our colleagues at Money Control Pro. Today, we have Anant Chaudhary joining in.
The stock idea is Crompton Greaves Consumer Electricals, a 75-year-old brand in electrical consumer durables and lighting space. It is a leading player in fans with market share of 28 to 29%, also having a healthy market share in pumps, LED lightings and geysers. The company is well positioned to benefit from shift towards premium and energy efficient products. Crompton's market share in the fan segment has increased from 17 to 18% to 25% in the last couple of years. It aims to reach 40% in next 3 to 4 years by increasing the share of premium ceiling fans. Company is a market leader in residential pumps. Now its market share in agri pumps has also increased to 8%, which now contributes 20 to 25% of the pumps business. The headwinds for lighting industry are likely over. Company has discontinued its CFL business and will focus on LED business only. Hence, it should witness higher revenue growth going forward. To diversify into kitchen appliances, company acquired Butterfly Gandhimati Appliances in 2022, which has a strong brand recall in South India. It has experienced subdued performance so far. However, the restructuring of this business, which involved reducing its reliance on e-commerce and lowering its institutional sales, which is nearly completion. Stock is down some 15% from the peak and trades at 36 times on FY26 earnings.
All right, with that, we'll slip into a short break. Don't go anywhere, though. On the other hand, we have on the other side of this short break, Umesh Chaudhary, who's the MD and CEO of Titagarh Rail Systems, joins in to discuss the company's quarter gone by.
Investment Ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back. Well, the breadth of the market as well is bursting a little bit. Now we're down to around 350 stocks that are advancing, and that number was close to around 550 earlier. So those lines actually are getting further apart. A few stocks that are deserving special mention. You had Siemens that was in the green actually to kickstart trade. That's moved into the red. So let's get that stock up for you on the screen. PNB is another name that was in the green. That as well has moved into the red. On the flip side, KPIT Technologies, a stock pulled back a goodish bit post its numbers. But it seems to be finding some kind of support at around the 1350 odd mark. Even today, intraday, we have seen a bit of a bounce back out there. And Godfrey Phillips as well That's the other stock in there that's moved into the green. What else, Mangla?
Nigel, I'm looking at Gillette. No two ways about it. Great numbers coming in last week itself. Ever since that, the stock is held up fairly in the green. Currently closer to its 52-week high today as well, sitting with a gain of 4% at a time when the mid-cap index is down about 1.5%. So what we'll do is we'll keep an eye out on this one. For the last 7 days itself, 25% in terms of gains. That's a clean shave that we see on Gillette. Take a short break, come back on the other side. We'll get you markets and more stock-specific action, perhaps get in a conversation with the management of Titagar Wagons as well. Welcome back. You're watching us here on Chartbusters. Let's get chatting with the management of Titagar Rail Systems. The company reported a steady set of numbers in the second quarter. Revenues grew by about 13%. Similar was the growth that we saw in the EBITDA and the net profit as well. Umesh Chaudhary, who's the MD and CEO of Titagar Rail Systems, joins in to discuss the quarter gone by. Thanks a lot, Mr. Chaudhary, for joining in. It was a pleasure speaking with you. Season's greetings to you and your family as well. Most importantly, the run rate in this quarter in terms of execution picked up. You did about 2,600 wagons. You've been talking about clocking 3,000 wagons a quarter or 1,000 wagons per month consistently. So the question is, in the second half, do you do that? And on an average for this year, what's the kind of execution run rate that you're looking at? And your order book update as well. If you could give us, your overall order book update, how much is that? How much of that is freight? How much of that is passenger and JVs?
Sure. So good morning. Always a pleasure being with you, and season's greetings to you and the team of CNBC. The quarter gone by was a satisfactory quarter because we've been able to actually breach all our past records in terms of revenue, in terms of EBITDA, in terms of the profit before tax. It's been the highest ever quarter for the company. And in terms of the execution, we did an execution of 2,700 wagons, approximately 2,690 wagons. That gives us a run rate of close to 900 wagons per month. So we are not really very far off from our target of getting to 1,000 wagons per month on an average basis. We should be able to achieve that within this financial year. We are trying to get closer to that within this quarter, but definitely Q4 we would be able to achieve and surpass slightly the target of 1,000 wagons per month on an average. The order book, the overall order book of the company is about 25,000 odd crores. If we divide it between our share of the JV and our own direct orders, it's more or less half and half. And again, if we go into the split between the passenger rail segment and the freight rail segment, it is again approximately half and half, maybe 55-45 thereabouts. So it's a very well spread out, well hedged order book that we have, order portfolio that we have. And what we are now doing, the focus is now to improve the execution or to pick up the execution of the passenger side, which we are also fairly confident that we have started the Bangalore metro production. We are likely to start the Ahmedabad metro production in Q4 or beginning of Q1. The first train of next year, the first train should go out. So with all of that, both the segments, the freight and the passenger, will start contributing, which has till this quarter, it has been primarily the freight. The passenger has a very, very small role to play in the growth of the numbers that we have achieved.
Okay, all right. Hi, Mr. Chaudhary. Congratulations on the set of numbers. Market today is a little weakish, but otherwise you're going according to that guidance of close to 900 to around 1,000 wagons per month. Got that. What does it mean in terms of revenues for this year and more importantly for next year? Because that's when metro segment as well will come into play. So what could the outlook be in terms of growth? And also what does it mean in terms of profitability?
So, the profit margins, as we have always said in the freight segment, we are at about 11-12% EBITDA, and the operating leverage would maybe improve slightly and some backward integration, but it will be in the vicinity of 12%, I would say thereabouts, on a longer term perspective. I'm not talking of a quarter, but on a maybe average of 3 or 4 quarters. In the passenger, again, we are expecting 10% to 11% EBITDA until our own propulsion comes in. And when the propulsion starts coming in, then we should see a jump of another 3-4%, so going up to 15% targeted EBITDA. For the revenue growth, we are looking at stabilizing the freight at 1,000 wagon level over the next year as well. The passenger is going to be the real game changer for us. The metro segment will start contributing in the next financial year, and the year after, the metro segment as well as the Vande Bharat, both will start contributing. So really what we are looking forward to in terms of the real growth that we can see in the company, the next, I would say, quantum jump, not the incremental growth, is going to be the following financial year, that is 26-27.
So let's talk about 26-27 and 27-28 itself. If you could give us a sense of, so 12,000 freight wagons are on the cards because that is the number that you hit consistently. 26, you do 12,000 freight wagons. How much comes in from passenger? And the year after that, how much comes in from passenger metro? What kind of margins are we looking at? Because by then, I think the propulsion will come in too.
Yeah, absolutely. So I would not get into the financial numbers because that would be giving the future guidance, but which we do not do. But what I would give you is the capacity that we are creating. So the capacity that we are creating is to produce approximately 350 to 400 metro coaches and 350 to 400 Vande Bharat coaches. And both of this will be in full. And in order to give you a sense of magnitude, order of magnitude, a metro coach is 10 crores a coach, and Vande Bharat is about 7-8 crores. Our share is lesser because it's in a consortium with BHEL, but that's the overall order of magnitude. So the potential that the passenger segment, and I would rather go up to FY30, the passenger segment has the potential of being a much larger business than the freight segment. And, this ramp up will continuously, I would say every quarter from Q4 of the current financial, we will see a growth ramp up in all the parameters of the passenger business.
So at full level, 3,500 crore comes in from passenger because that's 10 crore per coach. You have 350 coaches per year. And Vande Bharat, assuming you have 50% share out there, gives you around 1,800 crores in terms of sustainable revenue. That's a fair understanding?
Yes, absolutely. For the time being, yes. Of course, we look at further Vande Bharats coming in, and that would definitely help grow further.
Take that point. Thanks a lot, Mr. Chaudhary. Always a pleasure speaking with you. We'll obviously keep getting any comment from you around order wins and order activity for the railways as well, and to understand your business a lot better as well. Speak to you during the quarter two. Thank you so much for joining in. With that, we've run out of time on this edition of Chartbusters. From Nigel, me, the entire team, thank you so much for watching. The team of Trading Hour takes the market action ahead, currently at the low point of trade for the Nifty Bank and the Mid-Cap Index.
I accept your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
On the street, they say, "Ye dil mange more," right? Now that you're listing, you also have a listed peer. With the trajectory that we've seen on them, on a lot of the parameters, they're above, what Swiggy is right now, which is not to say that you're any less. It's just that you're at different stages of growth in your life.
Correct. I think, look, there's a lot of context. We each have our own context, and we are in very, very exciting categories. And our strategy, our capital allocation, everything's going to be a function of our excitement and what we can go after in each of these. Like Rahul mentioned, we've demonstrated the profitability in the food business. We feel good about its future going forward. As for quick commerce, I think it's in a once in a lifetime category, and I think we are seeing consumption patterns change for consumers, and there's so much to be done. So our endeavor will be to make sure that we do the fullest of our ability to make sure that we grow and serve customers well and make sure that everything comes together nicely.
But for quick commerce, you recently said that the peak of the investment is behind you, but
right.
You're still not a contribution margin positive either. So, I mean, what is the trajectory there for quick commerce? Because even for your peer, that has been the growth driver, right? So how are you looking at the quick commerce business for you in terms of being, is it also going to be the growth driver for you? And sort of trying to get a sense of the path of profitability on that front also.
See, maybe I'll take this. I think on quick commerce, what really amazes us is the way consumers are reimagining, things, or what can be delivered to them. So it's almost like every quarter we have to recalibrate around, what is the number of categories that we have to be there, what is the number of SKUs we have to launch, and there's a recalibration happening. Growth is accelerating. So there'll be a certain amount of, say, new store additions that we'll continue to do. The old stores
Hello and welcome to Trading Hour. I'm Sonal Bhutra. With me is Vivek Iyer. Good morning, Vivek. Well,
A fresh new week, but it has started on the back foot. It's a big cut that we are seeing across indices. In fact, if we talk about the Nifty, now it has fallen below the 23,900 mark. We're just testing the 24,067 mark. It would bounce back from there. But now at the day's low, and the cut continues. It's a 1.8% cut on the Nifty. Mid caps are seeing a bigger cut. It's a 900-point cut. Of course, in absolute terms, it looks bigger. It is largely in line with what the benchmarks are doing. The Bank Nifty too is seeing a cut, but it is outperforming the benchmark. So that's the kind of market we are in, where an 0.8% cut on the Bank Nifty, we are calling that an outperformance versus the benchmarks. Well, you know, with this, Nifty is now down around 8.5% from the highs that we have seen. And this number keeps on changing, of course, because of the cuts that we continue to see as well. Number of reasons. We did see stretched valuation, something that everyone's been talking about. Second has been, interestingly, the earnings growth or the earnings cuts that we have seen this time around. Motilal Oswal says that earnings growth for 166 companies under coverage, it declined 8% versus an estimate of 4% decline. This is the lowest level they've seen in 17 quarters. And Jeffrey says now analysts have cut FY25 earnings estimates for over 60% of the 98 companies that they cover. That's a big cut that we are talking about. This is the highest downgrade ratio that they've seen since early 2020. And that is when the real rally had started, right? Post that early 2020 mark. They also say that they expect Nifty earnings growth to be around 10%, which is 2 to 2.5% lower than what they had indicated earlier. So definitely earnings cut and the macro spending is something that is scaring the markets generally.
Good morning, Sonal. Very, very rightly put, especially given the fact that we actually went into the earnings season, like you mentioned, with an expectation of a decline, and it's been worse than that. Now, when you're talking about the mid-cap index, you know, that's the one that's seeing quite a bigger cut. So it's been down for 2 of the last 6 trading sessions today, down almost 1.7%. Small cap index has snapped a 5-day gaining streak. So we're starting off somewhat 2082, you know, on a slightly subdued note. Top drags today, PVR, you know, despite the slew of releases that we saw, look at PVR today, down almost 9% as we speak, below the 1450 mark. And in the broader end of the markets, especially when you're talking about the entire auto pack, the two-wheeler space, all of them today have seen significant selling pressure. Hero's down, Bajaj is down, all of them are down almost 4.5%. TVS Motors, Eicher, all of them are down. On the other hand, one outlier today is Naukri or InfoEdge. The jobs peak index are slightly positive, and on the back of that, the stock holding in the green. But we have a corporate line on the show, so let's begin trading on with a corporate discussion. Zen Technologies recently reported their Q2 numbers. The company saw its revenue and other income surge. However, EBITDA margin came under some pressure. We are now joined by Ashok Atluri, who is the Chairman and Managing Director of Zen Technologies, to discuss the Q2. Good morning, Mr. Ashok. Thank you so much for joining us. First up, after a slightly tepid Q1, you've seen a much better Q2. Are you now on track to go ahead and meet the FY25 guidance of at least 900 crore top line growth or top line?
Yes, absolutely. Yeah, we are very sure that we will be able to, you know, meet the 900 crore target. And we also feel that the first quarter was reasonably good, and so was the second quarter.
Okay, so you'll be able to meet your 900 crore rupee guidance on the top line, and EBITDA margins is what you'd guided at 35%. Is that achievable, or you will cross that? Because on the first half mark, you are already above that at 36.8%.
No, I think we'll stick to the conservative projection of 35% and hope that, you know, we touch that, yeah.
Okay. Mr. Atluri, now that we have spoken about P&L, I just wanted to touch upon the balance sheet as well, because your operational cash flows declined on a YY basis in the first half. The receivables had gone higher. How much higher have they gone? Can you give us an indication of what the receivable picture is looking like? Is this something that would go higher in the second half as well, or come back to normalized levels?
No, we are getting, the realizations are very good at this point in time. And, you know, even though the balance sheet is showing the receivables have gone up, the fact is that, you know, as we getting into the second half, the realizations are coming in. Government is not holding back unless there is a valid reason. So we think that by you know, in the next couple of months, most of the receivables will be down. We would have received.
So what is the average receivable days for you, Mr. Atluri, and will that be the number we'll see by the end of FY25?
So we have been, you know, around 150 days, almost 5 months. We expect that this will continue into the future also, plus or minus 5 or 10 days, but not more than that.
Mr. Atluri, when you're talking about the domestic order book, the domestic part of the business, you're sounding very confident. Now, talk to us about exports. What was the export contribution in this particular quarter? FY25, earlier you had given a guidance of close to 300 crore. Are you on track to achieve that?
Yeah, we are on track to achieve that. I think that because that's the order execution that we currently have. And, again, the percentage of export that we have done is around 13% this first half year. And we expect that to go up in the second half. It will be, I think it should be around, probably around 30% or so of the whole order book position that we execute out of 900 crores, yeah.
Okay, so order book, what is the guidance that you're sticking with? As far as Q2 was concerned, it appears to be slightly muted. Was this because there was some slowdown as far as spends or awarding new contracts was concerned? And also give us a sense of, what are the new orders or the contracts that you're executing versus what are the annual maintenance contracts you would be executing?
So again, we are doing about 8 to 9 crores quarterly for AMCs, and we think the order, we have all, from the beginning, we have been saying it will be towards the end of third quarter and the fourth quarter that we'll be getting the, substantial, the order book replenishment that will be happening. And we still are confident that, the order book replenishment will happen then. Yeah, and again, if you remove the, 35 to 40 crores out of the 900 crores, then we'll be having about 850 plus crores of equipment order out of the 900 crores.
Okay. Mr. Atluri, the other thing that the street is watching out for in terms of some execution, because you've already spoken about how you're looking at inorganic opportunity. The last time we had spoken, you said you do have 100 to 250 crore rupees of 2 to 3 acquisitions which you're looking at. Anything that will be finalized in this calendar year or this financial year? And if yes, will that start, adding to your growth from FY25 or FY26?
So we think that, in this financial year, definitely we probably will be able to show some acquisition happening. We are reasonably confident at this point in time. And if we do acquire, I think there'll be some incremental, addition during FY26 for sure. But FY27 will be the big year for the acquisition, because at that time the integration would be over and we would have introduced them to our complete value chain, including our, our customers, existing customers. So FY27 will be big for any acquisition that happened during the year.
So what is it that you've kept in your kitty as far as the acquisitions are concerned? And initially, where will the acquisition targets lie? Will they be in the simulator space, or what kind of space will they be in? And FY25, what will be the likely size of the acquisition you're expecting to close?
So, our target size is between 100 to 300 crores. So, we are evaluating, we are not sure which one will get concluded. And we think that the acquisition will happen in 2 spaces. Again, electronic warfare, which is basically anti-drone system and adjacent spaces. And the second one is simulators. So these are the 2 areas that we are looking at. Again, because we have strengths, but if there are any gaps, like, getting into Air Force simulation or something like that, that's another thing that we are looking at. So these, again, not very diversified acquisition. It is, even though it is inorganic, but it is building the strength of the value chain that we currently have. And I think the acquisition will definitely add a lot of value to Zen's current portfolio.
Okay. All right, Mr. Atluri, thank you so much for joining in today. Pleasure speaking with you. And that's the word coming in from Zen Technologies, maintaining their guidance for FY25. Receivables will also come down to 150 days. We'll do one thing. We'll slip into a short break now. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned for that.
Which means that they become profitable over a period of time, and the new stores come in because consumers want a lot more. Right. So I think it's a recalibration of our overall growth trajectory in line with the demonstrated path to the contribution margin that we continue to will demonstrate.
Welcome back to Trading Hour. Well, let's now shift the focus to the commodity space. Manisha joins in, and today we are focusing on base metals.
Oh, well, yes, we are. Thank you for that, Vivek. And base metals as well seem to be doing well. Actually, the commodity markets today have started the Asian markets on a stronger note. One, you have the dollar index, which has seen a decline. It's trading below 104 right now. And the second thing is that the markets are now looking forward to the US Fed meeting. 25 basis point of a rate cut is something that the street, while has already factored in, but it really is going to be about the guidance going forward that the street is looking at. Well, we have seen prices gain up by a percentage point in the Asian markets right now. And with that, the copper prices are up by 13% in this year until now. The street is also looking at the Chinese meeting that starts on 4th and continues until 8th, and an expectation that 10 trillion yuan of fresh stimulus measures could perhaps be announced this time around. It would be between debt, property and construction, and that in turn also has been supportive for metals. The street is also looking at Codelco's data, which says Codelco, by the way, is the world's largest copper producer. The third quarter numbers in sense of production are slightly lower than expectation, and that has been supportive as well. Base metal prices in this year have done quite well, including copper, aluminum and zinc, with an expectation that if China would come out with more stimulus, you could be looking at further gains continuing.
Okay, gains could continue, unlike what we are seeing in the equity markets. Thank you so much, Manisha, for joining us as always and telling us what's happening in the commodities space. Let's move on. As CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policy makers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You do not want to miss this.
Well, cheers to the festive season that's raising the bar literally. India's alcobev makers are toasting to the record sales and new launches, hoping to make this the most spirited quarter yet. This quarter alone typically brings in about 30% of the year's volume in the prestige and above category, fueled by celebrations like Diwali and New Year. Let's start with Radico Khaitan, which has seen steady growth in its premium segment during the festive months, marking a 15 to 20% volume increase year on year over the last few years. Meanwhile, Amrut Distilleries is also celebrating success both at home and abroad after 5 years of 30% festive season growth. This season, Radico Khaitan is launching the gold edition of Jaisalmer Indian Craft Gin, aiming to capture the high spirits of the festivities with a product as luxurious as its audience. Amrut is also making headlines with its limited 2 Indies rum, which is premium blend, is specifically crafted to appeal to India's growing taste for luxury spirits while enhancing Amrut's profile on the global stage as well. Now, Indri is also making waves, winning a prestigious gold medal at the Whiskies of the World Award for its Diwali Collector's Edition 2024. The award not only underscores India's presence in the world of fine whiskies, but also highlights the trend towards premiumization, one that is sweeping the industry. Now, let's zoom out to the broader industry trends. Last year, festive...
Welcome back. Well, the selling pressure has intensified. If we look at the Nifty, it's down almost 500 points right now, testing that 23,800 mark as well at the day's low. And you know what's leading to this fall? It's the Bank Nifty. When we started the show, it was down around 0.8%. Now it's a cut of 1.1% on the Bank Nifty. We have the likes of IndusInd Bank, which is at the day's low. HDFC Bank, a big weight on the Nifty Bank and the Nifty as well. That's leading to the fall that we are seeing right now. Sharp fall is what we are seeing on the front line, as there you go. HDFC Bank leading to the fall that we are seeing in the last couple of minutes. Reliance Industries should also come up for you on the screen, because that's the one from which is another heavyweight which is leading to the fall there. And Axis Bank, again from the banking pack. So it's the Bank Nifty which has seen more pressure from the top in last couple of trading minutes, and that's leading to the fall. And mid-cap index is now down almost 1,000 points. It's a 1.7% cut on the mid-caps as well. So all across, we are seeing big cuts come by in the markets right now. So let's get a technical check on the market. Soni Patnaik from JM Financial Services is joining us now. Soni, we have started the week on the back foot, and the back foot, like it's a big cut we are seeing across the board. What's the next trade? Do you think there could be more selling pressure? Every sector is in the red today.
Hi, good morning, Sonal. Thank you for having me on your show. Certainly, I think today there has been a lot of selling pressure. Nifty broke a very crucial support of 24,000. The next support that can be seen is towards 24,700. The only ray of relief over here is that it has actually just entered an oversold zone. So there's a possibility that another 100 points of pain and there could be a small recovery. However, as long as it's not able to cross and sustain above 24,200, it continues to see the selling pressure, and every rise may just convert itself into the selling pressure. Talking about Bank Nifty, 51,000 still continues to act as a support. If Bank Nifty breaks 51,000, there's a high possibility that it can even test 50,500, and any sustenance below the 5,500 level will bring in more caution for Bank Nifty, and the fall could be even more severe as compared, in comparison to what we can see right now. So I think both the indices are very critical at this moment, and a sell on rise structure continues to be the strategy, or at least when it comes to indices, it's wise to remain hedged for the moment.
Good morning, Soni. Soni, any buy or sell recommendations for clients today morning?
Certainly. So the first, sell would be in Astral, which has seen breaking its support of 1950 level. Now, there's a good breakdown that we can see in Astral coming. There's enough call writing happening at higher strike prices. So one can sell Astral futures around 1940 and on very small rise up to 1950. That range can be a good sell. Keep a stop loss of 1980 and a target of 1680 to 1650 can be seen. So this is a sell recommendation. The other recommendation would be a conditional buy. The conditional buy is in Federal Bank, which has been sustaining above a 200 level. The condition over here is to buy Federal Bank only on a move above 207. So if it crosses 207, one can buy at those levels, keeping a stop loss of 202 only then. And look for targets of 216 to 218. So that's a conditional buy and a Astral sell from current levels.
All right. Thank you, Soni, for joining in today. So big pressure coming in, but those are some important levels to watch out for on the Nifty and the broader markets as well. Let's get stock specific now. Get in Sudarshan, who is joining in with the latest updates from the October auto sales numbers. Sudarshan, how did it look?
Well, the auto sales were largely better than estimates, but in line with market move, majority of the auto companies are trading with cuts despite their numbers were much better than estimates. So starting with M&M, both auto and tractor segment have done better than estimates. Auto segment was led by SUVs, which saw a growth of more than 20%. Even tractor segment has fared better, and good monsoon has helped tractor sales. Maruti, total sales were in line with estimates. Exports have led the growth, but concern for the companies starting the lower end segment, for which growth was down 20% year-on-year. Tata Motors sales were higher than estimates. We were expecting a decline because of CV sales, that CV sales have been under pressure for the last few months, but companies reported sales that are largely unchanged. Even for JLR, October US retail sales, the growth has come in at 20%. For TVS Motor, here also sales were in line with estimates. Motorcycle sales were up 14%. Scooter sales have jumped 17% year-on-year. Eicher Motors, Royal Enfield sales have come at a company has reported a highest ever monthly sales. Royal Enfield total sales have come at a 1.10 lakh units. For Hero Moto again, it was a sales were higher than estimates, and it was led by 100cc and 125cc segments. Even on Dhanteras Day, company says growth was in double digits. So overall, sales were largely better than estimates by majority of the companies. But today, as we are seeing that market is under pressure, and in line with that, even all these stocks are falling.
Thank you so much for that, Sudarshan. Like you mentioned, a lot of the auto stocks today are under significant pressure, especially the two-wheeler names. But earlier today, we spoke with Rakesh Sharma, the Executive Director of Bajaj Auto. Let's listen in to some key excerpts.
It has been a smashing festive, though it started a little bit tentatively before the Dussehra, but by the time festive actually closed, it's been, I think, the best ever festive after COVID. At least I can say that from our point of view. Our sales have been, overall sales has been double digit. Our area of focus, which is the top half of the industry, which is the 125cc plus segment, has grown upwards of 20%. We have sold over 200,000 Pulsars, which is like way, way above the last high which we had achieved. And even three-wheelers has had a smashing month with about 56,000 units of retail. And I think the previous festive was 45 or 46,000. So a very big difference. The area of our focus has grown upwards of 20% in retail terms, which is the 125cc plus segment. EV two-wheelers is a triple-digit growth. I mean, it's almost doubled, more than doubled. Retails have more than doubled over the last festive. And three-wheelers has also, grown at about 13-14%.
Okay, that's the word coming in from Bajaj Auto. Let's stick to the auto space. Royal Enfield is all set to reveal its first electric motorcycle at the 2024 EICMA today. CNBC-TV18 Shivani Bizaz joins us straight from the event in Milan with the latest.
Well, yes, big news expected from here in Milan as Royal Enfield, India's iconic motorcycle brand, gears up to unveil its first ever electric motorcycle today at the prestigious International Motorcycle Exhibition, or the EICMA 2024. With this launch, Royal Enfield is making a bold entry into the electric vehicle market. Now, what is generating even more excitement is the nostalgic nod to the past. The company's teasers have been linking this new electric motorcycle to the historic Flying Flea motorcycle, which played a crucial role in the World War II. Now, the new EV motorcycle will likely serve urban riders, reflecting a shift towards a practical city riding over the adventure touring. It looks like this is expected to be a fresh yet rooted in the classic Royal Enfield aesthetic. While exact details on the range, specs and battery remain under wraps, this is expected to be Royal Enfield's priciest bike, emphasizing a premium feel. Remember that the EV segment in India is dominated by electric scooters when it comes to the two-wheelers. So all eyes on the reveal of this new EV era, which is setting a new stage for the iconic brand of Royal Enfield. In Milan, Italy, this is Shivani Bizaz for CNBC.
Thanks so much for that, Shivani. Let's now take a short break. Up next, we'll discuss the way forward for the market with Deepak Jasani from HDFC Securities.
Spike in premium and luxury spirit sales, according to CIABC data. With consumer spending high, 2024 is poised to outdo that with even more new launches and robust demand. Many in the industry are leaning into the premiumization strategy, hoping that these high-end products will help offset inflationary costs that have been cutting into the margins. Back to you.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
Welcome back to Trading Hour. Well, M&M is in focus after brokerage firms Goldman Sachs and Kotak Institutional Equities viewed the issue positive commentary. Sudarshan joins in with more details.
Most of the brokerages remain positive on M&M after companies reported sales for the month of October, which were better than estimates on both the fronts, auto as well as tractor. So Goldman Sachs is a buy call with a target of Rs 3,600 per share. Even it has added company to Asia Pacific conviction list. It says SUV order backlog and upcoming battery electric vehicle will aid the growth, and farm equipment is entering a phase of improving underlying market dynamics. It expects 20%, 100% EBIT and free cash flow CAGR over FY25-27. Kotak Institutional Equities has upgraded the stock to buy and target is Rs 3,150 per share. It says company will continue to outperform the industry growth and tractor segment is expected to witness uptick during H2 FY25. Even on the valuation front, it says stock is currently trading at an attractive valuation. So both GS and Kotak Institutional Activities remain positive on M&M.
All right. Thank you so much, Sudarshan. So that's M&M in focus. It's an outlier in a market like this, up 1.2%. The other stock which is in focus on the back of news update is Sun Pharma. It's down 3% after a US District Court has issued a preliminary injunction which has delayed the launch of one of its important drugs. Vinny is joining us with all those details. Vinny.
Absolutely. So yes, this delay in launch of the drug that has come in is Leqselvi, I beg your pardon, Leqselvi drug, which is used for the treatment of alopecia. Now, this was an important drug for Sun Pharma because everyone was anticipating that this would be cleared. Now, this injunction which they got will further cause much more of a delay. They'd gotten an approval in July 2024. So this would delay the launch by a couple of years. FY25, we wouldn't see any revenues coming in on this front. And brokerages were anticipating some bit of a revenue. Analysts were anticipating the revenue coming in from FY25 and onwards. So the revenue expectation that Nomura had from this drug for Sun Pharma in FY25 was around $10 million, then in FY26 $80 million, and in FY27 around $150 million. So clearly that is something that will not be coming in for Sun Pharma in all these years, and that is why an earnings impact of around 0.4% in FY25, 3% approximately in FY26, and in FY27 a 5% impact in terms of the earnings from this drug. So keep an eye on that. They've appealed for this obviously in the court again, so we'll watch out for that. Till that doesn't come in, we couldn't expect a launch.
Thank you so much for that, Vinny. Now stock down almost 4% in the session today. Well, we had a new listing as far as the infrastructure space is concerned. One of India's largest infra players, Afcons, listed today on the exchanges. It was a slightly muted listing compared to how generally we've seen listings in the past couple of months. But let's have a look at the company itself and what exactly it does. Remember, we had the management on our channel at 10:30 a.m. today, and some interesting takeaways too. So just quickly run through what exactly the management told us. Number one, total IPO size of a little over 5,000 crore, fresh issue of 1,250 crore, of which the company was looking to use a majority of proceeds coming in from the fresh issue to go ahead and repay debt. Capex of close to 150 crore for purchase of construction equipment. And when you're talking about the order book of the company, it's very, very strong. Remember, it started FY25 with an order book of close to 31,000 crore rupees. At the time of going to IPO, it was close to 32,000 crore rupees. Now, what the company said today is that they've actually booked a little over 20,000 crore as order inflows in FY25 so far, and the order book currently is well over 45,000 crore, including all of the positions where the company is the lowest bidder or L1 at. The company, remember, enjoys significantly higher EBITDA margins compared to peers, especially if you look at names like L&T. L&T just came out with its numbers last week. EBITDA margins of the core P&M business in the range of 7 to 8, 9%. But this is well over 11%. And the company says that they expect to go ahead and maintain EBITDA margins in the range of almost over 11%. On the back of that, the stock started today on a slightly lower note, but it has seen quite a bit of an intraday recovery post a management commentary, quite strong management commentary as far as the order book positioning is concerned.
Okay, all right. That is Afcon's infra, but unlike the other listings that we have seen recently, it's a market texture as well, which is leading to that fall in the stock price. But it's important to discuss markets today, the fundamentals going ahead as well. Deepak Jasani of HDFC Securities is joining us now. Mr. Jasani, good morning. Thank you for joining in. Well, do you think we are in the last leg of the correction that we have been seeing, or there is more to go? How have you looked at the earnings so far this quarter?
Good morning. Now, the downtrend in the market today is a little bit sharper than what most would expect. But I think there are a few reasons for it. One is that over the last few days, chances of Harris in the US elections have gone up. So some people consider it as not very favorable for India. Secondly, the results season is more than halfway through. So going through whatever results have come in, I think we will end up with a 15 to 17 quarter low growth in the earnings, mainly driven by commodities, metals, cement, oil and gas, etc. So in that sense, there is a disappointment in terms of results. There was not very big build up ahead of the results, but I think the actual results are slightly worse than expected, especially the broader market results. So those things have combined together to sort of create some sort of a nervousness in other markets, and that is why we are seeing this weakness. Now, this could continue till the US elections are out of the way. So maybe a few more days of soft markets going ahead. Once the US election results are out, I think markets will bounce up. To what extent will depend on the outcome, and by that time we will have the US Fed meeting outcome also in place.
Deepak, thanks. You make a good point over there in terms of expecting further earnings cuts. But to take your mind to one specific sector today that's seeing quite a bit of a sell-off, that's the auto pack. Auto pack Q2, you've seen quite a bit of margin moderation coming in, especially when you're comparing it to what the street was building in. And how are you viewing demand at the current point of time? And do you think at this point of time, auto stocks can be looked at?
So we had the auto monthly numbers over the last 1 or 2 days. So basically, the wholesale numbers have been quite good, in line with most expectations. But what is important is to look at the retail auto numbers. That we will know in a couple of days' time as to how much inventory the dealers have been able to offload. And so that will give us an indication. The festive season started a bit subdued, but I think over the last 8 or 10 days, there has been a pickup in auto sales at the retail level. But once we know the actual numbers, we'll have a firmer view on the auto sector. For the moment, I think two-wheelers have been outperforming so far because of the lower base. Now their growth will also sort of moderate, and one will have to sort of refocus on the PV side going forward.
One sector which is an outlier today, Deepak, is this pharma API or the chemical space. At least the chemical space has been under a lot of pressure in the last couple of quarters. This time, some of them have reported good numbers. The commentary has been that maybe second half could be better. Do you think this could be the start for a bull run for the chemical space at least, or some of these API plays?
So we are more comfortable with the API space than the chemical space at this point of time. Now, chemicals there has been some sort of a recovery or bottom formation we have seen in the last month or so. But still the uptick in the prices and the offtake is yet to be observed or noticed. So that may take some more time, I think. We will have to watch out as to how the Chinese stimulus measures result in reinvigorating their economy. So in case Chinese economy starts reviving fast, then probably chemical sector can have a look. One can have a look at the chemicals companies also. But till that time, I think between the two, I think we will prefer the API ones.
Okay, Deepak, and what is your view on the FMCG space, consumer staples at this point of time? Names like Dabur, etc., reported a very weak quarter. Do you think this particular inventory correction, the company took is a one-off, or do you think there is some more pain as far as the FMCG names are concerned?
So as far as FMCG companies or their sales are concerned, there are a few things to consider. One is that the urban consumer is becoming much more health conscious in terms of the ingredients which are being used in the products. But the large companies are still not responsive enough to the demands of the urban consumers. And the urban consumers have a lot of choices in terms of availability of regional brands which are available online. So there is the young generation is willing to switch. There is not much of a brand loyalty. So that the larger companies will have to sort of realize that, and we can cater more towards better, healthier products. And so till they do that, I think they will see volume growth being very muted. And we have the urban demand has been a little sluggish in the last quarter, but this is one of the reasons that the regional brands are gaining at the cost of the national brands. Rural recovery, there are initial signs of rural recovery. If we see momentum there, then probably this FMCG stocks can be looked at favorably.
And what about consumer durables, names like Voltas, Havells? Do you like any of them, especially the AC makers?
See, the peak season for ACs is behind us, but at the same time, AC consumption continues through the year as far as the replacement demand is concerned or new real estate properties are concerned. So in that sense, having said that, I think the valuations of the consumer durables currently don't support a large buying interest.
For the sake of ourselves, at least, we shouldn't be using ACs in November and December. It's different for the companies that sell it, of course, Deepak. By the way, some of these stocks are at the day's low as we speak. IOC, Vodafone Idea, Sun Pharma has further seen a cut there. There's BHEL, BPCL, AB Fashion and Retail. All these stocks are lower in trade as we speak. Deepak, coming on the oil marketing companies, there was a phase where the street liked them for a long period of time, and now Q2 earnings have been very weak. There have been LPG under recoveries, there have been marketing losses. Now we are heading into state elections, but of course there have been no cut in fuel prices as yet. How do you look at this entire space? What about valuations?
See, the oil marketing companies are typically deep value stocks normally in a normal scenario. Currently, we have seen a large brokerage house coming out with a negative view on oil marketing companies a couple of days back. And that is why some of the sell-off today may be attributable to that. Otherwise, I think when the crude prices are on the way down or they are subdued, even the refining margins stay low. So till the refining margins go up and the marketing margins remain protected, I think the buying interest in these stocks will remain limited. Of course, these stocks they give good dividend yield. So in that sense, for people who are not looking at growth, they will be safe havens for the time being in case the markets continues their fall. But otherwise, I think they will have to fall to a much attractive level for people to sort of look at them very closely.
Thank you so much, Deepak, for joining us and giving us your view on a whole host of sectoral indices. Markets continue to remain under quite a bit of pressure. But one stock that's doing quite well today is Azad Engineering. The company signed a long-term contract worth 700 crore rupees with Mitsubishi Heavy Industries to supply of highly engineered and complex rotating and stationary airfoils for advanced gas and thermal power turbine engines. Whole-time director at Azad Engineering, Vishnu Malpani, explains more about the recent venture. As we slip into a short break, let's listen in.
And if you remember, I don't know if the street took a note of it or you took a note of it. In 2020, 12 is when we started. 2022, Mitsubishi laid a foundation stone for a dedicated plant for them. So this is an attempt for from them to increase our wallet share with them. So we are a growth supplier with them. Today we hold about 1%. We are slowly going to increase it to 1 to 2 to 5% slowly. And this contract is a testament to them blocking our capacity and then blocking our capacity for the future. So for Mitsubishi today, you should look at it as, Azad is probably the best cost supplier and also in terms of quality. So we are providing those solutions to them, and that is why this contract is more like, tying down our capacity for the next 5 years to be dedicated to them. So I think, our order book has grown significantly since our IPO. If you remember, around the IPO, we were at about 2,000 odd crores. And, if you net off the Honeywell and the contract with Mitsubishi, we were at about 3,200 crores roughly. So, this would add another 1,200, 1,300 crores in addition to what we have. So we are looking at about an order book of upwards of 4,000 crores as we speak right now.
I accept your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? Watch CNBC-TV18 for the best newsmakers and the sharpest analysis.
We bring you all the action live right here on CNBC-TV18.
CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of
Welcome back. Let's talk about the big global event as we enter the final stretch of the US presidential elections. Our colleague Parikshit Luthra is joining in with the latest updates. Parikshit.
With hours to go for the final voting in US elections, the race between Kamala Harris and Donald Trump is far too narrow and too close to call. More than 75 million Americans have already cast their ballot in early voting. Both leaders are now campaigning in the battleground states to appeal to the remaining undecided voters. Harris at 49 percentage points is just 1 point ahead of Donald Trump in overall national polls. Neither of the candidates has enough leads to be able to claim 270 electoral votes. There is still a chance that Trump may win this election. In 2016 and 2020, he had outperformed the opinion polls in swing states. Harris is leading in Michigan and Wisconsin, Trump in Nevada, Georgia and Arizona, but these are razor-thin margins. Harris and Trump are tied in Pennsylvania. The Trump campaign and the Republicans are clearly worried about women voters who overwhelmingly support Kamala Harris. Early voting data shows women have outnumbered men in key swing states in voting, and this could be something that may tip the scales in favor of Kamala Harris. Now, the widening gender gap in voting is a big alarm for Republicans. Addressing a campaign rally, Trump left a dark message saying that he shouldn't have left the White House after losing in 2020. The Republican candidate also said that he didn't mind if someone had to shoot through the fake news to get to him. Now, this is something that is making headlines in US media. Kamala Harris, on the other hand, has appealed to voters, saying they must act to decide the fate of their nation. You can also catch our coverage on the US elections later today, 6 p.m. onwards, where we will be joined by a host of analysts.
Well, time now for a short break. We'll get you more on the markets on the other side.
To becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back to Trading Hour. Well, even as we speak, the selling pressure has intensified, especially when you're looking at the NSE Mid-Cap Index and the NSE Small Cap Index. The NSE Mid-Cap Index is now down almost 1.5%. The Small Cap Index is down well over 2% in the session today. Well, a few stocks that have started hitting session lows. First on the list is MCX. Remember, MCX last day saw an intraday fall of close to 7%, a brief recovery, But today, the stock is down almost 4% and quite a big sell-off, especially in the last 10-12 days as far as MCX is concerned. The second stock on the radar that suddenly hit a day's low is actually Apollo Hospitals, down nearly 2%. And the other set of stocks that are seeing some selling pressure coming in, something that did reasonably well in the week gone by, is the pharma pack. Sun Pharma, like we mentioned, news flow has remained quite weak over there in terms of important launch getting delayed or at this point of time actually halted. And along with that, some of the other names like Lupin 2 have seen some selling pressure emerge at, in the last half hour or so. But moving on, remember, we'll shift our focus back to the market. Market veterans Ramesh Damani, Samir Arora and Atul Suri share the big themes to watch out for and where the market is headed in the new Samvat.
I think the two themes that we're betting, not necessarily from Samvat to Samvat, but over the next 3 to 5 years. The first theme is this, what I've said previously, the digital public infrastructure. India has leapfrogged a generation of infrastructure from analog to digital, from highways to PAN card issuance. So I think there are maybe half a dozen companies and they're still trading at fairly modest market caps. Not necessarily price to earnings ratio, but modest caps. And compared to the opportunity that I see ahead for them, these companies are buy. So whether it could be eKYC, it could be PAN, it could be Aadhaar, or ONDC, enormous opportunities in front of these companies. I think some of these companies will prove to be great winners over the next 3 to 5 years. So I certainly would invest in them, but not for 1 year, but over 3 to 5 years. The other sector that surprised me myself, which I have bought, is the pharma space. And we're all familiar with the Dr. Reddy's and the DVs of the world, which are outstanding leading companies in this sector. But we've looked at the smaller mid-cap companies which are developing intellectual property from things like obesity vaccines, dengue vaccines, obesity pills, dengue vaccines, antibiotics, new range of antibiotics. I think there are a lot of rich pickings surprisingly in that sector because for the first time these Indian companies are doing genuine, serious intellectual property. I think the market will start recognizing and rewarding them over the next 3 months. So marginally, wherever I put the money for the things that I've sold, I put it in DPI and I put it into the pharma space. You've had a pretty dull quarter of results, so it has worried me. But my feeling is that is a more transitory effect. I think the government expenditure has come down, but it will start picking up again in the next quarter, and that will act as a stimulus for the economy. And as someone said, that basically if they change the GST rates downward in some critical issues, that will also act as a stimulus. So I'm hopeful that after 2 or 3 months of a very heady rise, the market will again recover maybe in the first quarter of next year.
If you look at last 3-year returns, Nifty is up less than 12% per annum. You can do it from today back 3 years, or maybe 12 point something. And the 500 is up 15 point something per annum for 3 years. In those 3 years, 4 years of 2004 to 7, the 500 index was up something like 40% per annum for 3-4 years. So this bull run is not like that. But the one thing that has spoiled it a little bit is that the results of this quarter are pretty mediocre. And therefore, I think, depends on what you call a bull run. We call a bull run as somewhere in the range of our history, which is mid-teen, more than debt, more than other things, but you're not going to make 20-25% with these kind of results.
If you look before the election results, the top was around 23,000, 23,200. Then we fell at 8-9%. So I feel that just that pre-election level will work out as a very big base. This is around 23,200, which is what, about 3 to 4% lower than here. So I feel that that's going to actually be a very big solid base. The market is giving you that kind of correction. There is no structural issue. Yes, things get mixed. There has to be a reality check. Excesses get done, and those are getting corrected. So I don't see any structural issue that is a problem with the market. Corrections, it's just par for the course. I still think that before next Diwali, well before next Diwali, we would hit a new high. We would push more towards the 29,000 to 30,000 level. Again, I'm not giving any targets, but what I'm trying to say is that we, as an investor, I do see the next 12 months to continue to be rewarding.
All right, that is some market opinion coming in. Talking about markets, steady so far on the Nifty. We still see a cut of almost around 426 points, but it has slightly recovered. It's stabilizing at that 23,876 mark. If we talk about the mid caps, the big cut continues, though it has come off, from the lows of the day at least, 816 points there. The advanced decline ratio is in favor of declines, comfortably there for around 379 stocks on the advancing side on the NSE. There are around 2,100 stocks which are declining currently, so big gap there. So we'll keep tracking all the market action for you, but for now we'll take your leave on this edition of Trading Hour. Stay tuned, Halftime Report is up next.
Big slide on Dalal Street as the event-heavy post-Diwali week gets underway. The Nifty sees a 450-point fall as the index breaks below key levels. Selling seen across all sectors. Mid-cap index slides over 1.5%.
Auto stocks see heavy selling despite better than expected auto sales numbers coming in for the month of October. M&M, Hero MotoCorp and TVS along with Bajaj Auto miss the mark, with domestic sales falling 8% in the last 1 month.
Sun Pharma is among the top Nifty losers as the New Jersey District Court prevents it from launching an alopecia drug. Brokerages expect a 1 to 5% impact on earnings over the next 2 years.
Azad Engineering manages to rise in a falling market after bagging a 700 crore order from Mitsubishi. Welspun Corp2 receives 2 large US orders worth nearly 1,300 crores, whereas Premier Energies bags orders worth 560 crores for solar modules and cells.
And the Shapoorji Pallonji Group infrastructure firm Afcons makes a tepid debut on the street. Shares list at an 8% discount compared to its issue price of 463 rupees.
Hello and welcome. You're watching us here on Halftime Report. I'm Mangala Malu. With me, Hormas Fatakia. We come back after a holiday week for our markets post-Diwali festivities, but no real change as far as the course of the market is concerned. Heavy selling continues for the frontline indices. Well, Hormaz, one was hoping that, November sees some bit of respite for the markets. It wasn't the case to be. We opened slightly in the red, but thereafter the selling exacerbated. And at one point we were down almost 500 points. Though from the lows of today, we've seen some bit of recovery. But, on a day where the Nifty is down almost 400 points, even some recovery is at best just a minute up move that we're seeing from the lows. Market breadth firmly in favor of declines. 2,100 stocks declining for about 400 stocks which are advancing. So the crisscross lines come up for you. They haven't crissed or crossed. In fact, the red line is firmly above the green line for most part of today's trading session as well. With this, a lot of the stocks have seen a sharp correction as well. Hormaz, one would have thought that maybe there could be some respite, especially after a 2,000-point decline in October. But turns out that November series is starting off with around a 400-point decline already.
With plenty of global cues to watch out for, right? It's just it's a cautious tone. It's a cautious tone. It's a sign of worry that the markets have plenty of uncertainties that you need to keep an eye out for because of the US elections, the Fed meeting, China, OPEC, oil, all of them playing a role in today's fall. And the Nifty, a 100-point recovery from the lows of the day, but still trading with losses of 400 points. The Nifty Bank as well, continuing to trade with losses of over 1%, still managing to hold on to those 51,000 levels, though on the downside. Among the top losers, well, the PSU Bank Index is the top loser today. Well, it was among the top gainers last week, but leading the fall in today's trading session, as are metal stocks, 2% lower on the metals index as well. And the broader markets, of course, the mid-cap and the small-cap index. The small-cap index is down 2%, and the mid-cap index trading with losses of at least 1.5%. But a sector that has been in focus through the start of the month and in today's session as well is the auto index, and that is after the back of sales numbers that have been a mixed bag in the month of October. And Sudarshan is joining in with the latest updates from the October auto sales numbers. Sudarshan.
Auto sales for the month of October have come in largely better than estimates, with two-wheeler domestic wholesale volumes were up 17% and PV volumes were up 2% year-on-year. For festive season as well, two-wheeler has seen a growth of 12% and passenger vehicles has seen a growth of 8% year-on-year. Starting with M&M, both auto and tractor segments have done well. Auto segment was led by SUVs, which saw a growth of more than 20%, and for tractor segment, good monsoon has helped the company to report a healthy growth. For Tata Motors, sales were higher than estimates. We were expecting a decline in sales, but company has reported sales for the month of October which were largely unchanged year on year. Even JLR October retail sales for US has come in better than estimates and growth was more than 20%. For TVS Motors, sales were almost in line with estimates. Company has reported motorcycle sales growth of 14% and scooter sales were up 17% year on year. For Eicher Motors, company has reported highest ever monthly sales for Royal Enfield. Total sales have come in at 1.10 lakh units and growth was at 31% year on year. For Hero Motor, here also company has reported highest ever monthly sales, and even on Dhanteras Day, company has reported a growth that was in double digits and total sales were up 18% at 6.79 lakh units. For Bajaj Auto, overall sales have come in lower than estimates and total sales were dragged by domestic segment while exports have supported overall sales. Lastly, for Ashok Leyland, overall sales were below estimates except bus segment. All the segments have seen a dip and total sales were down 9% year-on-year. So overall sales were largely better than estimates, and if we talk segment wise, two-wheeler segment has done much better than all the other segments.
All right, Sudarshan, thanks a lot for that. Two-wheeler segment has done much better than all the other segments, but perhaps that was in the price, and as a result of which we've seen a sharp sell-off across all the auto stocks, two-wheelers in particular. And one of them is Bajaj Auto. We spoke with Rakesh Sharma, who's the executive director, earlier today. Let's hear out some of the key excerpts of that conversation that we had with him this morning.
It has been a smashing festive, though it started a little bit tentatively before the Shera. But by the time festive actually closed, it's been, I think, the best ever festive after COVID. At least I can say that from our point of view. Our sales have been, overall sales has been double digit. Our area of focus, which is the top half of the industry, which is the 125cc plus segment, has grown upwards of 20%. We have sold over 200,000 Pulsars, which is like way, way above the last high which we had achieved. And even three-wheelers has had a smashing month with about 56,000 units of retail. And I think the previous festive was 45 or 46,000. So a very big difference. The area of our focus has grown upwards of 20% in retail terms, which is the 125cc plus segment. EV two-wheelers is a triple-digit growth. I mean, it's almost doubled, more than doubled. Retails have more than doubled over the last festive. And three-wheelers has also, grown at about 13-14%.
All right, that's some commentary coming in from the management of Bajaj Auto. But among the few nifty gainers today, one of them is M&M, after brokerage firms like Goldman Sachs and Kotak Institutional Equities view, positive, or both of them have positive commentary on the stock itself. It's off the morning highs, but still holding on with a gain of 1.5%, which is strong considering the 400-point decline that we've seen on the Nifty itself. And as we speak, in fact, our ticker team alerts us that the rupee is at a record low as well, having crossed past that 84 mark, 84.1 right now. So we'll keep an eye out on that one. Just before we go back to Sudarshan on M&M, pull up the rupee, the intraday chart of the dollar rupee. It's moved to a record low. It has been, inching towards record lows over the last few trading sessions, and also a large part of that could be attributed to the tremendous FII selling that we've been seeing. But right now, as we speak, it's moved past that 84.1 mark as well. At some point, it will have a positive effect on the IT stocks, but that effect would be limited because the bigger point right now are orders coming in from the US and the US macros improving as well. So we'll just keep an eye out on this data point as we move forward as well when it comes to the macros. But let's get back to the micros. M&M currently holding with a gain of 1.6%. Sudarshan joins in with the brokerage calls on M&M. Sudarshan.
Brokerages remain positive on M&M after company has released sales for the month of October, and those sales were much better than estimates on both the front auto as well as tractor. Goldman Sachs has a buy call with a target of Rs 3,600 per share. It has added the stock to Asia Pacific conviction list and says SUV order backlog and upcoming battery electric vehicle will aid the overall growth, and farm equipment is entering a phase of improving underlying market dynamics. It expects 20%, 100% EBIT and free cash flow CAGR over FY 25-27. Kotak Institutional Equities has upgraded the stock to buy and target is 3,150 per share. It says company will continue to outperform the industry growth, and tractor segment is expected to witness uptick in S2 of FY 25. It believes stock is trading at an attractive valuation. So both Goldman Sachs and Kotak Institutional Equities remain positive on M&M.
Sudarshan, thanks a lot for that. That was our focus on the auto space. Incidentally, the Nifty Auto Index made a top on the September 27, which is the day that Nifty also made a top. And since then, the index is down over 16% from those levels. Time for a short break. On the other side, we come back with a quick explainer on the process of how the US president is elected. Stay tuned. Back on the other side.
I accept your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
On the street, they say, "Ye dil mange more," right? Now that you're listing, you also have a listed peer. With the trajectory that we've seen on them, on a lot of the parameters, they're above, what Swiggy is right now, which is not to say that you're any less. It's just that you're at different stages of growth in your life.
Correct. I think, look, there's a lot of context. We each have our own context, and we are in very, very exciting categories. And our strategy, our capital allocation, everything's going to be a function of our excitement and what we can go after in each of these. Like Rahul mentioned, we've demonstrated the profitability in the food business. We feel good about its future going forward. As for quick commerce, I think it's in a once in a lifetime category, and I think we are seeing consumption patterns change for consumers, and there's so much to be done. So our endeavor will be to make sure that we do the fullest of our ability to make sure that we grow and serve customers well and make sure that everything comes together nicely.
But for quick commerce, you recently said that the peak of the investment is behind you, but
right.
You're still not a contribution margin positive either. So, I mean, what is the trajectory there for quick commerce? Because even for your peer, that has been the growth driver, right? So, how are you looking at the quick commerce business for you in terms of being? Is it also going to be the growth driver for you? And sort of trying to get a sense of the path of profitability on that front also.
See, maybe I'll take this. I think on quick commerce, what really amazes us is the way consumers are reimagining, things, or what can be delivered to them. So it's almost like every quarter we have to recalibrate around, what.
Back with us here on Halftime Report, a marginal recovery from the lows of the day. Pull up the Nifty IT though. That index has seen a recovery from the lows of the day. Mangalam was just highlighting before we went into the break that the rupee has hit a record low, and it is showing up on the index as well. A very, very sharp recovery, almost 400 points from the lows of the day is a recovery seen in the Nifty IT index. But among the other sectoral indices though, it's not such a good picture. The PSU Bank index continues to trade with losses of around 2.5%. But pull up some of the movers though on the Nifty. As Mahindra and Mahindra, we just spoke about that. Tech Mahindra is though the top gainer on the Nifty in today's trading session, as we saw the recovery in the IT names. HCL Tech has also made its way to the list of gainers, and along with that are stocks like Cipla and of course Dr. Reddy's trading with modest gains. What is not doing well though is Auto, Bajaj Auto, Hero MotoCorp, the top two losers. BPCL and the other oil marketing companies also seeing a bit of an impact due to the rise in crude prices and the uncertainty surrounding OPEC. But the big event of the week, the final stretch of the US presidential elections. Prashant is joining in now with a quick explainer on the process of how the US president is elected. Prashant.
Well, thanks very much for that. Toss-up, dead heat, coin toss, too close to call. You can all use all these and more adjectives to describe the US election. But the fact is, it is right in front of us, and we'll have to deal with what comes our way. We should have a new US president in the next 48 hours. So let's take a couple of minutes and talk about how the US election process itself works. First up, the basic question: how is a US president elected? Well, eligible voters will elect the next US president, vice president, all 435 House of Representative seats and 34 out of the 100 Senate seats and more. The next president, either former President Donald Trump or Vice President Kamala Harris, will be determined by what is known as the Electoral College. 538 electors among 50 states and DC, where a majority of 270 or more voters is needed. Now remember, the electoral vote is awarded on the basis of the popular vote in each state, and this can differ from the national overall popular vote. Basically, each state has a certain number of electoral votes, and depending on who wins that state vote, all the electoral votes of that state go to the winning candidate. In that sense, it is a bit of a winner-takes-all situation, state by state. This is true for 48 out of the 50 states, except 2 states, that is Maine and Nebraska, which follow a system of proportional representation. So basically, the way the US election system is set up, a candidate could win the overall popular national vote, but still lose the electoral college and hence lose the election. Okay, now let's talk about the lay of the land, right? I mean, the 538 electoral seats, but there are some, both candidates start at different levels. Historically, some US states like California have always voted for Democrats and some have always voted for Republicans. Assuming that this stays the same, that these states which have historically voted one way or the other vote the same way, Republicans can count on 219 electoral votes and Democrats can count on 226 electoral votes. This is what I call safe votes, provided that historical voting patterns continue. But you need 270 or more to win the election. So Republicans then need 51 more seats, electoral votes to reach 270. Democrats need 44 more to reach 270 electoral votes and hence win the election. Now, because of the safe seats for both Republicans and Democrats, which we will assume will vote the same way, the swing states come into play. These are the states where voters are undecided and have swung both Republican and Democrat in previous elections. There are 7 such swing states which are in focus, with Pennsylvania the most important because it's got the largest number of electoral votes within the swing states. The other 6 states are Michigan, Arizona, Nevada, North Carolina, Georgia and Wisconsin. This is also the closest election in a long time. Trump is leading the national polls by 0.3 points and is either tied or very marginally ahead across all major swing states. The last 2 elections were also very close. Just how close? I mean, I think the numbers will tell you. In 2020, just 43,000 votes across 3 states, that is 0.02% of the total national vote, determined the winner. I mean, if you go back to 2016 election, it was 77,000 votes. That is 0.05% of the national vote, which determined the winner in that election. Could this one be even closer? I mean, I think we'll have to wait and find out. Lastly, we come to when will we know the results? And I think there is a fair bit of confusion around this as well. Remember, the Associated Press, AP, and most other news sources did not so-called call the election, the 2020 US election, until Saturday, November 7th, 4 days after the election day. With this election also being very close, could we see a repeat? Well, sure we could. But do remember that a delayed result should not prevent financial markets from reflecting the likely election outcome, on the election night or early the next morning, which is going to be Wednesday morning. So let's get to specifics in terms of timing. By when do we sort of see some of this stuff come by? And I've sort of converted all timings to our time here. By Wednesday morning, 6:30 a.m. our time, majority of polling stations in the US should close. Remember that news organizations cannot make projections until polls close. Prior presidential elections have been called by our time, 9:50 a.m. That will be Wednesday morning, 9:50 for us. There are exceptions to this. This includes year 2000, 2016 and 2020. In the first 2, which is year 2000 and 2016, the Electoral College winner was not the popular vote winner. And that is the reason why you had a delayed sort of results coming through. Just to sort of, conclude, be prepared for an exciting Tuesday night. If you plan to follow the US elections live, stay up the night and track it, or simply plan to get up a little extra early, that is on Wednesday morning, to catch our programming on US election verdict and, of course, the market implications. Back to you.
Right, Prashant, very interesting one out there. For all those who are wondering what exactly and how exactly does the Trump versus Harris debate and the election, the fight, pan out, you don't have to wait for too long. 48 hours is when we get to who the next US president would be. Thanks a lot for that, Prashant. We'll take a short break, but not shift focus away from markets. In fact, Ashish Kyal joins in with some trading strategies, the view on the frontline indices after this very short break that we take.
That we have to be there, what are the number of SKUs we have to launch, and there's a recalibration happening, growth is accelerating. So there'll be a certain amount of, say, new store additions that we'll continue to do, The old stores continue to mature well, which means that they become profitable over a period of time, and the new stores come in because consumers want a lot more.
Right.
So I think it's a recalibration of our overall growth trajectory in line with the demonstrated path to the contribution margin that we continue to will demonstrate.
Welcome back. You're watching us here on Halftime Report. It's a big cut that we're seeing across all the frontline indices. So let's get in the F&O update at midday itself. And this is, for all practical purposes, the first day of the November series itself. The Nifty is down almost 400 points at one point, down almost 500 points. The Nifty Bank and the mid-cap index have it a little worse with a cut of almost 1.5% for the mid-cap index itself. With this cut, the Nifty is now down 9% from its all-time high. Nifty Bank down 6%. And the mid-cap index itself, which at one point was down by almost 10% from its 52-week high, is now corrected about 8.5%. There are two factors which are bogging the market down. First are the auto stocks. Tata Motors, Bajaj Auto, Hero Moto, Maruti, all of them down anywhere between 20 to 30%. And when we talk about swing stakes in the US election, look at swing stocks in our market itself. And one of them definitely has to be Reliance. The stock is now down 20% from its 52-week high. So for the markets to move higher from here on, this has to be one of those stocks which has to come back in style for the Nifty to see any recovery from the lows. The other factor that we'll be watching out for are what are these large participants going to do. At the start of the series, the FIs are just 23% long in index futures. Remember, at the start of the previous series, they were net long on the index futures by the tune of almost 70-80%. From there, they've cut those longs and now at 23. On the other hand, clients, the HNI, retail clients, etc., all of them are 65% long. So do the FIs cover their shorts first or do the clients cover their long first? Are the things that we'll be watching out for our market going forward. Importantly, let's look at a couple of these active options for this week. Remember, this is an event-heavy week, so 24,000 call has a premium of almost 175 rupees, telling you levels upwards of 24,000, 24,200 thereabouts. Could see some bit of supply coming in for our markets. 23,800 call writers are still fairly active, 12 lakh shares and a lot of open interest build up out there, even for a premium of 300 rupees, telling you that resistance starts all the way up from 24,100 to 24,200 itself. But at the lower level, we will see some sort of support coming in at the 10% fall from the top. That's typically an important support level to watch out for, 23,650. If not that, then we have the 200-day moving average at 23,450 itself. You'll keep an eye out on those, but also watch out for a bunch of stocks where there is a fair amount of short build-up. PNB, one of them, RBL Bank, the other one, and Hero Moto Corp, which is among the top Nifty losers with a lot of short build-up down about 5.5%.
Important levels to watch on the downside now. Mangalam, thanks a lot for that. Let's welcome in Ashish Kayal of Wave Strategy Advisors, who's joining us now. Ashish, good afternoon. Thank you for joining in. How important does 23,800 now become on the downside for the Nifty? What are the levels that you are watching out for? And couple that up with your stock recommendations as well.
Hi, afternoon to you and all the viewers. And with the start of the new series, we can clearly see there is pressure definitely building up here. Nifty in past 12 trading sessions have not closed above prior trading prior daily high. That's one technique that any trader can use to understand that the trend is still bearish. If you look at the monthly charts on Nifty, for the first time since the rally started from 16,800 odd levels, we have closed below the prior month's low, making a lower high and a lower low formation. That's again a sign that the monthly charts have turned bearish. Weekly is bearish and daily is also on the downside. Having said that, I think any pullback, there is a possibility of a pullback because we are oversold. Any pullback towards the level of around 23,980 can be an opportunity to sell again, and we can aim for the target around 23,740, which happens to be a GAN level. So the overall tone for the index is going to be sell on rise. And being the event week, there can be some challenges, but the volatility will be high. But still, it will be sell on rise unless and until we close above the prior day's high. That's a simple strategy. Having said that, the stock that looks to be bullish is Godfrey Philip. We can clearly see a double bottom formation on the daily time frame chart. The stock has managed to bounce back from that 6260 levels and is now moving back above that mid Bollinger Band. So the overall trend for Godfrey Philip in this kind of a market is still bullish, and we can aim for the target of around 7,500 or higher over here. And on the downside, one can maintain a stop loss of 6,600 levels. And the other stock which can be on the buyer's radar is PPL Pharma. The stock has rallied sharply over past few days, showing short-term correction today, but I think that's an opportunity to buy this stock. We can expect PPL Pharma to reach towards the level of around 300 on the upside over short term, and use any dips to buy further as long as the support around 260 remains intact.
Right. Just one question before we let you go. You said Godfrey Phillips is looking good. I'm also looking at a couple of other stocks which are actually gaining with a fair amount of volumes. Shoppers Stop is one of them, which after having corrected a fair bit from the highs is coming back up around 6% as we speak. The other one is Gillette. Gillette is one stock which, even in a weak market, is now at a fresh 52-week high. Remember, in the last 7 days or so, Gillette has actually rallied about 25%. Do you have a call on these?
Yes, I think Shoppers Stop, it's better to avoid because, Mangalam, we saw a very sharp decline and it's up by 6.5%. We need to see if it can sustain and close at these levels, because this 730 is an immediate hurdle for Shoppers Stop. If it can manage to close above that 730, which is the mid Bollinger area, we can expect a rally further to 780 on the upside. But Gillette looks to be very appealing. Many traders have the mindset that, or investors have mindset that since the stock is at 52-week high, they avoid. But it's in relative outperformance. If you look at Gillette, the stock is outperforming the broader market despite of such a huge sell-off. And that's a very strong relative strength we can see here. So I would be bullish on Gillette. I would use any dip on Gillette towards that 10,180 mark as an opportunity to enter, aiming for the targets of around 12,500 on the upside. So Gillette looks to be positive for me.
All right, Ashish, thank you so much for joining in, sharing with us your views on the index and specific stocks as well. Time for a short break. Up next, the management of Biocon joins us on the other side. Stay tuned.
Well, cheers to the festive season that's raising the bar literally. India's Alcobev makers are toasting to the record sales and new launches, hoping to make this the most.
Welcome back onto the management of Biocon now, where our colleague Vinny Motiwala caught up with the company's group CEO Peter Baines and began by asking him about the quarter gone by and how they see the growth going forward. Listening.
The first half has been steady. It's come in line with our expectations. And if we look at Q2 on a like-for-like basis, operating revenues up 8%, but that's reflecting a mix wherein the biologics division, our biosimilars platform, has been growing like-for-like at 19%. and that's been offsetting degrowth marginally in Syngene at 2% and 8% in generics. But as we've said, we expect 25 to be a year of two halves, so a relatively subdued first half, but transitioning to accelerating growth in the second half. Drivers for that transition include the sustained momentum that we're seeing in our biosimilars business, as I said, growing 19% on a like-for-like basis in Q2 and seeing that momentum carrying forward. Clear visibility now of a return to growth in Syngene, where despite it on a year-to-year basis, a degrowth on a quarterly basis plus 13%, and clear visibility of recovery in discovery and research services and momentum in the large molecule business. And in our generics business, where we've been facing headwinds in the first half, we've now got line of sight of several important product launches in the second half, including our first launch of GLP liraglutide generic in the United Kingdom at the end of this calendar year, and additional important launches of drugs in the United States in the fourth quarter. All of these will impact momentum and turn the shift into a more accelerating growth trajectory.
Right, Peter, I just want to follow up on that are we watching out for, given those plant clearance issues, are you quite positive on that front? Or if that doesn't happen, then could we see a bit of a glitch coming in?
So, I mean, we've been working with the agency during the year. We've submitted all the necessary CAPAs and documentation. We're continuing a dialogue with the agency with an expectation that we'll get readouts from them on both the Bangalore facility before the end of this calendar year and the Malaysia facility in early calendar 25. We can't prejudge the agency. We're working with them very constructively, and we're looking forward to those outcomes, which will have important implications to our ability to launch aspart and bevacizumab in particular.
Okay, sure. Peter, what everyone is also wondering about is the net debt. When you look at it in this quarter, $1.4 billion is what the net debt, consolidated debt level is at. I want to understand in terms of what is the strategy there in terms of capital structure, strategic plan to power this debt going forward. And obviously you have refinanced some of your...
The consolidated bank debt is actually $1.2 billion, and that's been, brought down over the last year. It principally relates to the acquisition debt of Viatris, but we pared that down $250 million during the course of last year, and we intend to bring it further down during the remaining course of this year. We've also restructured the debt very significantly with the issuance of a US dollar-denominated bond, now listed on the Singapore Exchange. That was $800 million. And that's a strategic restructuring of the finances, providing us with mid-term stability, pushing out repayments that were due on the underlying debt out to 2030, giving us more financial flexibility to invest in the growth story that's emerging, and also actually extending, our network of investors through, through the global placing that we achieve. We've also refinanced $300 million worth of term debt at a variable rate that's favorable to the previous rate and allows us the ability to pare the debt down further. So a lot of work's been going on in debt. We remain committed to bringing it down, having now fundamentally restructured it.
Absolutely, a lot of work that has already been done, and it's interesting that there's a lot more still left to do. But so to manage the liquidity side, would the company be considering any corporate actions this time, or maybe any stake sale from any of the other side of the businesses, subsidiary side, anything on that front?
So we have a number of levers and opportunities, to look at with which we can bring the debt further down. And of course, as we've been doing in the course of the last year, we continue to examine them, and we will take further action before the end of the year. But it would be, inappropriate for me to say what we're going to do. We're monitoring the situation. We can look at additional equity. We can look at additional capital and debt, and of course we can potentially look at disposals. But those are not the priorities. I mean, we have a number of options. We'll choose the right one at the right time.
Sure. Peter, let's shift focus and talk about the generics business, right? You did highlight a bit of a pressure that came in this time, and your presentation also indicates mainly it was due to the pricing pressure that was there, demand contraction, and some bit of the planned shutdown of the API facility. Q3, second half of the year, what are we expecting from the generics business? Do you think the pricing pressure that we are seeing, that is now behind us?
I think we expect pricing pressure to remain, maybe not as acute as it has been in the first half, but more importantly, we've been preparing for strategically important launches. The highest priority being the liraglutide launch in the United Kingdom, which is the first foray into the GLP-1 market, and we're well placed there to launch in November. And additional launches of important injectable drugs like daptomycin in the United States. So really, we see the second half recovery in the generics business being driven by new product launches.
All right, we take that point. Thanks a lot for that. That's about Biocon, down about 2% in today's trading session. Post their numbers has seen a bit of a recovery from the lows, just like the markets. But as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year. It's the CNBC-TV18 Global Leadership Summit. We bring together visionary policymakers. We have the Finance Minister Nirmala Sitharaman. We also have the RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra's Uday Kotak, and trailblazing startup founders. And this is where the roadmap for India's next 25 years of growth and global leadership will be charted. You don't want to miss this. Welcome back. It's festive season and a lot of consumption conversation. In an exclusive, I caught up with the MD of United Breweries, Vivek Gupta, after he finished almost a year in the organization at the top. The details of growth plans along with the company's steps to address regulatory challenges and their operational performance is what Vivek laid out. Let's listen in to parts of that conversation.
I would say that over the last few months, we have done detailed consumer work to really understand what are the needs of consumer.
Right.
And that's where all our innovation is based on a consumer insight. Similarly, Amstel Grande is going to be one of our best beer in the premium strong segment. This is one of the beer which is designed for India, but it has international credential. The whole claim is the slowly brewed beer.
How big can it be?
Oh, it can be the biggest premium brand in the category.
So which is the biggest premium brand in the category right now? What is the rough market for that?
Yeah, I would say that the total premium size, premium category is around 17 to 18% of the beer segment to really do that. Our competitors have some of the big brands like Budweiser, Magnum, and
how big would that be according to you, roughly back of the envelope?
Around 35 to 40 million cases.
And this has the potential of being that.
Yeah, this could be a potential. I would say that segment is 35 to 40, but this has a potential over years to be one of the biggest brand in the whole segment.
How many years? Because right now you're just in Mumbai, and I think over the next couple of years you plan to get to 60 to 70% of the country.
It depends on the production footprint and the success and the learnings we get from the first launch.
Right.
There is a registration process, there's a pricing process in the part, there's a local production. But more importantly, we think over the next 4 to 5 years, this would become one of our biggest brand in the premium segment.
Overall market is 17 to 18%. What proportion of your revenues come in from premium, and where would you like to take that?
See, our goal is that we would like the premium to be at least 20% of our business. Currently, it's around 8 to 10% of our business. So we want to double our premium business over the next 2 to 3 years. We are not only accelerating the category growth, but we are also growing within the segment, and we are growing consumers in the premium as well.
Since you're talking about gaining share, could you give us an updated share that you have across major markets, say South, North, East, West, and where are you expecting that to head?
Like we are around 48, 49 share in the total market. But it varies by state. In states we are growing, in some states we are not growing shares.
Karnataka was an issue. You are now back above 50% in Karnataka?
No, we are not yet. Our latest shares are close to 45, 46 in Karnataka.
And we still need to get to 50%?
See, I think, as I said, our number one focus as a company is to be the category maker, not the category taker.
On barley, let's address that first. The prices have been fairly volatile. Do you see some moderation coming in or some stability coming in barley prices right now? And secondly, what is it that you're doing structurally to ensure long-term availability of barley at a relatively more stable price?
One of the big initiatives which I'm really proud of is we are actually working with farmers in Rajasthan, in Haryana, in Punjab, even in UP now, where the barley is getting produced, to actually increase the area which is sown under barley. We're also doing a lot of work with the universities like Punjab Agriculture Universities, ICAR, with some of the professors to really understand, what is the best quality of seeds we can have on barley.
Right.
So in the long term, our plan is to actually have more backward integration, really work with farmers, which really help them.
How much is it right now, and what is your aspiration?
So right now, we work with around 10,000 farmers. Our goal is to get to 50,000 farmers by, in the next 1 year.
In terms of your procurement, how much do those 10,000 farmers contribute? And
so our current procurement is only 8 to 10%, which is coming from locally from those farmers.
Right.
But we also work with other farmers who don't directly work with us only to really procure it. Our 70 to 80% of procurement is local. We still have to import it, 15 to 20% of barley. And this is a huge opportunity for us, because our analysis show that if we put our minds to it, India can be actually the net exporter of barley in years to come.
So you target self-sufficiency in barley by when?
See, our goal is to actually be self-sufficient in next 7 to 8 years. But there is a lot of intent on this area with the government. So that's one key area. But in the short term, I think the commodities will remain volatile. The second big thing you talk about is the glass prices.
Right.
I think for us, the biggest cost element is also the return bottles. And that is something which I really think will make or break the economics for us.
United Breweries there in an exclusive conversation with CNBC-TV18. Time for a short break. Up next, Manisha Gupta joins in with Prabhakar Rao, who's the president of the Indian Sugar and Bioenergies Manufacturers Association. Stay tuned, back on the other side.
on the street they say, ye dil mange more, right? Now that you're listing, you also have a listed peer. With the trajectory that we've seen on them, on a lot of the parameters, they're above, what Swiggy is right now, which is not to say that you're any less. It's just that you're at different stages of growth in your life.
Correct. I think, look, there's a lot of context. We each have our own context, and we are in very, very exciting categories. And our strategy, our capital allocation, everything's going to be a function of our excitement and what we can go after in each of these. Like Rahul mentioned, we've demonstrated the profitability in the food business. We feel good about its future going forward. As for quick commerce, I think it's in a once in a lifetime category, and I think we are seeing consumption patterns change for consumers, and there's so much to be done. So our endeavor will be to make sure that we do the fullest of our ability to make sure that we grow and serve customers well and make sure that everything comes together nicely.
But for quick commerce, you recently said that the peak of the investment is behind you, but
right.
you're still not a contribution margin positive either. So, I mean, what is the trajectory there for quick commerce? Because even for your peer, that has been the growth driver, right? So, how are you looking at the quick commerce business for you in terms of being? Is it also going to be the growth driver for you? And sort of trying to get a sense of the path of profitability on that front also.
See, maybe I'll take this. I think on quick commerce, what really amazes us is the way consumers are reimagining, things, or what can be delivered to them. So it's almost like every quarter we have to recalibrate around, what is the number of categories that we have to be there, what are the number of SKUs we have to launch, and there's a recalibration happening. Growth is accelerating. So there'll be a certain amount of, say, new store additions that we'll continue to do. The old stores continue to mature well, which means that they become profitable over a period of time, and the new stores come in because consumers want a lot more.
Right.
So I think it's a recalibration of our overall growth trajectory in line with the demonstrated path to the contribution margin that we continue to will demonstrate.
Back with us here on Halftime Report. The brief recovery that came into the markets has been very swiftly sold into as we speak. The Nifty now back below 23,900. That briefly reached that 23,950 level as well. But now we are back down to 23,850. We need to keep an eye out on today's low, of course. 23,819 is that level to track. Remember, 23,800 is a very important level to watch out for on the downside for the index. Hero and Bajaj remain the top losers on the index along with BPCL. ONGC has joined the list of losers as well, now down 4%. But pull up Prudent Corporate Advisory Services. That stock is down 16% in today's trading session and is among the top losers within the broader markets. The stock has seen a very sharp move in the last 1 month as well. Was up almost 30% in the last 1 month before today's fall. Now it's down almost 20% as we speak. 21% fall now on Prudent Corporate. And on a year-to-date basis, that stock is up 150%. So some bit of profit booking that has been seen in today's trading session, and a very swift one at that. 21% lower is Prudent Corporate Services. But over to Manisha Gupta now for the Commodity Corner.
Well, thank you so much for that. I'm looking at, we are now inviting Mr. Prabhakar Rao, President of India Sugar and Bioenergy Manufacturers Association, joining us now. Mr. Rao, thank you so much for joining us. And I do remember speaking to you last week when you said that ISMA had written to the government to ensure that there is an increase in sugar MSP, something that has been long in asking. And the second thing is about the ethanol price revision, which we haven't seen coming, even as this is crushing time for the mills right now. So apart from ISMA, we also see other sugar associations, regional associations put out that request to the government, because now we are basically, the crushing season is upon us now. First of all, your sense on what is the status of crushing right now? Because we did believe that UP would have started crushing by now, Karnataka, Maharashtra by mid of November. What is that status to begin with?
Yeah, thank you and good afternoon, Manisha. The crushing season in Maharashtra and Karnataka was planned to start from middle of November. But with these elections on 23rd in Maharashtra, probably there may be some delay in the start of the crushing. And the problem what you mentioned about the MSP fixation and the ethanol price fixation, these issues are also bothering the industry players. Where, as you know, there is a statutory obligations on the industry to pay the cane farmers in 14 days from the day they supply the cane to the factory. So with these uncertainties, the mills are worried on how to make the operations viable. Because, you know, the sugar prices have come down compared to last year because of the excessive buildup of closing stocks over and above the requirement of 2.5 months at the end of the season. We are now sitting on almost 30 lakh tons excess sugar stock. So the prices have fallen because of this excessive buildup of the closing stock. So the mills are a bit worried. This is what is happening in the industry.
Mr. Rao, you said that the sugar prices have seen a decline as compared to previous year. What were the prices last year? Where are they trending right now?
The average price last year around the same time was around 38, whereas this year the average price is around 35.5. So, but if you look at state-wise prices, there is a difference. Maharashtra and Karnataka, the prices are now ranging between 34 and 35. Whereas in UP it is slightly higher, maybe 2 rupees higher, which has been historically so. So that's the situation now.
Mr. Rao, also, what is the cost of production right now? And we do understand that the minimum selling price is way below where the prices are trading right now as well. And what is the ask and calculation from the government in sense of minimum selling price?
Yeah. See, the cost of production of sugar is directly dependent on the FRP of the sugarcane. And the FRP of the sugarcane was enhanced by about 6% this year compared to last year. So while the sugar price has come down by more than 2 rupees, the FRP has increased by about 6%, which directly translates to enhancement of the cost of production by about 2.5 rupees per kg of sugar. So this is a big problem for the industry. The cost of production as calculated by ISMA and the Cooperative Federation together is upwards of 41 rupees a kg at the FRP, at the current FRP of 340 rupees per quintal of sugarcane.
Mr. Rao, the other thing has been about the ethanol price revision, and it should have come in by now. What do you think is leading to this delay?
Yeah, that's something which we are also pondering about. You see, I would like to explain to you the philosophical or the theoretical issue that is actually bothering the industry. See, the sugar industry is actually benefiting about estimated 50 lakh farmers who grow sugarcane. And these farmers, the industry delivers the FRP to the farmers. Almost 100% of the farmers get the benefit of the FRP by virtue of the sugar operations.
Right.
As a result, when the sugar cane price is revised upwards, the corresponding revision of the MSP for sugar and also the ethanol price would be the minimum expectation of the industry, because without that, how do we pay the farmers? And the amount is not a small money. It is estimated to be about 1.2 lakh crores for the sugar season. So if such a large amount without any government support is being delivered by the industry because of the excellent policy initiatives that came over in the last 5-6 years. What we are now seeking is the continuation of the same policy that was brought by the government, which was very, very progressive. The government actually helped the industry 5-6 years ago when there was a crisis by fixing the MSP for sugar, so that the sugar industry is not exploited by the certain large consumers of sugar. So that was a very good move done by the government. At the time, there was the prices were going down, and government thought that MSP is the right way to stop that falling of the price of the sugar prices. Similarly, for ethanol, which was a very good program for environment, for making the industry pay the farmers on time, and also making the farmers.
But Mr. Rao, We get that, Mr. Rao, but would you say that this is an annual thing? You see an FRP increase, you also see a revision in ethanol, because you do understand that the cost of production has gone in. So what is leading the delay? Because I do understand that you've been having various conversations with the government on this. There have been letters sent. We've been talking about it for some time as well. Would you say before the crushing starts, at least in Maharashtra, Karnataka, we would see these numbers come out? And what would this delay really mean for the sugar as an industry? If it doesn't come in the next week, 10 days or 15 days, what does it mean for you as a segment?
There can be, again, a crisis for the industry like what it was 6-7 years ago, and the payments can get delayed to the farmers. There can be even defaults by some of the mills who are in kind of a borderline situation. So therefore, we expect the government to act, because government has only brought this policy in the past. Therefore, we are expecting and we are keenly urging the government to take these decisions as soon as possible.
All right, Mr. Rao, thank you so much for joining in. Manisha, thanks for joining in as well. With that, it's a wrap on this edition of Halftime Report. Business Lunch takes the action forward.
Well, cheers to the festive season that's raising the bar literally. India's alcobev makers are toasting to the record sales and new launches, hoping to make this the most spirited quarter yet. This quarter alone typically brings in about 30% of the year's volume in the prestige and above category, fueled by celebrations like Diwali and New Year. Let's start with Radico Khaitan, which has seen steady growth in its premium segment during the festive months, marking a 15 to 20% volume increase year on year over the last few years. Meanwhile, Amrut Distilleries is also celebrating success both at
Big slide on D Street as the event-heavy post-week Diwali underway. Nifty sees an over 400-point fall as index breaks below key levels. Selling seen across all sectors. Mid-cap index slides over 1.5%. Auto stock sees heavy selling despite better than expected October sales from M&M, Hero Moto and TVS Motors. Bajaj Auto misses the mark, the domestic sales falling 8% in the last month. Sun Pharma under pressure as the New Jersey District Court prevents it from launching its drug in alopecia. Brokerages expect a 1 to 5% impact on earnings over the next couple of years. Azad Engineering manages to rise in a falling market after bagging a 700 crore order from Mitsubishi Welspun Corp. Receives two large US orders worth 1,300 crores. Premier Energies bags orders worth around rupees 500 crores for solar modules and cells. Shapoorji Pallonji Group infrastructure firm Afcons makes a tepid debut on the D Street shares list at an 8% discount versus issue price of 463 rupees. Management tells CNBC-TV18 that the company aims to grow at 15% FY26 onwards, with margins sustaining above 11%. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. Today, markets decided to twin with me, so not a pretty picture coming in, not a good afternoon, not a good morning, not a happy Monday there. Look at the markets, 23,887 is what the Nifty is trading at, almost near the day's lowest point, down almost 1.7%. Sensex 2 is trading in the red, and even when you look at the broader markets, not anything exciting happening there. There's red across the screens. All sectoral indices today are trading in the red. Now, talking about the Nifty specifically, let's talk about that and what is actually dragging the Nifty today. All these heavyweights. So look at the stock of Reliance. That's among the top losers coming in. It's down in trade today. We have Reliance declining by 3%. ICICI Bank and L&T among top trade drags. Other than that, we have Bharti Airtel as well as ITC, which is also lagging in trade. Some bit of a green coming in from some of the names. M&M. Let's keep an eye on that. Techem and Cipla in the Nifty 50, which are managing to hold on to gains of about 1%. But other than that, nothing exciting. Nifty Energy, that's the top sectoral losers. When you're looking at in terms of volume movers today, we have sharp volumes, and this is seeing a bit of a fall. Let's look at PVR, because that is also seeing a decline of 6%. Star Health down almost 5%, while we have Hero Moto also under pressure after its auto sales numbers for the month of October. But yes, like we were saying, nothing exciting that's happening there. There's a sharp sell-off that we're seeing, and Hormaz is joining in with us to bring us more details in terms of the markets. How is it looking like? Nothing exciting, nothing pretty there, Hormaz. More updates on that market.
Well, it's almost a lot can change in a month, right? And that is what has happened with the market. Almost at the end of September, we were at record highs, and from there, the Nifty is now down 9% from those levels of 26,277 that it had hit. Now, from that day, 48 index constituents are now trading with losses on the Nifty, and there are only 2 stocks that are in the green. SBI is one of them, and Tech Mahindra being the other one that is trading with some semblance of gains. But look at this now, out of the 48 stocks that are trading with losses, half the index has corrected at least between 10 to 20%, and that is the stocks that we're talking about. 10 to 20%, 22 stocks, 1 to 10%, 23 stocks, and over 3 stocks have seen a correction of over 20%. So which are these names? Most of them are earnings accidents this quarter, and they are the ones that are leading the losses. IndusInd Bank was one of them. Bajaj Auto, you can attribute that to being the trigger for these extreme earnings reactions that we are seeing, because this was the first one. Hero Motocorp yet to report results, but still down 21% from the 27th of September. Some of the other names on this list, mostly FMCG names. Tata Consumer is one of them. Nestle, after a volume decline that it reported this quarter. Maruti Suzuki as well, after a disappointing set of results, down 18% from the 27th of September. But that is the Nifty. When you look at the sectoral indices as well, they are also seeing bigger losses. And the Nifty Auto, incidentally, made a top the same day the Nifty did. And since then, it's down 16% from those levels. The PSU Bank Index from its record high in June is down 18%. The Realty Index is down 15%. The FMCG index is down 12%. Most of these sectoral indices have seen losses of anywhere between 10 to 20%. The media index too is down 21% from its peak that it had made early in July. The IT index, the pharma index, all of them seeing substantial losses from their respective highs. So not a good looking screen. A lot has changed in the last 1 month, but some of the analysts still predicting more downsides ahead.
Okay, so let's brace ourselves for that then, if analysts are still believing some bit of a downside, but a lot did change in the last 1 month. As of now, obviously, we saw clear pressure coming in sell-off coming in the markets. But let's move on and talk about auto stocks, right? They are also seeing a fall, and despite some of them being better than expected in terms of auto sales numbers, what was the details about these auto sales numbers individually? Sudarshan is joining in with us for that.
Auto sales for the month of October have come in largely better than estimates, with two-wheeler domestic wholesale volumes were up 17% and PV volumes were up 2% year-on-year. For festive season as well, two-wheeler has seen a growth of 12% and passenger vehicles has seen a growth of 8% year-on-year. Starting with M&M, both auto and tractor segments have done well. Auto segment was led by SUVs, which saw a growth of more than 20%, and for tractor segment, good monsoon has helped the company to report a healthy growth. For Tata Tata Motors, sales were higher than estimates. We were expecting a decline in sales, but company has reported sales for the month of October, which were largely unchanged year on year. Even JLR October retail sales for US has come in better than estimates, and growth was more than 20%. For TVS Motors, sales were almost in line with estimates. Company has reported motorcycle sales growth of 14% and scooter sales were up 17% year on year. For Eicher Motors, company has reported highest ever monthly sales for Royal Enfield. Total sales have come in at 1.10 lakh units and growth was at 31% year on year. For Hero Motor, here also company has reported highest ever monthly sales. Even on Dhanteras Day, company has reported a growth that was in double digits and total sales were up 18% at 6.79 lakh units. For Bajaj Auto, overall sales have come in lower than estimates and total sales were dragged by domestic segment while exports have supported overall sales. Lastly, for Ashok Leyland, overall sales were below estimates except bus segment. All the segments have seen a dip and total sales were down 9% year on year. So overall sales were largely better than estimates, and if we talk segment wise, two-wheeler segment has done much better than all the other segments.
Thanks so much for that, Sudarshan. But earlier on today, we also spoke to Rakesh Sharma, Executive Director of Bajaj Auto. Let's listen into some of the key excerpts of what he had to say and what's the conversation we had with him.
It has been a smashing festive. Though it started a little bit tentatively before the Shera, but by the time festive actually closed, it's been, I think, the best ever festive after COVID. At least I can say that from our point of view. The area of our focus has grown upwards of 20% in retail terms, which is the 125cc plus segment. EV two-wheelers is a triple-digit growth. I mean, it's almost doubled, more than doubled. Retails have more than doubled over the last festive. And three-wheelers has also, grown at about 13-14%.
Okay, let's move on. And Royal Enfield is all set to reveal its first electric motorcycle at the 2024 EICMA Today event. Shivani Bazaz is joining in with us from CNBC-TV18 to give us more updates on that front.
Well, yes, big news expected from here in Milan as Royal Enfield, India's iconic motorcycle brand, gears up to unveil its first ever electric motorcycle today at the prestigious International Motorcycle Exhibition, or the EICMA 2024. With this launch, Royal Enfield is making a bold entry into the electric vehicle market. Now, what is generating even more excitement is the nostalgic nod to the past. The company's teasers have been linking this new electric motorcycle to the historic Flying Flea motorcycle, which played a crucial role in the World War II. Now, the new EV motorcycle will likely serve urban riders, reflecting a shift towards a practical city riding over the adventure touring. It looks like this is expected to be a fresh yet rooted in the classic Royal Enfield aesthetic. While exact details on the range, specs and battery remain under wraps, this is expected to be Royal Enfield's priciest bike, emphasizing a premium feel. Remember that the EV segment in India is dominated by electric scooters when it comes to the two-wheelers. So all eyes on the reveal of this new EV era, which is setting a new stage for the iconic brand of Royal Enfield. In Milan, Italy, this is Shivani Bazaz for CNBC.
Thank you so much for that. On that note, we're going to slip into a very short break. Don't go anywhere. More on news updates after the break.
After 5 years of 30% festive season growth, this season Radico Khaitan is launching the gold edition of Jaisalmer Indian Craft Gin, aiming to capture the high spirits of the festivities with a product as luxurious as its audience. Amrut is also making headlines with its limited 2 Indies rum, which is premium blend, is specifically crafted to appeal to India's growing taste for luxury spirits while enhancing Amrut's profile on the global stage as well. Now, Indri is also making waves, winning a prestigious gold medal at the Whiskies of the World Award for its Diwali Collector's Edition 2024. The award not only underscores India's presence in the world of fine whiskies, but also highlights the trend towards premiumization, one that is sweeping the industry. Now, let's zoom out to the broader industry trends. Last year, festive season saw a 12% spike in premium and luxury spirit sales, according to CIABC data. With consumer spending high, 2024 is poised to outdo that with even more new launches.
Welcome back. You're watching Business Lunch on CNBC-TV18. And let's move on. The IMF has released its latest outlook for the Asia economies and its slight uptick to the 2024 growth forecast, rising to 4.6% from 4.5%. Next year, the fund expects the global growth to moderate at 4.4%, but there are downside risks as well, including the pressures on the China economy and a sudden shift in the Fed or banks of Japan's policy, which could lead to the market volatility. Thomas Helbling, Asia Pacific Deputy Director for IMF, tells CNBC's Tanveer Gill about where he thinks the uptick in growth could come from.
So the uptick in our forecast mostly reflects a better first half in 2024 in much of Asia. Growth has been robust, and particularly in emerging Asia. If you look at India, we have revised up growth to 7%. Stronger monsoon rains, better agricultural production has raised rural incomes and consumption. Many countries across ASEAN, the emerging markets, have robust domestic demand, have benefited from an export uptick, and that explains the 0.1 percentage point uptick.
So you have revised India's growth to 7% at a time, and the RBI just most recently downgraded its growth forecast for the remainder of the year to 6.8% for the coming quarter. So is there downside risk to India's growth projection?
I mean, 6.8 versus 7, I mean, I think it's in the ballpark. For us, India is the major, among the major emerging market economies, it's a bright spot, highest growth. Growth is robust. We expect growth to remain robust for the next 2 fiscal years, around 6.5%. If you look at the 7%, or even if you look at the 6.8% you mentioned, we see this above potential output, so India's strong growth overall.
Okay, let's move on to some national development. And air quality in the national capital continues to worsen even as schools reopen after Delhi's Diwali celebration. Abhimanyu is joining in with us with more details on that.
The situation on air quality in the national capital continues to remain dangerous as the air quality index is around 370 and has been recorded at even higher levels at places which is above 50 times the acceptable limit which has been set by the WHO. Schools have reopened in the national capital after the Diwali vacation, but it remains to be seen whether there would be any closures announced by the government in view of the pollution related situation, similar to the action which was taken last year when several schools were closed as per the government order to protect children from the adverse impacts of air pollution. While the ban on firecrackers continues to remain in place, it was flouted at several places in the national capital region, and stubble burning incidents are still continuing in the North Indian states of Punjab and Haryana despite efforts being made by several state governments and the central government. As far as the Centre for Air Quality Management is concerned, the GRAP plan, the Graded Response Action Plan, is already in place. The stage 2 has already been invoked, but it remains to be seen whether there would be any upgradation as far as ban on construction activity and further industrial activity is concerned in view of rising pollution levels.
Thanks so much for that update there. But some more news updates coming in. And in a tragic accident, over 25 people, including children, were killed after a bus fell into the gorge in Uttarakhand on Monday morning. The bus was on its way from Garhwal to Kumaon when the accident took place. Search and rescue operations are currently underway. Okay, on that note, we're going to slip into a very short break. Don't go anywhere. We'll bring you more updates from the upcoming US presidential elections and the impact of that macros and equities. Stay tuned in.
demand. Many in the industry are leaning into the premiumization strategy, hoping that these high-end products will help offset inflationary costs that have been cutting into the margins. Back to you.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand.
Welcome back. You're watching Business Lunch on CNBC TV18. Let's move on, and we are in the final stretch of the US presidential elections, and the latest NBC poll shows that the race is still too close to call and will likely boil down to how both the candidates perform in the key battleground states. But a major chunk of the voters is the Indian diaspora and poised to play a crucial role in determining the final results. Parakshit has more details on that. Parakshit?
That's right. More than 5.2 million people of Indian origin are there in the United States as of now. And Indian origin people are 1.5% of America's population. 70% of Indian Americans are US citizens. That is, they are eligible to vote. And 60% of them are between 18 and 64 years of age. Indian Americans are now the second largest immigrant group in the United States. 150 Indian Americans are in senior government positions as of now in the United States, and 5 Indians serve in the House of Representatives. In fact, 2 more are in the running right now. As per the latest survey of Asian Americans, 55% of Indian Americans identify themselves as Democrats, 26% identify themselves as Republicans. Now, a number of Indian Americans identifying as Democrats has been declining since 2020. According to some reports, the Indian American men, that is the young Indian American man, is moving towards the Republican camp. This is what certain indicators show. However, Carnegie Endowment Center's latest report says 47% of Indian Americans identify as Democrats. This is down from 50% in 2020. 61% of Indian Americans plan to vote for Harris, while 32% intend to vote for Donald Trump. And we've been seeing how Trump and Harris are both wooing Indian Americans. Vice President Kamala Harris penned an op-ed on Diwali, remembering her visits to India as a child. Harris said that it has been an honor to host Diwali celebrations at her official residence. She went on to say that South Asian Americans are bound together by a shared sense of possibility and belief in the promise of America. She often speaks about the contribution of her mother, who hails from Tamil Nadu, how she came to the United States, found the love of her life, got married, worked towards finding a cure for cancer as well. So this has been something she has often referred to during her campaign speeches. Donald Trump, on the other hand, has also tried to appeal to the Indian American voter recently. He has stated that he will work to protect Hindu Americans. He also said that he'll fight for the freedom of Hindu Americans against the anti-religion agenda of the radical left. Trump has promised greater ties with India and also with Prime Minister Narendra Modi. It is being said that if the Republicans were to win, then the mini trade deal would be back on the table, something that India and United States were negotiating in the last year of the Donald Trump presidency. But the Biden administration did not show any interest in a trade deal with India, and that fell on the back burner. So let's see what happens in the next 24 to 48 hours in the United States.
Thank you so much for that, Parikshit. And you also can catch our coverage on the US elections later today, 6 p.m. onwards, where we will be joined by a host of analysts. Okay, let's move on and now to understand the impact of both candidates, Donald Trump and Kamala Harris, could have on the macros and equities. We have Lata Venkatesh joining with us with that.
Okay, well, let's start with how Trump and Harris are perceived for each of the financial markets. Trump victory is seen as very positive for equity markets and very negative for bonds. Trump win is also seen making dollar stronger, and that'll have its repercussions. But first, the macros. On the macros, both Trump and Harris policies may lead to widening of the US fiscal deficit, but Trump will widen the fiscal deficit much more than Harris. Trump policies are seen pushing inflation higher. Harris win could mean, therefore, lower inflation. Hence, on growth, because of higher inflation, growth may be lower under Trump policies, but growth could be better under Harris. Trump victory will mean higher interest rates and stronger dollar. Therefore, it will be the opposite under Harris, that is slightly weaker dollar and slightly lower rates. Now, the non-profit think tank called Committee for a Responsible Federal Budget, or CRFB, sees Harris's policies increasing the US deficit by $3.95 trillion by 2035. But Trump is going to be worse. His policies may increase the US deficit by $7.75 trillion, actually by double by 2035. The CFRB says following programs of Harris will increase expenses, extension of tax cuts for families that are earning less than $400,000, expanding the child tax credit to help families in lower income with more children, expanding the Affordable Care Act, which means higher insurance subsidies, supporting affordable housing, and increasing the minimum wage. The amounts are given on the right. I'm not reading them. Now, Harris will also bring in more revenues. She will raise revenues by upping the corporate tax rate from 21 to 28%, increasing capital gains tax. Now, that's why it's equity negative, upping the Medicare tax, reforming international tax rules, and lowering the cost of prescription drugs. That will, of course, mean lower revenue outgo. Trump is going to increase deficit by, of course, cutting taxes. We all know that, cutting taxes for corporates under the TCJA, that is Tax Cuts Job Act, exempt tips and overtime from taxes. Actually, Harris also has promised that. He will also end taxation of Social Security benefits. That's a huge outgo. And he will also spend less by reducing illegal immigrants into the country. Trump is going to raise revenues through tariffs and more tariffs. He will also reverse the energy policy and will exempt oil output. Of course, that's not his area. He will also end some education support programs. Let's come to immigration. On immigration, Harris will favor increasing legal immigration, while Trump is going to reduce all immigration across the board. Thus, Trump may actually end up tightening the labor market, and this can especially hurt infotech companies, IT companies. So what's in it for emerging markets like India? A Harris win may lead to continuation of the present trends largely, but a Trump win by strengthening the US dollar will likely lead to weaker EM currencies. More importantly, China is expected to retaliate the tariffs that Trump is expected to impose by weakening its own currency, weakening the renminbi, which will force other Asian EMs to also depreciate their currencies, including India. They are likely to weaken their currencies in competitive depreciation. Trump may reduce the space for emerging market central banks to cut rates. He may have a negative impact on global growth and therefore emerging market growth because of the likely supply disruptions he may cause by higher tariffs. But here's the silver lining. In the emerging market group, Indian economy and the Indian rupee is seen least affected by Trump's policies.
Okay, thank you so much for that. Surely going to be interesting to watch out, for the US elections. Just the next couple of days is what everyone will be keeping an eye out on. But with that, it's a wrap on this edition of Business Lunch, leaving with the markets at 23,870 levels. Don't go anywhere. Midcap Radar up next to take the action forward.
Your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day.
Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. The downfall continues, though it has stabilized somewhat from the levels that we've seen. But of course, it's not like a big recovery that we've seen. The Nifty is down around 400 points. We have the mid-caps, which are down 790 points. But do remember, Nifty mid-caps were down almost 1,000 points at a point in time. Now it's down around 800 points. So there is around a 200-point recovery. Banks continue to see cuts. And it's across the board that we are seeing cuts today.
That's right. And earnings continue. You know, we had a bit of a break, over the last three trading sessions, where last 3 days where you didn't see too many earnings come about. But today, once again, earnings are back. You can see the numbers of Excite on your screen. But quite a lot lined up on the show. Let's start off with the top headlines. Big slide on D Street as the event-heavy post-Diwali week gets underway. Nifty sees an over 400-point fall as the index breaks key levels. Selling seen across all key sectors. Mid-cap index slides over 1.5%.
Azad Engineering surges in trade after signing a 700 crore deal with Mitsubishi Heavy Industries. Management tells CNBC-TV18 revenue from new deal will start to reflect in 3 to 4 quarters.
InfoEdge surges over 2% in trade after jobs peaks. October data shows 10% rise in hiring activity on a year-on-year basis. IT hiring, on the other hand, is up over 6%.
Gold financiers are under pressure ahead of their Q2 FY25 earnings tomorrow. Manappuram corrects over 5.5%, while Muthoot falls 1.6%. Okay, all right, those are the top headlines. We'll discuss about mid-cap movers in greater detail in just a bit. But in terms of sectors, look at the Nifty energy space. It's down 3%, and every stock from that particular segment is seeing a lot of pressure, be it OMCs, be it ONGC. Oil India reports numbers tomorrow. We have GAIL's numbers, which are expected tomorrow. So the OMC pack also not doing so well. So it's a 3.3% cut there. And overall, if we look at the mid-cap basket, that continues to be under pressure. But again, it's a lot about earnings, and that continues to be the focus.
A lot about earnings. One earnings that we just discussed, Excite Industries, seems to be a bit of a miss. The stock now down almost 5%, just after declaring the results. Excite Industries is the one that we're discussing now near the day's lowest point. But Hormaz is standing by the wall. This is our special segment, Mid-Cap Movers. Hormaz, take us through all of the stocks that are making the moves in the broader end of the market.
Another kind of the start the bulls were expecting at the start of a very major week for the markets, but there are plenty of losers today within the broader market space, and we will start off with those names. Vodafone Idea and Hindustan Zinc among the top losers. Brigade as well, all of the real estate packs seeing some losses in today's session, and Manappuram too down to the lowest point of the day, 4.5% lower. Selling pressure also coming in a lot of PSU names, actually almost in every other sector, but PSUs too are the highlight today. BHEL, HPCL along with other OMCs are also selling off today's sale. IRFC ahead of results is down 3% in today's session. Some stocks that are not doing well on the back of volumes. Usually it's in the green. Today we've taken some of the losers on heavy volumes. PVR Inox at one point was down 8%. Now 6.5% lower. Star Health too along with Aarti Industries are declining on heavy volumes in today's trading session. And lastly, some stocks that are bucking the trend in today's session, and Gillette is one of them, continues to grow from strength to strength in a weak market. day, 10,500 now on Gillette, 5% higher, along with other names like Rainbow Medical, Fine Organic and V-Guard, who are holding on to some bit of gains in a weak market. Back to you guys.
Okay, so some green on the screen after that big cut that we're seeing on the benchmarks. By the way, suddenly, Office Space Solutions, that stock has also surged 7% higher. The company hasn't reported numbers as yet, but yes, there's a big surge that we're seeing on the stock as we speak. Office Space Solutions, a recent listing, and that has been doing well since the listing as well. But let's talk about Sharda Cropchem. Recently reported their Q2 numbers, saw recovery after quarters of pain. The company says its revenue surged 34%, while EBITDA rose 125% on a YOY basis. R.V. Bubna, the Chairman and Managing Director at the company, is joining us now. Mr. Bubna, good afternoon. Thank you so much for joining in. Well, seems like, as you've been pointing out in last 2 quarters, that the worst is behind for the industry and the company as well. But for Q2, can you give us a sense of what the breakup was in terms of volumes and realization? The top line growth, if you can split it, because in Q1 it was 43% on a low base. How did it pan out in Q2?
Madam, your voice is very faint. I cannot hear you correctly. I told the other lady also. Can you increase the volume of your voice?
Yes. Sir, can you give us a sense of what the split was on the top line in terms of volumes and realizations this quarter?
Madam, the volume has grown about... 1 second.
Good afternoon, sir. Can you hear us now?
Yeah, now I can hear. It's better.
Yeah. So, Sonal was just asked...
Please answer.
So the revenue has gone up by 34%, gross profit 48%, EBITDA 125% compared to the same period last year.
Yes, sir. We had that number. We just wanted the split of the revenues in volumes and realizations.
Revenue, volume and realization. Just give me one moment.
Sure, sir. Okay, so just to apprise our viewers, the revenues this time around for the company has grown by 34%, EBITDA is up 125%, margins have improved to 10.9%, and profits have come in at 42 crore rupees, which compares with a loss of 27.6 crores. And in the half year as well, the company has done well. The revenues have grown by 28%. It's an EBITDA versus an EBITDA loss last year, and profits have come in at 70 crore rupees. Yes, Mr. Bubna, go ahead.
1 minute. See, the revenue has grown. The contribution is 20.6% by volume. Foreign exchange impact is -3%. And price and product mix has 10.2%. Overall, 33.8%.
Okay. You've mentioned that you expect further improvement in gross margins, and this is going to be led by price increases. Give us a sense of what kind of price increases you've taken and what is it that you expect to take, and is the market ready, to go ahead and pass on those price increases?
See, we are comparing these figures compared to the previous year. Previous year was a very unique and very low base point we are starting from. So the prices had gone down to the historical low levels. Now the supply and demand is matching, and the demand is increasing, and the prices are also showing an improvement. The process will be slow, but there will be an improvement of at least about 10% to 15% in the prices, if not more.
Okay, 10 to 15% improvement in pricing. Even your working capital days have improved from 158 days to 126 days. Are you expecting further improvement here? What is the channel inventory looking like currently?
Madam, we are improving. We are expecting a further improvement of the working capital days. The inventory is at a very comfortable level, and our process of purchasing is also going up.
So, after Q2, you've actually gone ahead and maintained your guidance as far as FY25 is concerned. A 15 to 18% revenue growth and a 15 to 18% EBITDA margin.
Yes.
At the end of H1, you're slightly below where you expect to be, or what is it that you're targeting? So what are the operating margin triggers that you're seeing in H2?
Operating margins we are seeing in the H2 is about, operating gross margins will be in the range of 30 to 32%.
Okay, and the EBITDA margins you have maintained at 15 to 18%. Is that accurate?
Yes, please. And I would say this is a very conservative estimate. We could go still further.
Okay, all right. So that is something that the street would want to know, whether second half is much better than what you are anticipating and what the street is expecting as well. Mr. Bubna, always a pleasure speaking with you, sir. Thank you so much for joining in today and giving us a sense of what's happening with the company and the industry as well. That's Sharda Cropchem. The stock is up 3% in a very weak market and has been doing well since the time results have come out as well. We'll slip into a short break. Up next, we'll connect with the management of Niva Bupa Health Insurance. It opens for subscription on November 7th. Stay tuned for that.
Investing.
Well, some stocks in the broader end of the markets are bucking the trend as far as today's sell-off is concerned. One such stock is Voltas, now trading near the day's highest point. Voltas is doing quite well and bucking the trend. The other stock, that's seeing quite a bit of selling pressure emerge is actually Colgate-Palmolive, down almost 3.5%. And this particular stock, now trading near the day's lowest point. When you're talking about some of the other names, Exide Industries, it's now back to where it was. Saw quite a bit of a steep correction post the result announcement, but after that, the stock has seen a little bit of a recovery. Okay. Now, the other set of stocks that we are looking at is the two-wheeler names. Have a look at some of the names today. TVS Motors, this particular stock seeing quite a bit of a sell-off. Hero Motor, the company just announced its October monthly sales figure, but despite that, the entire pack, and it's the highest ever monthly sales that the company has actually delivered for a particular month, but the stock is down 5%. Bajaj Auto, despite the management sounding very confident in terms of the kind of sales that it has seen, Bajaj Auto too seeing quite a bit of a sell-off. Eicher Motors, as you can see on your screen, seeing quite a bit of a sell-off. The numbers of Tube Investments are just on your screen. EBITDA is down almost 13% on a year-on-year basis, and that particular stock down almost 1.5%, just post the numbers. But moving on to the primary market action, Niva Bupa Health Insurance opens for subscription on November 7th with the price band fixed between 70 to 74 rupees a share. Company is looking to raise 2,200 crore rupees, fresh issue of 800 crore rupees, and an offer for sale of 1,400 crore rupees. In fact, my colleague Yash Jain spoke to Krishnan Ramachandran, who is the MD and CEO, along with Vishwanath Mahendra, who is the CFO at Niva Bupa Health Insurance. Listen in.
Health insurance is a very, very exciting opportunity, and for the company to be here in its life stage is very, very exciting for all of us. Now, to answer your question, we in Niva Bupa, our purpose is to give every Indian the confidence to access the best healthcare. So obviously we want to invest in growth, and the objective of this capital raise, which is ahead of time, you're absolutely right, is to make sure that we are sufficiently funded, to take care of the next phase of our growth. That's why we are raising this capital ahead of time, and we want to make sure that we are in a position to weather any shocks like COVID. But broadly, the idea is to fund growth. Very, very excited about health insurance in India.
Okay, just to throw some numbers here, about 800 crore is what gets used towards solvency improvement. Where does that take the solvency to from the current 2.4 times? To very bluntly put this question to you, a lot of investors, analysts are also speaking about the fact that the fresh issue part of the IPO is only so that it does not look like the company is wanting to give an exit to a few of its existing investors. How would you respond to that?
So look, the two selling shareholders are True North, Fettletone and Bupa. Bupa is a very, very long-term shareholder. The only reason there's an offer for sale from their side is to accommodate FII headroom. There's been very healthy demand from the FIIs, and as you know, insurance has a 74% cap. So the only reason they are selling is to accommodate FII headroom. True North is a private equity fund. They are into the 5th year of their investment. So it is logical and natural that they look to taper down their investment in this vehicle. So that's the True North part of it. But let me repeat, 800 crores is for the company to fund growth in the very, very exciting health insurance opportunity.
Where does that take the solvency to?
It should be comfortably above 3 to start with, Yash.
As far as the IPO for Niva Bupa is concerned, that is coming at about 6.2 times price to book value. Your listed peer, that is Star Health Insurance, that company trades at about 4.7 times price to book value. And these are FY24 numbers. Now, if you compare business-wise, just to put the valuation in context, you're about 3 times smaller than Star when it comes to the net earned premium. Underwriting level, Star FY24 made a profit of 90 crore. You had a loss of about 410 crore rupees. You're 4 times smaller than Star when it comes to operating profit. PAT, you're 10 times smaller than Star. Combined ratio, Star was at 96.67%. You were at 98.79%. My simple question, keeping the financials in context and the size in context, is that why do you think Niva Bupa should get a valuation higher than Star Health Insurance, considering they're the market leader and much bigger than you on most of the counts?
Sure, Yash. So, Yash, we have to see all these metrics in the context of growth. So if you see compare the growth rate of Star, you mentioned about Star or industry growth rate as such, and compare with us, you will see a stark difference. And let's say price to book value. This is important metric, but this is not the sole. Then you talked about combined ratio also. That also has implication of growth. When you are growing at faster rate, your expenses are higher. Right. So as your book matures, you get operating leverage and economies of scale. So we have been guided by our bankers to a valuation which makes a fine balance between the value which is given to existing shareholders who are exiting, as well as the value to incoming shareholders. So it's a very fine balance, and we have been guided to value which is fair to both the set of shareholders.
Okay. And Yash, if I might add one point to what Vishwanath said, in early January, Bupa came in and became the majority shareholder, as you're aware. And the price that they came in was 74 rupees. So close to 11 months out, we're holding the same price. So therefore, we believe that this price offers great value to any potential incoming investor who's looking to come into the company.
The base is smaller. Yeah. The growth is very strong in the last 3 years, as I was looking in the RHP as well. I have 2 questions for you here. One is, how soon do you see yourself reaching that annual net earned premium of about 10,000 crore rupees? Because you are right now at about 3,800 crore rupees. That was FY24. How soon do you see yourself reaching that annual net earned premium of 10,000 crore rupees? And second question, at what point do you see growth normalizing for yourself? What will be that normalized growth, considering the industry is growing at about 20 to 23 to 25%? What will be the normalized growth for you? At what point does it come in, premium-wise as well as time-wise?
What we believe is health insurance has huge potential. Industry is growing at a robust rate of high teens, which it will continue. And like Mr. Kishan talked about, our aim is to grow higher than industry and increase our market share.
In terms of the ingredients that go into growth, right, which is making great products for customers, and our products are market-leading products. Investing in distribution expansion, whether that's agency, direct-to-consumer, digital, banks, we will continue to invest. Making sure that we do a great job on servicing, whether the technology-led servicing anywhere, anytime, claim settlement ratios in excess of 92%. renewal rates in excess of 90%. So I think the ingredients to growth, without directly answering your question, and in terms of our investment into those ingredients, including on talent and execution, I believe our objective will be to continuously focus and get better and better into what goes into driving growth. Okay. And results, time will tell. As I stated, our objective will be to grow faster than market. Our purpose is to make sure that every Indian, has the confidence to access quality healthcare.
You spoke about one very important point, that the objective will be to grow faster than the market. FY24, your NEP grew at about 43%, if I'm not wrong. Growing faster than the market, yes, but in the immediate financial year, that is FY25, without pointing one single number, could the growth be higher or at the same levels as far as NEP is concerned as compared to FY24?
So our growth till August, this is publicly available data, in fact till September if I'm not wrong, we've been growing at 30% GWP. And the market has been growing at 18-19% on health insurance. So that gives you a sense of the difference in growth between us as well as the market as far as the year that's gone by is concerned, Yash.
In the first quarter as well, if FY25 is to be spoken about, your combined ratio again shot up to those 107 levels. Are you confident that second half would be better and you'll be able to end FY25 with sub-100 combined ratio levels?
So I think from a specialist insurer, if you look at global operations, steady state combined ratios that are sub-95 is what plays out globally. And our belief is that in India as well, this is the steady state combined ratios that well-run health insurance operators will achieve over time.
On the street, they say, "Ye dil mange more," right? Now that you're listing, you also have a listed peer. With the trajectory that we've seen on them, on a lot of the parameters, they're above, what Swiggy is right now, which is not to say that you're any less. It's just that you're at different stages of growth in your life.
Correct. I think, look, there's a lot of context. We each have our own context, and we are in very, very exciting categories. And our strategy, our capital allocation, everything's going to be a function of our excitement and what we can go after in each of these. Like Rahul mentioned, we've demonstrated the profitability in the food business. We feel good about its future going forward. As for quick commerce, I think it's in a once in a lifetime category, and I think we are seeing consumption patterns change for consumers, and there's so much to be done. So our endeavor will be to make sure that we do the fullest of our ability to make sure that we grow and serve customers well and make sure that everything comes together nicely.
But for quick commerce, you recently said that the peak of the investment is behind you. That's but right. You're still not a contribution margin positive either. So, I mean, what is the trajectory there for quick commerce? Because even for your peer, that has been the growth driver, right? So how are you looking at the quick commerce business for you in terms of being, is it also going to be the growth driver for you? And sort of trying to get a sense of the path of profitability on that front also.
See, maybe I'll take this. I think on quick commerce, what really amazes us is the way consumers are reimagining, things, or what can be delivered to them. So it's almost like every quarter we have to recalibrate around, what is the number of categories that we have to be there, what is the number of SKUs we have to launch, and there's a recalibration happening. Growth is accelerating. So there'll be a certain amount of, say, new store additions that we'll continue to do. The old stores continue to mature well, which means that they will become.
Welcome back. You're still tuned into Midcap Radar. Well, the advanced decline ratio has improved slightly from the morning. However, it's still absolutely in favor of the declines. So for every 465 stocks on the advancing side, we have around 2,000 stocks on the declining side. This is on the NSE. But some broader market movers that I want to point out, Fine Organic. Hormaz mentioned that again, that stock is up 6%. So the chemical space is doing well today. You do have the likes of Sharda Cropchem, which is up 3.5%, Galaxy Surfactants, Deepak Fertilizers. All these stocks are higher in trade today, and this is at a time when the other markets or the other parts of the markets are not doing so well. So watch out for that space. But for now, we'll do one thing. We'll take your leave on this edition of Midcap Radar. Do stay tuned. Closing bell when we return.
Of time, and the new stores come in because consumers want a lot more. Right. So I think it's a recalibration of our overall growth trajectory in line with the demonstrated path to the contribution margin that we continue to will demonstrate.
Well, cheers to the festive season that's raising the bar literally. India's alcobev makers are toasting to the record sales and new launches, hoping to make this the most spirited quarter yet. This quarter alone typically brings in about 30% of the year's volume in the prestige and above category, fueled by celebrations like Diwali and New Year. Let's start with Radico Khaitan, which has seen steady growth in its premium segment during the festive months, marking a 15 to 20% volume increase year on year over the last few years. Meanwhile, Amrut Distilleries is also celebrating success both at home and abroad after 5 years of 30% festive season growth. This season, Radico Khaitan is launching the gold edition of Jaisalmer Indian Craft Gin, aiming to capture the high spirits of the festivities with a product as luxurious as its audience. Amrut is also making headlines with its limited 2 Indies rum, which is premium blend, is specifically crafted to appeal to India's growing taste for luxury spirits while enhancing Amrut's profile on the global stage as well. Now, Indri is also making waves, winning a prestigious gold medal at the Whiskies of the World Award for its Diwali Collector's Edition 2024. The award not only underscores India's presence in the world of fine whiskies, but also highlights the trend towards premiumization, one that is sweeping the industry. Now let's zoom out.
Taiwanese index managing to hold on to gains of 0.4%. Hang Seng holding on to gains of 0.2%.
Expect at least the indices, broader global indices, the big ones, to be volatile going into the US election. Nifty is down about 0.25%, 24,260. Nifty Bank is starting at about 51,600. It's down about 0.1%.
Last time he was president, he was actually fairly good for the business and the economy.
Indicating is that people had held back their purchases as they were entering the festive zone.
Continue to be bullish on Africa and reasonable in neighboring countries.
About the Nifty, now it has fallen below the 23,900 mark.
EV motorcycles will likely serve urban riders, reflecting a shift towards the practical city riding over the adventure touring.
Wednesday morning, 6:30 a.m. our time, majority of polling stations in the US should close.
The downfall continues, though it has stabilized somewhat from the levels that we've seen. But of course, it's not like a big recovery that we've seen.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, very little by way of a recovery, and the markets remains down almost 400 points. I mean, we're 20-30 points short of that number, but one way kind of a downside is what we've seen through the course of the day. Lows have been broken. The 5th of August low, which at least in the morning it didn't look like it would come into view. That I think is also gone. At least intraday we were trading below it, and I think we should be around it as we speak. We're coming to you from the CNBC-TV18 Motilal Oswal studio. This is Closing Bell. I'm Prashant. With me, my colleague Surbhi and Nigel. Guys, hi, good afternoon.
Hi, good afternoon. Well, folks, for what it's worth, at least from the lows, this is a 100-point recovery that we're seeing, because at one point in time, around 12 o'clock, it was looking like a yawning gap. It was a 500-point decline. So we've kind of pulled back a little bit. But I mean, having said that, there's no taking away from the fact that this has been an extremely weak start to this week.
Well, indeed, volatility is likely to pick up, as Prashant mentioned earlier this morning as well. In a couple of these PSU banking names, actually in the last 30 to 40 minutes, they have come back to life. You pull up the intraday chart of, say, a PNB bank. The PSU banking index is cutting its losses. PNB is doing quite well. SBI as well has pulled back from the low point of the day. So it appears some of these stocks that have actually seen some bit of a correction. There's a good pullback is what we've seen. Just take a look at that. Good up move is what we're seeing. I think SBI's numbers later this week are going to be very, very important, because the markets are nervous about the state of the economy as of now, whether or not there's a slowdown. So SBI's numbers, not just the numbers, but the commentary as well, will be extremely crucial. Bajaj Auto's numbers as well were weak, and that's what's caused, again, a bit of a ripple in terms of sentiment. So keep an eye out on that one. It's down another 4%. All that recovery post, the numbers that we saw after it sold off, that as well has got sold into a stock closer to around 9,000 odd.
And Nigel, absolutely, PSU Bank, the index recovery from the lows is almost 1.5%.
Yes.
The Nifty PSU Bank index is, I think, a performer, one of the few sectorally. And why not, right? I mean, PSU banks perhaps is the only pocket where we've seen, steady earnings across the board, be it big, small. It's a very, very patchy record if you want to talk about private financials. Private banks, for that matter, MFIs, of course, bombed out this quarter. NBFCs, it was a kind of a patchy performance, but PSU banks have been largely, City Union, Karur Vysya, you want to talk about those, or the PSU banks. I mean, that's essentially the part of the market, the part of the financial space which is done quite well. I just want to take a quick look at a few other losers at this point in time and talk about what's happening. So PVR is down about 6% odd. It's the biggest volume-led loser right now across the board on the indices. So that is a big one. It's come off the lows. I mean, PVR low was about 1440 and the stock's now at about 1480 or so. It's about 40 rupees off the low. Look at Prudent, the mutual fund distributor. It's basically giving back almost all of what it gained in the last 2 sessions. So 2 sessions worth of gains being given back. just in today's session. The high today was 3,700 and has given up about 700-800 rupees from the day's high. That is prudent cop. It's got the second largest volumes overall. The other one is Polymed. Again, it's a story of give back, nothing more, because post numbers stock had gone up from about 2,500 all the way to about 3350, and from there it's coming back to about 2,950 this afternoon, and so on and so forth. Manappuram is, of course, Manappuram also attempted a bit of a recovery from the absolute lows recently. That was about 140. From 140-ish, it got to about 160, 165. It's come back to about 150 right now. So many of these names, Voltamp Transformers, from the absolute low of 10,000, basically 10,000 bucks, it saw a recovery close to about 12,000, and it's come down. It's given up 1,000 odd rupees from that point on. So that's the kind of market that we find ourselves in. We have Sanjay Parikh now joining us, founder and CIO at Soham Asset Managers. Sanjay, good to have you with us here. Good afternoon. Thanks for joining in. We're starting the show a little early because of the 1.5% cut, and good to see you here on the program. So, earnings, I think, are we can talk about all which is happening in the world, and a lot will happen this week. But here, locally, earnings have been the problem. Yes. In your assessment, in your portfolio universe, Sanjay, what has the earnings season really meant? How many stocks have seen earnings downgrades? Where have you seen any upgrades at all? Go on.
Right. So, thank you, Prashant. So, essentially, yes, earnings season has not been great. While the previews came out, you did realize that this will be a quarter which will be having low growth. Maybe 3 to 4% was the initial expectation, but we may end up with even flattish or negative growth rate. Now, the key point is that, is it more of a one-quarter phenomenon or maybe one more quarter and then we revive, or it's going to be a secular longer-term phenomenon? So, globally, as you know, if there are secular downgrades, then certainly it's not well taken well by the FIIs. But as we see and as we went through our portfolio also, of course, we, right from autos, where we had an exposure, there were downgrades. And then financial was better. It was as per expectation. In fact, financials would look, banks in particular, look better when the whole result season is out. Capital goods is yet to come out for all the numbers. Pharma was broadly neutralish. IT was as expected, lower growth. I mean, a little bit of recovery that we saw. And then, cap goods, I told you, logistics is broadly going to be in line. So cement, of course, we had underweight, and it did help us because we got an underweight earlier. And I think still that will take a quarter or more. So overall earnings, this is an environment wherein you really need to even protect your capital. And of course, then look for appreciation. And, ours is a large cap fund with 73-74% large cap. And luckily, in the last month of fall, markets fell 6.1, we fell 4.1, 4.2. So it did get vindicated, and that's what exactly our positioning, that we would still feel that large cap would look better than mid cap. And mid cap, there is still selectively, there's still froth in certain segments of mid and small cap.
All right. Hi, Sanjay. Good afternoon and good to see you. And as always, what about you're sitting at around 8% cash? You plan on deploying it, or do you think a couple of big cues coming up, US election, Maharashtra election, what the Fed's going to do next, earnings disappointment, you rather sit on that cash, or will you start gradually deploying?
So Nigel, now what we'll do is, you will not get great bargains and great news. You will get good bargains when there is uncertainty. And here, within Nifty or larger caps also, now the good part is your shopping list is getting extended. So now is the time you'll enjoy to buy. You will have more choice. You have to be selective. And our strategy is in larger caps. Let's be into companies where reasonable valuations are there. You have fair certainty of earnings growth rate. And, as overall prospects look better. So you have choice now within Nifty as well. Even in our portfolio, we have 16 stocks in Nifty. So we don't own 34 stocks in Nifty, despite 73% large cap. And we do find that in the next 200-300 points of fall, it will give an opportunity and one should buy in and increase the allocation to equity. You can have some portion left out for if there's any panic, but we are clearly telling our clients that now accelerate your equity inflows, particularly towards the large cap mandates. And that's a very strong view that we have. But having said that, it's not going to be overnight shooting back because earnings will be downgraded. Our earnings this year will be maybe 1,060, 70. Next year on 25, 26 will be more like 1,200 now. So at 1,200, if we give 20 times, it's 24,000. But why we think positive is because all the balance sheets are still in very good shape. I mean, barring some microfinance or credit card issue, I think we've never seen all our balance sheets being so strong. And that is leading us to optimism that you need to preempt a little bit early and then start buying.
Okay, all right. Cut that out of the way. So you believe it's a good time to gradually start deploying, as you all have been indicated to your clients. Now, one theme that could play out in the second half of the year is the government spending could pick up. And they are seeing signs of that, particularly in the last 1 month or so. And you've been quite positive on the infra space. L&T's numbers actually were very good, and you all have some exposure out there. But not just that, even the second drug kind of companies, you all have good amount of exposure. Tell us about this theme. How positive are you from here on?
So Nigel, we are positive. So we saw, the order book being slow. And then first year CapEx spend of government itself is -4%. But clearly, we believe that government, for them to even in their agenda of revival in infra, they certainly will move up on spend, and that's going to be a priority. So we were always overweight there. Only thing is, what we have done is we bought them at reasonable valuation. So, Larsen and Toubro is a big overweight, which helped us. InterArc was a recent listing. It's really was a reasonable valued company, and we saw it almost 25% up in the last 2 months, and we still own it. We've reduced a bit, but otherwise we own it. And then we have, Solar Wilson, we still like, because of a huge opportunity there. And then one company in infra space where we think it's a very deep value, which had survived the past cycle and can genuinely, create value in the next 2-3 years is the Bilcon. So this is where we are, and we believe that, we are well poised in that sector for earnings appreciation.
Got it. Sanjay, hi. Great to have you in with us this afternoon. I'm looking at the IT exposure that you have. And here also, you're playing it via large cap names like an Infosys, and there's, I think, an HCL Tech that I can see over here. So what's the read-through and what is your expectation? Because the companies are still sort of talking about lackluster, mid-single digit to maybe, high single-digit growth. No one's talking more than that. Then there are global majors like Capgemini. It cut its guidance again, and there was so much of panic in the market on Thursday, right, last week. Yeah. So what are you baking in? Is this just a tactical move from a safety point of view to large cap IT? Or are you expecting sort of more growth ahead? And what will the US election mean? I mean, will it have a bearing, whether it's Trump or Harris? Could it have any impact on the fortunes for the larger IT players?
I think the last one I'll just take. I think genuinely this US election will be a non-issue for us. I mean, we'll have some coverage and most of it, but I think it's a non-event for us broadly, as I understand. On IT, we've been consistently underweight in the last 2.5 years since we started. It helped us for the first 2 years. In the last 3 months, we did cut our underweight. But in the last run that you saw 30-35% rise in certain stocks, it did hit us. But we realized that, and we did not, we cut our underweight, but we're still underweight there because they're great return ratios are very good, but growth rates are going to be 4 to 5 to 6%. And still we have uncertainty ahead, in terms of US spend, whether it will pick up or whether it will pick up this year or next year. And hence we were not comfortable at 25-30 times. So we were positioned with an underweight, but they do act as a defensive as well. So what we'll do is at a point of time, if we feel that the price is right, we will increase our exposure to IT. That's our stand right now.
Okay, Sanjay, I'm going to throw an open-ended question to you, right? You said you won't find certainty and a great price, so you'll have to kind of venture and wade into some uncertainty.
Yes.
So 2-3 names, just as and with clear disclosure, not an inducement to buy or anything of that sort. What's looking good right now?
So I'll tell you, let's take an example of Maruti, right? Maruti from the peak has reacted 15-18%, and we added. So let me be, that's a disclosure that now the next 2-3 months you could have, they have reduced the inventory base. The growth rate is 4%. That's all known, right? But can it prolong for next 1, 2, 3 years? I don't think so. The broad story of spend, consumer spend, disposable surplus remains. So here is where, there is not great news, but a great company with some weakness around the SUV positioning. But otherwise an impeccable, the way they manage it company in terms of cost, capital cost, efficiency is phenomenal. So few corrections of the new good launches, their positioning in SUV getting better, and then you get a bargain, So this is where I think a lot of places, financials have now caught up to the underperformance it had. And in this fall, they've behaved quite well. But even still, I feel there is still, you get the best of the businesses. And we have all larger 4 names, Axis, ICICI, SBI, and HDFC Bank, all 6.5%, and 25%. And that, I think, again, is quite good. So we will now get a lot of ideas, I think. And that's where it excites us now, that in this fall, even if cement, while last quarter was weak, third quarter is again weak. But if the larger names were to get at 5-7% lower, we will positively look at it.
I get your point, Sanjay.
Yes.
Yeah, I think hearing you, it's become very clear that you're happy that at least price points are coming to, good levels, lucrative levels. And then you just have to wait for the news flow to start turning around and pick the right company where the news flow turns positive the first, right? But I just want to go back to that point on autos, Maruti. And I thought that was really interesting because now almost 9% of your portfolio is geared towards autos. And the news flow is really negative, barring a Mahindra and Mahindra. It's all downbeat, and maybe some two-wheeler stocks. So just tell us a little more. Why did you pick a Maruti and not, say, a Hyundai, which you can also play now? And on two-wheelers as well, today's market is very interesting because Hero actually had good numbers, but the stock is getting sold off. So within auto, what are the other new additions beyond Maruti? And what are you really playing for here?
As you can see in the portfolio, Sansera is a holding that we own for 1 year. It's went up. Samvardhan and Motherson is again 2.5 times. We still hold on. We reduced our weight, but we'll keep this as a core holding. So those are, one of them is a global play, which could have some issues in the interim, but we genuinely like that on a secular basis for next 3-5 years. Now comes the Mahindra has been an existing holding for us. It's worked very, very well. You saw, their EV launch plan. Overall, they've gained market share. In a tough markets, they've done quite well. That is where we are. Maruti, I told you, we just increased as a contra bet. And Hero is one where it's not worked for us. We bought at higher levels. And it was reasonably valued, very well poised, moving up on in terms of the value chain, getting into EV also. It has taken through Ether. It has an NBFC, and then moving up on the premium positioning. So they're doing all the right things. And we found them at a reasonable valuation, but recently it's been hammered and it's not worked for us. But we are very, very positive again on this name. So overall, I think for the valuation as a basket and for the pedigree of the companies that we own, we are very comfortable to own these companies.
Okay. All right. Good conversation and some very interesting ideas over there as well. Thanks for joining in, and we look forward to the next conversation. Thank you very much for being with us. So that's a view coming in on the market. The market, by the way, is still not doing too much, 374 points down. Basically, it's not looking as bad as it was at around 12 noon. One of the biggest events of the week, obviously, is going to be the outcome of the much-awaited US election, and we are in the final stretch now. Prashant's walked over to the wall to help us understand how the process actually happens. How does the United States actually elect its president? Prashant, over to you.
Thanks very much, Surabhi, for that. You can call it a toss-up, a dead heat, coin toss, too close to call, and many more adjectives, really, to describe the US election. But the fact is, it's right in front of us, and we'll have to react to it in the next 48 hours or so. Let's quickly take a look at how this really sort of happens, how the election process really works. First up, the question, right? As you said, how is the US president really elected? Well, eligible voters will elect the next US president, vice president, all 435 House seats, which is House of Representatives, and 34 out of the 100 Senate seats, and more. I'll get to that in just a bit. The next president, either former President Donald Trump or Vice President Kamala Harris, will be determined by what's called the Electoral College. 538 electors among 50 states and DC, where a majority of 270 or more votes is needed. So 538 is the total, 270 or more basically gets you the winner. Now, remember, the electoral vote is awarded on the basis of the popular vote in each state. And this can differ from the overall national popular vote. Basically, each state has a certain number of electoral votes. And depending on who wins a particular state, all the electoral votes which that state has goes to the winning candidate. So in that sense, it's like a winner-takes-all situation. This is true for 48 out of the 50 states. In 2 states, that is Maine and Nebraska, they follow a system of proportional sort of representation. So basically, the way the US election system is set up means that a candidate could win the overall national popular vote, but still lose the electoral college and hence the election. Okay, now let's talk about the lay of the land. Now, historically, we know that some US states like California have always voted for Democrats and some have always voted for Republicans. Assuming this stays the same in this election as well, Republicans can count on 219 what I'm calling safe electoral votes, and the Democrats can count on 226 electoral votes. So this is the starting point, assuming that the Republican states, the red states vote red and the blue states vote blue. Now, as we sort of outlined earlier, 270 is the winning number. 270 or more is the winning number. So Republicans need 51 more and Democrats need 44 more to reach the 270 total electoral vote math. Now, because of this safe seats for both Republicans and Democrats, which we assume will vote the same way, the swing states come into play. And these are states where voters are undecided and have kind of swung between voting for Republican candidates and Democrats in previous elections. There are 7 such swing states which are in focus, with Pennsylvania being the most important because it's got the largest number of electoral votes. The other 6 swing states are Michigan, Arizona, Nevada, North Carolina, Georgia, and Wisconsin. This is also, mind you, the closest election in a really long time. Trump, this could change, but he's leading the national polls by just 0.3 points and is either tied or very marginally ahead across all major swing states. The last 2 elections were also very close. For example, in 2020, just 43,000 votes across 3 states. That is 0.02% of the total national vote determined the winner. And if you go back to 2016, it was 77,000 votes, 0.05% of the national vote, which determined the winner. Could this be sort of close or closer? We'll find out. Lastly, we come to the question, when will we know the results? And a lot of debate around this. Remember, the AP, Associated Press, which is traditionally called the US election, back in 2020 did not call the election until Saturday, November 7th, 4 days after the election day. With this election also being very close, could we see a repeat? Sure, we could. But do remember that a delayed official result does not prevent, and I think will not prevent, financial markets, which will be trading, from reflecting the likely election outcome on the election night in the US, Tuesday night, or early morning, which is Wednesday morning, when we'll be trading as well. So let's get to specifics in terms of by what time, and I've converted those sort of timings to our time. So by Wednesday morning, 6:30 a.m. our time, majority of polling stations in the US should close. News organizations cannot make official projections, their own projections about the polls until polls close. Prior presidential elections have been called by about 9:50 a.m. our time on Wednesday. Of course, there are exceptions, as I said earlier. These include the year 2000, 2016 and 2020, where for year 2000 and 2016, the Electoral College winner was not the popular vote winner. So I guess be prepared for an exciting Tuesday night if you plan to follow US elections, if you plan to stay up and sort of, munch on popcorn as you watch it, or if you plan to get to work Wednesday morning extra early or get up extra early and catch all our programming on the US election verdict and the market implications thereon. Back to you guys.
Thank you so much, Prashant. You took the words out of my mouth with that kind of a primer. I'm so ready. It should be like large cups of coffee, if not popcorn and some cookies. And this Wednesday morning is going to be definitely a very exciting session of Bazaar. All of us, of course, are going to be here and we'll take you through the blow-by-blow outcome as it unravels. Well, we'll take a quick break on that note, come back with more on the markets in just a bit. We'll have Dipan Mehta of Alexa Equities join in.
Your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18. Trends. Last year, festive season saw a 12% spike in premium and luxury spirit sales, according to CIABC data. With consumer spending high, 2024 is poised to outdo that with even more new launches and robust demand. Many in the industry are leaning into the premiumization strategy, hoping that these high-end products will help offset inflationary costs that have been cutting into the margins. Back to you.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bazaar at these times on CNBC TV18 and CNBC-TV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that make CNBC TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown.
Welcome back. We've seen a bit of a recovery. 100 points off the low point of the day. The PSU banking names, they are fighting back, so that's good news. SBI has seen a good fight back. IndusInd Bank has been one of those stocks in the last 1 year that's been a big underperformer in comparison to what the Nifty has done. That as well has come off the low point of the day, so that's good to see. And I think ICICI Bank as well, it's cutting its losses a little bit. So that's good to see. At least the number of stocks advancing has moved up from around 300 stocks at the low point of the day. You have around 500 stocks that are advancing, so that's why your portfolio will be feeling a little bit better. Let's get in Deepan Mehta, though, who joins us on the show. Hi, Deepan. Good afternoon. And it's that sort of an afternoon, right, where either you participate, look to buy some stocks, or you say it's looking too hazy. Let's stay aside, let a couple of these days pass out, and then you come back and, buy what you want. But the stock I want to ask you about is Bajaj Auto. One of those big outperformers. Management did the right thing. They did a buyback. Business started firing as well. They're gaining market share, not just in the normal ICE vehicles, also in the EV part of the business. But post their numbers, the stock has become nervous. And after today's monthly update, it's even more nervous. What do you make of the management said? They're saying they're reporting wholesale numbers, but the retail sales actually are quite positive. The street has not bought into it, though. Your view?
Yeah, Nigel, good afternoon and thank you for having me on your show. So yeah, this is one of those afternoons, but we are just staying away for the time being. And specifically on Bajaj Auto, I think that you need to wait for better monthly numbers to come through. A bit disappointed on the export front as well, because that's like a big saving grace when domestic markets turn soft. Bajaj Auto, but other companies have reported impressive numbers. So I just want to wait and watch and see who the winner emerges from the two-wheeler space. I thought TVS and Eicher also certainly may offer a better risk-return profile as compared to Bajaj Auto. But all of them are more or less on the same level. And I think returns also over a medium term will kind of be within a particular band. I don't see any one company really outperforming or one company really underperforming a big time going forward.
I was looking at numbers from VST Tillers. No great shakes here either. The revenues kind of flat, just 1.5% up. Profitability is under pressure. Margins are also slightly lower. And stock's not doing anything. So yeah, it's been fairly volatile and largely lackluster for the auto pack. Deepan, hi, good afternoon. So have you been shopping around? There's a Diwali sale or post-Diwali sale, it seems, going on in the market now. 10% gone from the index, or not 10, 8.5% gone from the index, a lot more in individual stock names in the last 1 month. Have you been buying or are you still waiting?
Good afternoon, Surbi. Just still waiting. I think valuations certainly have come off. They are back to perhaps where they were in the first quarter or beginning of the year, because earnings also have gone up for a lot of good quality businesses. But still, I think valuations are on the expensive side. We're certainly not in bargain zone as of now for a whole host of good quality businesses. So just wait and watch. I think that in this particular phase of the market, this correction, the investors, especially retail investors' conviction will be tested, and that will immediately reflect itself in mutual fund inflows. So if they remain strong, then you may have a short-lived kind of a correction. But if you see flagging of the numbers as far as SIPs and net mutual fund inflows are concerned, then certainly we're in for a long winter, so to speak. So I think right now it's better to just wait and watch and see how this market plays out. It's a very critical phase of this bull market, which we have seen for the last 4 years or so. And it could be a turning point as well. So I would just like to, sit on cash for the time being, and maybe pick and choose only where we see a deep correction and a good amount of value coming back to good quality growth stocks.
Deepan, afternoon. I wanted your thoughts on one particular name, Credit Access. Now, most people will balk at the idea because, MFI and results, etc. But a few things going for it. It's first of all, it's halved from its highs, right? Late December 23 is when it made a high about 1850. It's basically half from there. Valuations relative to its own trading history substantially below. And within MFI, which is a tricky space, it is, you would agree, and most investors would agree, it's the best, highest quality name. So just your thoughts, if you've thought about this at all.
Yeah, Prashant, good afternoon. I've been thinking about it a lot. It's one of the stocks in our portfolio, and we are feeling the pain as with most other investors in the company. But I've been observing this MFI space for many years, and I was an early investor in Bharat Financial, which got merged with IndusInd also. So, this is a very, very volatile space. And 2-3 years go really good, and then 1 or 2 years, there are huge setbacks. But end of the day, the long-term fundamentals of the sector are great because it's underbanked, it's a segment which requires credit and which deserves credit also. It's just that from time to time, these collection problems come through. So companies which have got a good track record during previous times when there was a stress in the sector, like Credit Access, those certainly should be preferred. And truly, it's a growth segment within the entire NBFC banking space. So I'm not throwing in my towel as far as MFIs are concerned. And being long-term investors, if you can take a 50% correction in the stock, then this sector can do really well when the actual, sector turns around. And RBI also is very vigilant over there, and they are trying to implement a lot of steps whereby the growth and the collection of the entire segment within the NBFC also improves. So I think that if you have a really long-term view, 3 years, 5 years or so, then this is a great time to get into some of the quality MFIs. And I totally agree with you, amongst the entire, eco space of MFIs, Credit Access by far is the best when it comes to collection, as well as when it comes to diversity of their geographical diversity of their AUM.
Okay, do you fantastic and good to good to hear those views on Credit Access, Deepan. Just one more sector, transformers. I was reading this report in the Financial Times where they interviewed the Hitachi Energy Global Management, and they were talking about the big shortage that they still see. I mean, it's there and it's here to stay for transformers. I don't know if you own any of the stocks. Stocks have done phenomenally well last 2 years. They've doubled, tripled in some cases.
That's right. We don't own any of these stocks. But end of the day, I think this electrical equipment companies have done really well. This kind of renewable power and more sources are away from traditional areas where consumption is taking place. So therefore, the demand for transmission equipment has certainly increased. But look at the valuation, whether it's a Voltamp or a CG Electric. And then there are some parts, some parts of the transmission business which are done by ABB and Siemens as well. But all of these companies are really expensive. And, base effect also going to catch up for these companies. So I'd just, wait and watch. The better way to play the electrical equipment business would be through the transmission companies like, say, Kalpataru or even a KEC International, which have a more global operation as well. And I think valuation is a little bit more reasonable over there.
KEC, I think numbers are also expected today. Let's see how the company fares in the second quarter. All right, Deepan, we will let you go on that note. Thank you very much for joining in and giving us perspective on what's turned out to be a bit of a tough Monday for the bulls. The saving grace is, like we've been saying, is that the market has recovered from the lowest point of the day. It's a good 120, 130 point recovery now. Slight leg up as we can see over there. Need to take a quick break, I think. And as we take this break, let's get you a programming reminder as well. As CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year. The CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted, so you don't want to miss this.
And ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news cover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
Welcome back. So we are just about 15 minutes away from 3 o'clock. The market stabilized. That's good news for the bulls for the time being. We have Mitesh joining in for some trading calls. Mitesh, it's been quite the day. But I don't know, I mean, are you feeling confident enough to now go buy in, buy the dip? What's the strategy? Index as well as, of course, individual stocks.
So, good afternoon. I think, we talked about the fact that in case you break 24,170, we'll add on to the short side positions. We've done that. And while there is some recovery, about 130, 140 points from the lows, the structure hasn't improved as yet. And my belief is that there's a good chance of us testing the 200 average area on the Nifty. And there's also a gap area around that level, which comes in at about 23,560 odd levels. So I think and the 200 average is at 23,450 and is rising by a few points every day. So I think the 23,500, 600 zone could be tested. That's where I would want to take profits on the short position. So for the time being, I think, we're maintaining a negative bias and we'll just suggest people who have short positions to trail their stop loss. Now, I think 24,050 on the spot, about 100 points higher from here could be a good level to trail your stop losses.
Okay, got it. So you continued with the negative bias. Midesh, what about individual stocks?
So, good afternoon, Ajil. I think I have one buy and one sell, given the fact that we have a lot of index short positions. So, identifying some stocks where longs can be taken, and that is the way approaching the markets. A long a buy on Motherson with a stop at about 180 for targets of 191 can be looked at. While L&T Finance, I think that's something which I would recommend selling. Keep a stop at about 146 half. Look for targets of 137.
Okay, all right. Thanks a lot for that, Mitesh. We'll come back to you for a fresh call in the next few minutes or so. By the way, what's helping the fight back? It's actually tech. Tech's done quite well. You pull up the intraday chart of the tech index, and maybe you pull up stocks like Infosys, TCS. I think HCL Tech and Tech Mahindra, both of them, they moved to the high point of the day. So the index itself has cut its losses, and some of these stocks, they've now moved to the high point of the day. TCS as well as cut its losses. The other two names that I mentioned, pull up Tech Mahindra, that got, I think, a harder knock last week. That's holding with a gain of close to around 2%. So Tech is clearly fighting back. The problem is the auto stocks. They have seen a sharp fall, despite some of them reporting a better than expected performance in the past month. Bajaj Auto as well is under pressure post the numbers that it reported. Sudarshan joins us to help us out with a quick analysis on all of those stocks. Sudarshan, take it away.
As you said, it's been a surprising move that we have seen in some of the stocks after their monthly sales. Stocks like Hero, TVS and Eicher have fallen sharply, despite these companies reporting sales that looked much better than estimates and even saw a healthy growth year on year. For the month of October, overall domestic wholesale volumes for two-wheeler industry were up 17%, and for passenger vehicles, growth was at 2%. And retail growth for festive season 2 has been better than expectations. Two-wheelers saw a growth of 12%, and growth for passenger vehicles was in the range of 8 to 9%. So let's start with the company which reported an all-round beat, and its top Nifty gainer today is M&M. Both auto and tractor segments for M&M have done well. Auto segment was led by SUVs, which saw a growth of more than 20%, and for tractor segment, good monsoon has helped the company to report a healthy growth. For Maruti, total sales were in line, supported by exports, but for Maruti, the concern is entry-level segment, for which it saw growth has declined. Basically, it reported a decline year on year of 20%. For Tata Motors, sales were almost in line to a slightly higher than muted expectations. It reported sales that were unchanged year on year versus our expectations of a decline. And even for US retail sales for JLR, company has reported a growth of 20%. For TVS, again, sales were in line with estimates. Motorcycle sales have increased 14%. Scooter sales were up 17% year on year. For Eicher Motors, company has reported highest ever monthly sales for Royal Enfield. It reported sales of 1.10 lakh units, registering a growth of almost 31% year on year. For Hero Moto, again, company has reported highest ever monthly sales led by 100cc and 125cc segment, and total sales were up 18% at 6.79 lakh units. Also, just a few minutes ago, company has reported disclosed retail sales for festive season. It says company has recorded highest ever festive sales with growth coming in at 13%. For Bajaj Auto, amongst all the two-wheelers, it has underperformed, and it has reported sales that were much below estimates. And concerns for Bajaj Auto are domestic segment, while exports have done much better. Total sales for exports have come in around 1.75 lakh units. Ashok Leyland sales were below estimates, except bus segment. All the segments of Ashok Leyland have seen a dip, and total sales were down 9% year. So it's not all bad for the month of October. Overall sales and festive season growth have been looking much better than the commentary from few companies that we had received in midway of the festive season.
Okay, all right, got that, Sudarshan. Yes, it's some good, but then a lot of segments, like you're saying, commercial vehicles in particular, they continue to reel under pressure. Entry-level cars, commercial vehicles, no improvement whatsoever. Well, let's discuss this and a lot more with our next guest. Gurmeet Chadha of Complete Circle is with us on the show now. Gurmeet, festive greetings. Hope you had a splendid Diwali and good wishes for the new Samvat as well. So let's start actually right there. Like, autos, now a lot of these stocks are off anywhere between 10% in the case of an M&M, going up all the way to 24-25% with some of the two-wheeler names or even Tata Motors. The question is, should you be buying anything, expecting a recovery, say, in the next 2-3 quarters?
Subi, Diwali greetings to everyone. So I was traveling to MP, my hometown. I think the rural recovery to me is early signs. I think there are some green shoots available. This was a much better Dhanteras and Diwali as per the ground feedback we got, and we are into similar business. So I would be probably trying to play the rural recovery over the next few months. May not be immediately. I think the price adjustment because of earnings and number disappointment, I think maybe 70-80% has played out. Also, the auto stocks had run up a lot. The auto index was up to 30 to 40%. A lot of these stocks were trading at 35-40 times. So some bit of a pullback on numbers not being as good is normal. In fact, the market is not differentiating. If you see M&M is actually up today 2.5% after reporting a great set for October. Even the tractor numbers were up 30%. Similarly, the markets have not been very kind to likes of Tata Motors and others, because Tata Motors domestic as well as the global numbers of JLR due to aluminium and other stuff and China numbers have been a little soft. So I think from here on, market will differentiate. I think the price adjustment because of soft earnings and soft numbers to a large extent, in my view, has played out in auto. Here on, it will be a question of who does better. And that's why you got to be selective. So on two-wheelers, we are trying to add Sandhar, which has 60% exposure to two-wheelers. We are trying to add some more names in two-wheeler names. We have a Sundaram Clayton in the portfolio, which has done very well for us. And then we are trying to add some OEMs where there has been a good correction. Likes of M&M, likes of Tata Motors now, starting now, around 800 odd level. So we are trying to gradually build this. I don't think so. We are in a structural downturn. It's a bit of a softening of numbers, bit of a base impact. I think things should come back.
Absolutely. And coming back to you, Gurmeet, on that for more. But let's talk about Indigo as well, which is in focus ahead of launching its first flight with business class seats. Madhya, who of course tracks aviation very closely, is with us. It's a significant milestone event for Madhya, isn't it?
Definitely. 14th November is set to be a historic day for Indigo. It will debut the business class product on 6 daily flights on the highly popular Delhi-Mumbai route. The 3 flights from Delhi to Mumbai will be at 7 a.m., 1 p.m. and 7 p.m. while the flights from Mumbai to Delhi will be at 10 a.m., 4 p.m. and 10:15 p.m. Now, each of these flights will feature 12 business class seats, so that makes it 72 business class seats across the 6 flights on the Delhi-Mumbai route every day. Now, Indigo has set a flat fare of 18,000 rupees for all these business class seats as compared to a higher fare or other carriers like Air India and Vistara. Looking ahead, Indigo says all flights on the Delhi-Mumbai route are expected to feature a business class cabin by early January. Then by March 2025, business class will be available on all flights from Delhi to Bengaluru and Chennai. And in the next 14 months, Indigo aims to induct a total of 45 aircraft that will be equipped with business class seating. These planes will cater to 12 routes, so 268 Indigo flights are expected to have business class offering in the next 14 months.
All right, Vamakshi, thank you very much for that. So 14 November, business class seats as far as Indigo is concerned, and flat fare 18,000 rupees, 18,000 and change to start with at least. So that's the price on your screen, 3966 on Indigo. Gurmeet, I don't know if you own Indigo, Interglobe in your portfolio. Any thoughts? You heard Madhya?
No, I think I was a bit surprised by the quarterly numbers. The EBITDA numbers were down 26%. Some of it was, the fuel impact. Also, there are about 60 planes are grounded due to the P&W maintenance issue. And they've guided that this number will come down to 40 next year. But in terms of, if you see the passenger load factor, it's almost 80 to 83%, which is amongst the best. I think efficiency-wise, they're right up there. And globally, they're right up there. Even if you look at revenue per passenger kilometer, which is one metric, that's also around 31 odd plus billion, which again I think is best. And they're starting 2 more international routes this year. Then there is this business class, and I think travel as a consumption in terms of wallet share and consumption basket is only going to go up. We have a very heavy wedding season ahead. Almost 40 lakh weddings more due for the remaining part of the season, and even the business outlook seems pretty okay. So I would probably be positive, and fact that the Gangwal issue in terms of large part of the selling in terms of supply pressure is behind you. And if you see the domestic fare tracker, which airlines publish and that's available in public domain, that's also up 12-14% on the domestic route. So I think it's a good price point to probably start nibbling into it and gradually accumulating.
Okay, that's Interglobe Aviation. So, Gurmeet, I've been asking most of our guests to give a pick, right? Because there is this, discount season of stocks that's underway, which is rare in our market. Deepan earlier, he came before you. He said he's still waiting and watching, not rushing to buy. And what about you? Any name? Maybe you won't buy today or tomorrow, but something that you're quite convinced on, and this is sort of a medium-term portfolio call that I'm asking for.
So, Subi, one question you have to ask yourself: is this slowdown in India structural or a bit of a softening after a good growth period? Second, will US elections or rising bond yields or China's stimulus matter after a couple of months or not? Nobody can predict the bottom, but you got to get into something because, with markets, once the levels keep falling, you may have cash, but the courage disappears, right? So you have to keep gradually doing it and can't perfectly time it. So we are trying to add, as I said, more financials. One theme which I like, which I've been talking with you, is this entire recycling thing. I think we have done a lot of harm to Mother Nature, Earth, and I think look at the water pollution, look at the air pollution in Delhi, and most metros for that matter. So we are extremely positive on water as a theme, water recycling, water desalination. So we like VA Tech in this space. We are very positive on plastic recycling. Ganesha has been one of our top picks for a while. It's really rewarded us well. I think, and there's a fine now government has put in. It's almost 25 rupees a kg for every non-compliance. So, something like a Coke, Pepsi, etc. They produce 600 crore PET bottles. So the opportunity size is pretty big here. So we like this theme, and that's what we are very, very gung-ho on in terms of picking. Rest, we are adding some banks and some autos and some capital goods and defense themes on whips.
Okay, all right. Gurmeet, PVR is the other one which we want to just highlight for our viewers. It's down sharply and it's actually going down on pretty large volumes. This despite reportedly both Diwali releases, which is Singham and Bhool Bhulaiya 3, doing pretty well. Vamakshi is here with details of not what the stock is doing because the stock is down, but the box office collections. Vamakshi, take it away.
Well, absolutely. PVR Inox, in fact, the stock is down in trade. It's seen the biggest intraday fall since December 2021. In fact, among the top losers on the Nifty 500 index as well. But there is nothing substantial to justify this fall, and that is because the company has been seeing good box office collections. Both Singham as well as Bhool Bhulaiya 3 have done well. Both of these movies have crossed the 100 crore mark in the opening weekend, and despite the head-to-head, clash, and this is quite rare. Singham again managed to garner net box office collections of 121 crores, while the same figure for Bhool Bhulaiya 3 stood at 106 crores. There were some other notable releases as well. Let's look at how they performed. Amaran managed to garner nearly 84 crores, Lucky Bhaskar 29 crores, and Venom: The Last Dance managed to get almost 47 crores in net box office collections. For PVR Inox, this in turn translates to good box office collections. For Singham again, Nuvama estimates that the box office collections over the last 3 days for PVR Inox alone could be somewhere around 41 crores, while for Bhool Bhulaiya 3 it could be somewhere around 35 crores. Even the occupancy seems to have picked up. Bhool Bhulaiya 3 saw an occupancy of almost 73%, while Singham again saw an occupancy of almost 54%. Not just that, there are several other big ticket releases lined up. From the domestic market, we have Dhadak 2 as well as Pushpa 2, The Rule, which is releasing in November and December respectively. But even Hollywood movies are making a comeback in a big way. We have Moana 2, Lord of the Rings, as well as Mufasa the Lion King, that is scheduled in November as well as December. In fact, when the management had joined us earlier, they had alluded to the fact that Q3 could be substantially better than Q2 in terms of average ticket prices, the spends, etc. And in fact, they also highlighted that in fact Q3 of this year could be as good as Q2 of last year, which was one of the best quarters for the company in its history. Novama, there's a take coming in from there as well. They say that they are concerned over urban consumption slowdown, but they're expecting both of these movies, Bhool Bhulaiya 3 as well as Singham again, to pick up over the weekend. In fact, in a note that the company had posted earlier on September 23rd, Novama said that they anticipate the company to achieve the highest ever monthly admissions as well as box office in November as well as December. December. So overall, it's been good for PVR Inox, but unfortunately the stock is tanking in trade.
I guess. And today, in any case, it's in the midst of overall wider market sell-off, so that could have a role to play in it as well. Vamakshi, thanks for, however, highlighting that some of those movies have done really well, and maybe with the Diwali festivities behind us, maybe the collections pick up in the coming weekend as well. We do have to take a very quick break. On that note, we will come back on the other side. We'll have Tushar Pradhan, director at Hexagon Partners, joining in with some perspective on the market.
On the street, they say, "Ye dil mange more," right? Now that you're listing, you also have a listed peer. With the trajectory that we've seen on them, on a lot of the parameters, they're above, what Swiggy is right now, which is not to say that you're any less. It's just that you're at different stages of growth in your life.
Correct. I think, look, there's a lot of context. We each have our own context, and we are in very, very exciting categories. And our strategy, our capital allocation, everything's going to be a function of our excitement and what we can go after in each of these. Like Rahul mentioned, we've demonstrated the profitability in the food business. We feel good about its future going forward. As for quick commerce, I think it's in a once in a lifetime category, and I think we are seeing consumption patterns change for consumers, and there's so much to be done. So our endeavor will be to make sure that we do the fullest of our ability to make sure that we grow and serve customers well and make sure that everything comes together nicely.
But for quick commerce, you recently said that the peak of the investment is behind you,
That's
but
right.
you're still not a contribution margin positive either. So, what is the trajectory there for quick commerce? Because even for your peer, that has been the growth driver, right? So, how are you looking at the quick commerce business for you in terms of being? Is it also going to be the growth driver for you? And sort of trying to get a sense of the path of profitability on that front also.
See, maybe I'll take this. I think on quick commerce, what really amazes us is the way consumers are reimagining, things, or what can be delivered to them. So it's almost like every quarter we have to recalibrate around, what is the number of categories that we have to be there, what are the number of SKUs we have to launch, and there's a recalibration happening. Growth is accelerating. So there'll be a certain amount of, say, new store additions that we'll continue to do. The old stores continue to mature well, which means that they become profitable over a period of time, and the new stores come in because consumers want a lot more.
Investing. Okay, welcome back. You got the market, which is down about 320 points, which means that we're off the day's lows. I think we're off the last 1 hour lows as well. There's a slight lift, as you can see, coming through on the indices. There are some flashes from Reuters which are coming through. The Reliance Jio IPO is likely in 2025. Reliance Retail sort of IPO is much later. This is according to sources to Reuters. That's the information which is coming in. I mean, the Jio IPO is indeed widely expected by the market in 2025. And I think the story just kind of sort of corroborates that. But this is a story, once again, from Reuters, which is coming through. Stock's not really reacting very much at all. I think from the lows, it's picked up, but not after this news. The low was made early on at about 11:10 this morning. That is on Reliance. 1287 was the low. Stock's at about 1307.
Tushar Pradhan is with us, Director at Hexagon Partners. Tushar, good to have you with us here. Thanks for your time. Good to have you here. Quick word, Tushar, on markets which are selling off. Another 300 points, just under 24,000. How much more in your opinion? I think you'll have to unmute yourself, Tushar.
Sorry. That question is an amazing one because if I knew the answer, it would have made me very rich. So there is really no way to predict.
Not necessarily, Tushar. You can have all the answers, but making money is. But anyway, I mean, because are we in the? So earnings certainly are coming off a little bit. You'd agree, but as it often happens when you're going through a market correction, you always wonder, right? I mean, is this a slightly bigger one? Have the markets on the upside overdone it? Those are natural questions to ponder. So just wanted your thoughts there.
Yeah, nice to make that context a little bit wider because I think we need to answer that in a wider context. The biggest happening which is going to come upon us is, of course, the US elections. Now, you would argue that what has Indian markets got to do with it? But I think we're all interrelated here. And I think this is a major one, at least from a news perspective. 2-3 things really come to mind because of that is that the US markets are likely to react in very different ways to either of the candidates coming to power. Now that leads to a lot of uncertainty. And I think that uncertainty is something which is playing into the markets right now, even our markets, because people are unwilling to take a bet because of the direction in which markets are likely to go after the verdict is out. Because as we know that both of these candidates have very distinctive economic agenda, and that will lead to a different set of outcomes for most of the companies that we trade in. And as a result, globally, that will have a big impact on earnings per se, as well as where the economy in the US goes and then eventually the global economy. So I think that's a big overhang that I think our markets may be just feeling a little tense about. If you look at the fundamentals, and as you mentioned, earnings have been a little soft. I won't think it has been a little soft. I think it's been a little bit less than expected given where the market valuations are. So we've seen companies which have been delivering in line with what their expectations are, yet they underperform. And I think this is something to do with the market sentiment rather than the fundamentals alone. So I think from an India perspective, the earnings situation continues to remain very strong. We just ran a couple of screens and we find it very difficult to find any company which has had a significant drop in quarterly earnings in the last 2 or 3 quarters. So it does show you that there has been tremendous earnings momentum. And this kind of momentum doesn't come to a halt suddenly. So I think there are 2 issues to concern us. One is what will be the sentiment going forward and where are the fundamentals? And I think if the sentiment worsens, then even if you have good fundamentals, it doesn't hold up too much. So it's more to do with the near term rather than any lasting impact, I think. That's the view I have now.
Hi, Tushar. Good afternoon. Good to see you. So what would your strategy be then? We have big events. The markets have run up considerably. Earnings misses could be relatively less. But at these valuations, they count, right? And they hurt. So what would your asset allocation strategy be?
Well, if it is purely equities, then of course, we don't have any option to leave equities as an asset class. But overall, if you were to look at an institutional portfolio and say, look, I want to position, a portfolio which is largely liquid and designed for relative performance over the next 1 or 2 years, I think the asset allocation could definitely look at a little bit of debt, because I think the uncertainty and the volatility is not going to go away in the next few quarters at least. And as a result of which the overvaluation could lead to some sort of profit taking and a sort of stowing away, I would think, some of the gains into fixed income for a while. But I'm not suggesting a switch out of the asset class. I'm just saying that at the margin, I think there could be a reason to kind of revisit the allocation there. From an equity alone perspective, I think that is really where the rubber hits the road, and we now need to distinguish between companies which have run up on the basis of sentiment or popularity or I would think, the sector having done well and everybody benefiting out of that, as opposed to companies bottom up who actually will be able to deliver their promise. And I think there is a very, very hard look that needs to be taken in terms of which companies will deliver on the promise on the fundamental side and which ones are likely to, kind of fall away if the sentiment remains pretty negative for some time. So I think the review in equity portfolios have to be done really from a bottom-up perspective and to kind of reassess the risk that anyone has taken. Of course, the fact is many equity portfolios also contain a speculative element. They also contain a sort of, I would say, defensive element. And I think this is the time to improve the defensive element in any portfolio.
Okay, all right, Tushar, appreciate you stopping by. A short but sweet conversation today. We look forward to chatting with you in the coming weeks as well. Well, the markets have recovered, from around 300 advancing stocks. You had close to 500 at the start of the show, and now that number's moved to 550. So the breadth of the market, at least, there is some kind of improvement what we're seeing out there. Two sectors that are pulled back considerably. One is the PSU banking names, and the second one is the tech space that's seen a good bounce from the low point of the day. Nimesh joins us to help us out with what he's picking up in D-Street Chatter. Nimesh?
Hi Nigel, today's fall is a bit of a surprise. Actually, it was not anticipated, or there was no indication of that kind of a selling as well. So again, the feedback is while the stock markets have recovered from the intraday lows, barring few banks and few large cap names where there is one particular FII who's looking to unwind the book, most of the other desks didn't have such a large sell flow. In fact, it's either positive or neutral as far as flows are concerned from the larger FIs. So, well, the Nifty, the fall looks quite sharp. My sense is not backed by very large FI selling, barring that one long only fund which has been a seller. In terms of sectors, clearly banks stand out in terms of selling pressure, and technology is the other sector where there is selling pressure from larger FIs. On the other side, metal is well bid. I guess a bit of pre-positioning before the China stimulus package. So that's something which is well bid. Technically, the feedback is that while the markets have recovered from the lows, 24,070 on a closing basis will be very, very crucial for any sort of a meaningful pullback or a short covering rally. Net, while the Nifty is down, the broader markets are down. Looks like it's more of local unwinding and just one large FI unwinding, but the otherwise flows are not very large from larger distributions.
Okay, all right. What about individual stocks, Nimesh? What are you picking up?
So Nigel, in terms of individual stocks, the first stock is Torrent Pharma. The stock was under pressure last week when the promoter sold 3% stake. But because of that promoter selling stake, there is a FTSE rebalancing adjustment in today's trade. So last 30 minutes, you're going to see an inflow of close to $14 million because of the weight going up in FTSE. So that's the first stock. That is Torrent Pharma. The second stock is CAMS. The stock has been a big outperformer in the last many days, and that's backed by FI buying. That continues, even in today's trade, the sense is there is aggressive buying from larger FIs in CAMS. The third stock is IIFL Securities, again a proxy market play. The stock is under pressure today, but the sense is after a long time, some bit of institutional interest seems to be back in IIFL Securities. Expect high delivery volumes, and there is buying interest from larger FIs in that particular name. And the last is Manappuram Finance. For second day running, that stock is under pressure. We saw a big move last week, but after the Ashirwad numbers, the stock was under pressure. And for second day running, there is delivery-based selling happening in Manappuram Finance. So it looks like some larger FI seems to be selling out of Manappuram at these levels.
All right, Nimesh, thank you very much for that. So that's individual names and focus. We'll take a break. We're going to come back, get you short-term trading ideas on the other side with our technical experts. Stay with us.
It's a recalibration of our overall growth trajectory in line with the demonstrated path to the contribution margin that we continue to will demonstrate.
Well, cheers to the festive season that's raising the bar literally. India's alcobev makers are toasting to the record sales and new launches, hoping to make this the most spirited quarter yet. This quarter alone typically brings in about 30% of the year's volume in the prestige and above category, fueled by celebrations like Diwali and New Year. Let's start with Radico Khaitan, which has seen steady growth in its premium segment during the festive months, marking a 15 to 20% volume increase year on year over the last few years. Meanwhile, Amrut Distilleries is also celebrating success both at home and abroad after 5 years of 30% festive season growth. This season, Radico Khaitan is launching the
Welcome back. So the Bulls have really been fighting back hard, and 24,000 is back on the screen, and you have to give it to them that they didn't throw in the towel entirely, and there's been some recovery. We have Mitesh back. Mitesh, earlier you were telling us that this is still not looking very convincing, and you had gone short, I think, earlier. Are you still running with those shorts on the index, or looking at this recovery, would you be inclined to closing them?
So we haven't closed the shorts. As I recommended trailing the stop to about 24,050 odd level. There's still about 50 odd point left on the trailing stop loss to be taken out. The structure still remains weak. We have definitely bounced back nicely from the lows, but the overall close is still on the negative side. The indicator setup is on the negative side. The only thing is that the markets are slightly now showing oversold readings on the indicators, and therefore trailing stop losses would be a good idea, because you don't know whether it will rebound from here, take your stop loss, or it will continue to fall in an oversold situation. So I think that's the way to approach it. And on the stock side, I have one buy and one sell. TVS Motors is an STBT with a stop at about 24.26 and a target of 23.70 on the downside, possibly can be looked at. While on the long side, I would recommend BTST on Reliance, which is extremely oversold and hitting some historical pivot levels. So Reliance is a BTST with a stop at about 12.89 and a target of around 13.20.
Okay, all right, Mitesh, thanks a lot for that. Well, the MSCI November review will be announced on November 6th. Vivek joins us with the key expectations. Vivek?
Well, that's right. Remember last year it was on November 14th. This time around, it's slightly earlier than what the street was anticipating. So November 6th is when MSCI will be going ahead and announcing the review and the list of changes, list of inclusions as well as exclusions as far as the MSCI index review is concerned. For interviewers, it will be on early 7th morning. Now there are quite a few inclusion candidates that may make the cut this time around. As per IIFL, we have almost 6 candidates that may make the cut this time around for inclusion into the MSCI Standard Index, the index that we track where there will be maximum amount of impact. The first stock on the radar will be Alchem Labs, expecting flows of close to $200 million. The next stock, stock that may qualify for cutoff, depending on when the cutoff date is, and that is Voltas. Voltas may see inflows of a little over $300 million if in case it does make the cut. Oberoi Realty, Adani Energy Solutions, Kalyan Jewellers most likely have already made the cut. So safely, that's another 4 stocks that you can look at that have made the cut. And lastly, Bombay Stock Exchange, similar to Voltas, this stock too may have made the cut this time around. It can expect to see inflows of a little over $220 million. Another important stock that will be on the radar is HDFC Bank. Remember, in the previous quarterly index rebal, you saw one tranche of weight up. This time around, there's another tranche of weight expected. $1.8 billion of inflows is what IIFL is anticipating into HDFC Bank this time around.
All right, interesting one, Vivek. Thank you very much for that. There's about 9 minutes to go for market close. We're going to take another quick commercial break here, but there's more lined up on the other side. Stay with us.
Jaisalmer Indian Craft Gin, aiming to capture the high spirits of the festivities with a product as luxurious as its audience. Amrut is also making headlines with its limited 2 Indies rum, which is premium blend, is specifically crafted to appeal to India's growing taste for luxury spirits while enhancing Amrut's profile on the global stage as well. Now, Indri is also making waves, winning a prestigious gold medal at the Whiskies of the World Award for its Diwali Collector's Edition 2024. The award not only underscores India's presence in the world of fine whiskies, but also highlights the trend towards premiumization, one that is sweeping the industry. Now let's zoom out to the broader industry trends. Last year,
festive season saw a 12% spike in premium and luxury spirit sales, according to CNBC data. With consumer spending high, 2024 is poised to outdo that with even more new launches and robust demand. Many in the industry are leaning into the premiumization strategy, hoping that these high-end products will help offset inflationary costs that have been cutting into the margins. Back to you.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust, giving unparalleled access to global thought leaders.
Welcome back. We've staged a bit of a recovery from the low point of the day, 150 points off the day's low. The Nifty Bank as well has pulled back more than 250 points. Rahul Sharma is with us of JM Financial Services. Hi Rahul, good to speak to you after a while. How are you viewing this kind of a pullback that you're seeing? Do you think we're headed to the 200 DMA, which is 600-700 points away from current levels? Or do you believe that from here on we could see a bounce up?
Yeah, so, Nifty, the way we've seen the sell-off today, one thing is clear that, 23,800 remains like a crucial make or break area for the Nifty. We almost went over there and broke that support, but apparently, market had other plans. Now, as long as 23,800 is intact, we have a conviction that the bounce back can be expected in the Nifty, where we could retest the 24,500 area. But having said that, markets are still on a slippery ground. We have a multitude of events lined up in this week, so volatility is going to be at the forefront. The best thing to do is do the strangle approach, buy OTM call options and put options at the same time, and play this week out, post which we are expecting volatility to settle and a clearer trend to emerge in the markets.
How about that strategy on the strangle? Which strikes would you recommend? Buying out of the money call as well as the put side and the combined premium on
yes. You could look at the 24,200 call options, which are currently trading at 107, the 7th November expiry, and the 23,800 put options, which are trading around the 113 mark. So the combined premium is approximately 220 rupees. We expect this premium to do well. One is the VIX is expected to go up as the event unfolds, the US elections. Plus, we have so many updates coming in globally. And secondly, a 300, 400 point kind of a move on either side could mean that this strangle becomes profitable. So strangle is the way to go. 23,800, 24,200 put call options can be considered for this strategy.
Okay, Rahul, so those are some index calls. Tell us about any individual pockets of the market, because I think the problem that investors are facing after a long time is usually in all the prior falls, you immediately knew where the momentum was and where to go and buy the dip. And now there's no clarity on that. So it's not like straight jacket, you go buy defense again or railways again and the stocks will start running. Just some guidance on this front. Would you be looking to buy, say, banks in the fall or anything else?
Yeah, so in this correction, there has not been a single hiding space. Basically the correction or the sell-off has been broad-based, which is the reason why, we are not seeing even the defensives one sort of, provide support to the market. But having said that, some green shoots are visible on the PSU banking space. The PSU bank index looks pretty decent technically at current levels. We are seeing leadership coming in SBI. We are seeing a good setup being formed in Bank of Baroda. These are the two names which could do well on the upside. But Bank Nifty itself on the back of private banking names is not really in the best of shares. So it again remains a tricky trade. But best thing to do in such volatile periods is keep the position sizing small and stick to sector leaders. Now these sector leaders start moving, we could see tier 2, tier 3 names also follow suit. But until that happens, I think the best thing to do is go with SBI. Can be bought at these levels, stop loss placed at 810, maybe a 875 kind of a move can be seen before the results. I assume the results are on the 8th of November. And before the result, we could see some bit of action happening in the same. Apart from PSU banks, it is IT names which are showing some kind of a bounce back. Last week, they saw aggressive sell-off, but at least in today's sell-off, further follow-up selling is not seen. The likes of Infosys, the likes of Naukri, these are some of the names that come in the top of our radars, where we are seeing selective buying being happening in the same.
Okay, SBI is one clear-cut idea coming through. Rahul, any other names at all? I mean, some of the stuff which has fallen sharply, from the beaten down names, or you'd want to buy stuff which has not fallen, the outperformers.
Yeah, so I think, we would stick to another pack. The metal space is something that is quite interesting. And one of the names that comes, something which is not corrected at all is National Aluminium. The stock has been, consolidating above its 20-day moving averages last 10-20 days. It has behaved as if no correction has happened anywhere. So, strength could continue, could change itself into outperformance. So, something like a 245 target can be expected in Nalco, can be bought at these levels, stop loss placed at 220. And, this is one stock that is exhibiting a relative strength from the metal pack and can do well over the next few trading sessions.
All right, I think a few people on the funder side have also recommended Nalco, and this is coming in from you. Rahul, thank you very much for joining us for now, but stay with us. We're going to come back to you a little later. We're down 300 points by close. 23,990 is where we finally closed the session. The day's low came in at 23,816. So from the day's lowest point, it's almost I think 150, 170 odd point pullback. So pretty decent. And we've managed to end above the 5th of August low. The 5th of August low was 23,893. Intraday swooned below it, but by close we've kind of ended above that particular level. So 1.25% lower, but was looking much worse at one point in the day. Nifty Bank as well came off the absolute low point of the day, but still ends with about 0.86% cut. And we'll just wrap this up with the mid-cap index, 1.33% lower. And I think the small-cap index, which ends 2% in the red. Of course, I mean, the small-cap index is, from being down 10% from the all-time highs, it's recovered. So, as of today's close, I think the small-cap index is down about 6.5% from the highest level. And that's largely because the recovery we saw over the last 5 trading sessions. Surbhi.
And what hurts more today is that we've been absolutely alone in this fall, because most of the Asian markets have had a green close. China was up, markets like Australia are higher. Europe has been trading positive. The US futures, Wall Street futures are positive right now. This was an India-specific fall, and that's been the case for the last couple of sessions as well. Anyway, talking about stocks now. On the Nifty, there was serious drubbing when it came to a lot of the auto names. Hero Motors down 4.5%, Bajaj Auto 3%. Names like Reliance, I mean, a big move down for this one, 3% lower on Reliance. Reliance is now almost 20% off its peak. That's been the extent of the price damage. Hindalco, Eicher Motors, NTPC, Coal India, Titan. As you can see, it's cutting across sectoral lines. It was literally an all-fall down kind of a day. The Bank Nifty was also losing about 1% or so. Names like Axis Bank, for instance, coming under pressure. lots of consumer names like Nestle, etc. So nothing was spared. HDFC Bank was down 1.5%. On the green side, very few stocks. M&M, of course, stood out after the October sales numbers. M&M about 2.5%. Some buying on SBI, Tech Mahindra, and Cipla as well. But the wider story is obviously mid-caps. I mean, look at the kind of cuts that have come through. Vodafone Idea, 6-7%. Imami, Brigade down 5.5%. These are all the 5 to 6% declines. Gravitas, CESC, Angel One, Force Motors, Edelweiss Finance. A lot of these slightly bigger, well-tracked mid-caps, all collapsing 6-7%, if not more. Okay, well, on that note, it's curtains on this edition of Closing Bell. Finally, a 300-point drop on the Nifty. But don't go anywhere. We'll keep getting you more updates on today's market action. Markets Forward coming up next.
That are shaping the new world order, setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube.
Market sells off ahead of the US election results and impending Fed decision later this week. The key indices slip over 1%, but end the day off days low. All sectoral indices end in the red.
Auto stocks see heavy selling despite better than expected October sales from M&M, Hero Moto and TVS. M&M sees a 30% growth in tractor sales in October. Bajaj Auto misses the mark meanwhile, with domestic sales falling 8%.
Azad Engineering surges in trade after signing a 700 crore deal with Mitsubishi Heavy Industries. The management tells CNBC-TV18 revenue from the new deal will start to reflect in the next 3 to 4 quarters. Meanwhile, Shapoorji Pallonji Group infrastructure company Afcons makes a tepid debut on the street. The stock lits at an 8% discount to its issue price. However, it recovers more than 10% from the day's low to end in the green. Well, hello and welcome to a fresh edition of Markets Forward, your go-to show. We'll tell you all what went on in today's trading session and we'll set you up for tomorrow's trade as well. I'm Nigel, with me as always, Surbhi. Hey, Surbhi.
Hi, Nigel. What a start to the week, right? So it was literally the bulls coming back after the Diwali festive weekend. It was slam dunk, literally from the word go today.
Well, indeed, and we've got you covered then for the next 20 minutes or so. We'll get you all the big news, all the key developments on the large trade. We'll chip in some top corporate voices as well and all the events to track. But Surbhi, you kickstart the show with, all the top events and how the markets performed today.
I think it's just nerves. I mean, what we saw was nerves ahead of some major events that are happening around the world. But what really hurt was the fact that India was isolated in the fall because a lot of the Asian markets that were trading did end in positive territory. European markets that were trading while we were closing, they were all in green. So this was a bit of an India-specific fall. Let me just talk about some of the key triggers the market needs to go over in the next 3 or 4 sessions. One, of course, is the US election result. Next, we'll have to deal with the Fed meeting and whether it stays the course and comes in with this 25 basis points rate cut or not. And that's not all. By the end of the week, we'll have the China NPC meeting as well, which is basically the China parliament. And the expectation is that they could line up another round of stimulus. So all of this has to be digested. And the bulls really got nervous ahead of that. So it looks like there's been no let-up in FPI selling in the market in the last couple of sessions as well, and we'll stand by for today's numbers. But the fall came in right from the morning. I mean, from the opening tick, it was down, and there was a lot of momentum on the downside. The saving grace is that the bulls did manage to put up a fight, and from what was almost a 500-point decline at one point, finally the Nifty went home with a cut of around 300 points. But yeah, it was a fall that didn't spare any sector, Nigel. Yeah. I mean, most sectors were down, mid caps were down. So in that sense, it was a bit of a poor sentiment that we started the week with.
Well, indeed, Surbhi, I think you said it. After nearly 3 days of the markets being shut, if you exclude the Maudo trading session, as the gates opened itself, someone wanted to get out. So in the first hour of trade itself, someone was selling on the screen. It appears as a large foreign institution that was selling in today's trade, but we recovered a goodish bit towards the end. And this market, there'll be various stocks, various themes that will still do well. And in today's trade, it appears that the bulls were banking on a couple of sectors. The Nifty Bank, yes, it came off the low point of the day, but I think the Nifty PSU Banking Index, that's the one that saw a good bounce from the day's low. You had stocks like SBI as well as PNB, both of them did well. So that's why that index virtually entered in the green. And the other one was tech. Tech got absolutely hammered in the last 2 trading sessions. Came back in a big way. You had Infosys, Tech Mahindra, all those stocks did well. In a market that was actually nervous, well, that saw a good bounce as well.
Oh, absolutely. I mean, those were those little specks of green here and there that we could notice on the screen. In the bargain, I mean, with today's fall, the Nifty did end below the 24,000 level, and it also broke below the consolidation low of October. Losing quite a bit of ground today. Let's tell you what the lineup is like. We'll get you more perspective on today's fall. We'll, of course, get you more on today's, movers and shakers, more down than up. And we'll have Hormaz give us the detailed account of that. Auto stocks obviously are in sharp focus, and some very sharp diverging trends there, depending on which stock you're looking at. And even in a market which was as downbeat, you had names like Azad Engineering moving higher, and Afcons did stage a very, very impressive recovery. Very soft start to this new listing. But finally, we had some green on that as well. So we'll tell you more about all of these names as we go forward. And then, of course, some of the key events to watch tomorrow. But first, let's understand the fall and really where it hurt the most. Over to Hormaz for that.
Undeniably nerves at the start of a very, very big week for our own markets. And one of the other sectors that was supposed to be in focus as well was auto. And that saw a big sell-off in today's trading session. Although the stocks came off the lows of the day, yet ending with cuts of anywhere between 2.5% to 4.5%, with losses led by Hero and Bajaj reporting their sales numbers. PSUs were under pressure today, particularly the railways and the defense names. And these names also saw a bit of selling pressure, including RVNL. Bharat Dynamics is now down 40% from its peak. Aircon saw a 4.5% cut, as did MTAR Tech, ending at the low point of the day. Plenty of news flow when it comes to earnings as well as order wins that came in. Azad Engineering, as you just mentioned, bucked the trend in today's session. Exide was an earnings reaction. IRFC too saw a bit of fluctuation after reporting earnings towards the close of trade. And Solar Industries ending 5% lower after winning an order of nearly 400 crore rupees rupees. Some stocks that bucked the trend other than Azad Engineering in today's session. Gillette was one of them, continuing to grow from strength to strength, ending off the highs of the day but with gains of around 3%. And other names included stocks like First Source, Info Edge and Godfrey Phillips had a good day at the office. And lastly, some stocks were volume buzzers on the downside in today's session. PVR Inox at one point was down 8%, ending lower. Indian Oil Corporation along with other OMCs also did not have a very good day, as did Vodafone Idea, ending 7% lower, below the 8 rupees mark in today's trading session. Back to you guys.
Thanks a lot for that neat wrap, Hormuz. Well, let's hop across to our guests. We have Gurmeet, the CIO at Complete Circle, who joins us, as well as Shilpa of Prabhudas Liradad. Hi, lady and gentlemen. Thanks a lot for joining in. Well, Shilpa, you go first. We salvaged some kind of pullback from the day's low, 150 point off the day's low. But do you think sooner rather than later we're headed to the 200 DMA and then we see how it goes? Or are you not ruling back? We could see a quick 500 point bounce on these levels.
Yeah, definitely, Nigel. I see 26,500 to 23,200 coming in very quickly from here. I believe FIS net longs can drop towards net 20% from here. So in this regards, the fall of more than 500 points is still pending in Nifty, and at somewhere around the 200 DMA, we should find some sort of ground to see some sort of rally again happening. But the texture is definitely weak. 24,200 is now likely to become a resistance. Until and unless we cross above that and sustain, we might not see any sort of meaningful upside from here. So the short-term, intraday rally that you see of 100 points or something, that again should be the opportunity to go net, short, and look for targets of 23,500.
Okay, all right. Got that. Thanks a lot for that, Shilpa. Well, let's focus on the sector of the day. Auto stocks, they saw a sharp fall despite various companies reporting better than expected performance. The two-wheeler segment, well, it saw a 12% growth in festive retail sales, and the passenger vehicle segment grew by close to 8%. Sudarshan's joining in to fill us in with all of those numbers that came with regard to the October auto sales numbers. Sudarshan?
We saw a move in auto stocks today that were in line with market, but in contrast to the sales reported by these companies for the month of October. For the month of October, overall domestic wholesale volumes for two-wheeler industry were up 17%. For passenger vehicles, volumes were up 2%. Even retail sales for the festive season for both two-wheelers and passenger vehicles were higher than our estimates. Let's start with M&M, which reported an all-round beat and was top Nifty gainer. For M&M, both auto and tractor segments have done well. For auto segment, it was led by SUVs, which saw growth of more than 20%, and for tractor segment, good monsoon has helped the company to report a healthy growth. For Maruti, total sales were in line, but problem for Maruti's entry-level segment. Sales for entry-level segment have fallen more than 20% in October. For Tata Motors, sales were in line with estimates, in line with muted expectations. Also, company has reported JLR's October US sales, for which growth was more than 20%. Ashok Leyland's sales were below estimates, except bus. All the segments have seen a fall and total sales were down 9%. In the two-wheeler space, Bajaj Auto has been the biggest underperformer, and for Bajaj, overall sales were much below estimates, dragged coming in from domestic, while export segment has done well. TVS sales were largely in line, while Eicher Motors and Hero have been biggest outperformers. Also, Hero has disclosed sales of festive season, and company says it has recorded highest ever festive sales with growth coming at 13%. So overall, it's not that bad. Overall sales for festive season growth have been looking much better than the commentary that we have received from few companies post Q2 earnings or midway of the festive season.
Yeah, that's true, Sudarshan. Absolutely well put. It just didn't help the stocks too much, because even the ones where the numbers were better than the poll, a lot of the stocks saw profit taking in today's really weak market. M&M, of course, was the one outlier. Thanks for that. Let's quickly go back to our guests to get some color in on this. Gurmeet, apart from Mahindra and Mahindra, would you buy any other auto OEM stock now?
So, M&M, I think will continue to do well. I think there are two reasons for it. One is the UV portfolio continues to do well. They are actually now doing 54,000 units a month. The response to Mahindra Thar Rocks is very good. That can take the run rate up from 6,000 to 9,000 odd units. Even the XUV 3XO has been much better than XUV 300. So there's existing portfolio doing well, new portfolio doing well, and then they have these low horsepower tractors which they launched, which has also been very well received, like Oja and Target, which is the low horsepower tractor market. That's why you see the upsurge in even the tractor numbers, which bodes well for rural recovery. We've been adding Tata Motors since middle of last week. We believe that the JLR portfolio should revive. All the three models, which is RR Sports and Defender, that now make up almost 70% of the mix, and there's a healthy midline. And with China's two-wheelers, because China was the number which dragged it down, and that's when it started really correcting, should pick up post-two-wheelers. And overall, from a domestic point of view, I think they're doing pretty okay. Not as good as M&M, but no visible concern. So that we are adding. And as I discussed earlier, we are trying to add more ancillaries now with more two-wheeler mix like Sandhar, which has a 60% two-wheeler mix. Uno Minda is roughly about 40-45%. We're looking at some of more names in two-wheelers. I anticipate a decent rural recovery. This is the early trends we are seeing in the market sweeping.
Okay, all right. Tata Motors has been weak, but you're buying into that weakness. Sansera and I think Uno Minda, that's the other one as well that you mentioned. Well, let's focus on some buzzing stocks today. The markets were weak, but Azad Engineering was in a world of its own. It backed a big order from Mitsubishi Heavy Industries. Vamakshi joins us to break down that order for us. Vamakshi, go ahead.
Well, absolutely, Nigel. In an otherwise weak market, the stock was soaring in the trading session today after the company signed a long-term contract as well as price agreement with Mitsubishi Heavy Industries Limited. They will be supplying highly engineered and complex rotating and stationary airfoils for advanced gas and thermal power turbine engines. Now, under the current phase of this contract, the contract is valued at $82.89 million, or when we translate it into rupees, somewhere around 700 odd crores. So this is a huge order win coming in for the company. The management too joined us earlier on the channel today, and they said that the revenue from the contract would start reflecting from 3 to 4 quarters ahead. Mitsubishi contract will be executed over the next 5 years, and they believe that the margins will be consistent with the existing margin levels of the company. The order book, along with some recent wins that they got from Honeywell as well as Mitsubishi, stands at over 4,000 crores now. So again, this bodes well for the overall visibility of the company. Given this development, the stock gained as much as 14%. In fact, this is the biggest single-day jump that the company saw since January 31st, 2024.
All right, Vamakshi, thank you very much indeed. That stock did so well. Staying with that space, when you're talking about capital goods, manufacturing, infrastructure, let's talk about the listing of the day as well. This was Shapoorji Pallonji Group infrastructure firm Afcons. Now, the stock started quite tepid. At the open, it was actually down 7-8% versus the issue price. But then there was a recovery. And imagine in a market like this, the shares were lapped up. So that was quite something. Let's actually go across to Vivek to get more details on this IPO and what the street made of it. Vivek.
Well, that's right. Shapoorji Pallonji Group, an IPO that Street was anticipating. Remember, it's one of the largest infrastructure companies in India. And, the larger listed comparable is actually L&T. So there was a lot of interest as far as Afcons was concerned. And like you mentioned, at the start of the day, in line with the kind of selling pressure we saw in the markets, the opening was quite tepid. But at the second half, first let's have a look at the IPO and why was the company looking to raise funds. Close to 5,430 crore, of which 480 crore was, it was an OFS. So the fresh issue was just around 1,250 crore. So post-IPO market cap worked out to a little over 17,000 crore. What is the usage of funds? Usage of funds, number one, for debt repayment and also for buying construction equipment. But what actually led to the kind of recovery as far as the stock was concerned was the commentary that the management gave to us when they joined us today. What is it that they said? They started FY25 with an order book of close to 31,000 crore. After that, in FY25 itself, they've booked close to 20,500 crores of order inflows, and the company is L1 in orders worth almost 9,000 crores. So order book currently is over 45,000 crores. This is including the L1 position that the company currently is the lowest bidder at. The company also, remember, enjoys a much higher margin profile and EBITDA margin profile compared to peers, while L&T margin currently languishing in the range of 7 to 8.5%. Afcon's margin profile is much higher, over 11%, and the management said that they will continue to retain margins in that particular space. FY25 expected to be a flat year in terms of of top line, but after that they expect to return to the kind of growth levels that they used to see earlier of 15%. They are bullish on a whole host of other markets, export markets as well, Africa, Saudi Arabia. In fact, we spoke to the management today. Let's listen in to what they have to say post-listing.
We have already bid for quite a few projects, which bids of which are to be opened yet. We do expect to book a significant amount of orders, at least not less than another 5,000 crores or so. And in terms of revenue growth, we have been growing at over a 20-year time frame, 18.5% CAGR. We have started the year with about 31,000 crores of order book. And during the year, including L1, we have booked about 20,500, out of which 11,500 we have got the orders in hand. Another about 9,000 we are L1 at different stages. After our meeting last time, probably we have another 1,000 crore L1. So with that, 9,000 crore is L1. If typically we don't include L1 jobs in the order book, but if we take L1 also into account, our order book as on date is about 45,000 crores. And we are looking at normally between 2.5 to 3.5x of our book-to-bill ratio. So therefore, we are very comfortably positioned as things stand today.
Okay, that was Afcons. The market liked the commentary and obviously like the fundamentals of the company as well. The stock managed to find buyers in a weak market. Quickly going back to our guests for some final thoughts. Gurmeet, whether it's Afcons or I don't know if you saw the the other company, even actually Premier Energies, they've been announcing a lot of order wins as well. So anything in this infrastructure, engineering, manufacturing space that you'd like?
So we like this transmission infra play within this play. If you see the NEP, which was announced 2 weeks back, lays down a transmission capex alone of upwards of 4 lakh crores. So whether it is circuit kilometers of transmission line, which you can play through the likes of Power Grid in more than 50% market share, then you have substations in terms of the transmission. In fact, the world's largest transformer supplier yesterday has warned of a crisis in terms of being not able to supply enough on transmission equipment. So a lot of energy being needed by data centers, by different energy forms. So I think this is something which looks very secular and structural. Then you have something like HVDC, which is a technology used to transfer electricity over long distances. So if you break the value chain in transmission, there'll be a lot of opportunities in transformers and rectifiers and transmission lines, etc. I think there the visibility is pretty good, and most importantly, the valuations are very reasonable.
Okay, got that, Gurmeet. Well, Shilpa, before we let you go, give us a couple of quick trading ideas.
Nigel, I believe, M6 today at the closing hour showed some good rebound from day lows. So that stocks is something, we can focus on for tomorrow. I believe, it can do 6,600 as well. Keep a stop loss of 6,390. That is, that should be quite good enough. And look for targets of 6,600. The other one would be a sell in Petronet. Petronet has a very strong resistance at around 340 zones. So as long as it is not, sustaining above that, it is sell candidate for levels of 320 to 300.
Okay, all right. Thanks a lot, Shilpa, as well as Gurmeet for joining in, taking our queries and helping us out with some advice. Well, we'll slip into a short break on that note. But on the other side, we'll get you up to speed with regard to all the events that you need to track. Stay with us.
TV18 weeknights at 7 p.m.
Welcome back. You're with us on Markets Forward. Let's get you a little more on the corporate commentary that we picked up during the course of the day. Starting first with Paras Defence. Now, the company says that it has a healthy order book at 870 crore rupees, indicating potential margin improvement to 25 to 30% as well. This as the company has successfully transitioned, it says, from being a component supplier to being a comprehensive subsystems player.
And Narayana Health International patient business is expected to remain under pressure, while the Kolkata operations are being impacted by political tensions. However, the average revenue per patient has improved to 1,35,000 rupees from around 1,29,000 rupees earlier. The occupancy rate, though, remains stable at around 60 to around 65%. Now, although the return on capital employed, or the ROCE, may fall short or may in fact see some kind of dilution in the near term due to the big capex plans, the management expects it to rebound to around 20% as the expansion initiatives take shape.
Okay, and before we wrap up all the key events to watch tomorrow, let's go across to Vamakshi.
Well, so the most important event that we will be watching out for will, of course, be the US presidential elections. But apart from that, we will also be watching out for S&P Global Services and Composite PMI data. Keep an eye out on the trade balance data as well that will come in from the US. Bank of Japan had a monetary policy meeting earlier, and in fact the minutes of this meeting will be disclosed tomorrow, so keep an eye out on that as well. Lots of stocks to watch out for on the back of their numbers. We have companies like Berger Paints, Dr. Reddy's, Gale, JK Tire Industries, Manappuram Finance, Mascow Dock, as well as PB Fintech, among several other companies reporting their Q2 numbers, so watch out for those. And lastly, there are we will be keeping an eye out on certain stocks that will be going ex-dividend tomorrow, and that includes the likes of Coal India, Dr. Lal Pathlabs, Care Rating, as well as Sasken Technologies.
Okay, all right, Vamakshi, thanks a lot for that. Well, on that note, though, we'll wrap up on this edition of Markets Forward. You don't go anywhere. Stay with us. Lots of news and updates on the other side.
On the street, they say, "Ye dil mange more," right? Now that you're listing, you also have a listed peer. With the trajectory that we've seen on them, on a lot of the parameters, they're above, what Swiggy is right now, which is not to say that you're any less. It's just that you're at different stages of growth in your life.
Correct. I think, look, there's a lot of context. We each have our own context, and we are in very, very exciting categories. And our strategy, our capital allocation, everything's going to be a function of our excitement and what we can go after in each of these. Like Rahul mentioned, we've demonstrated the profitability in the food business. We feel good about its future going forward. As for quick commerce, I think it's in a once in a lifetime category, and I think we are seeing consumption patterns change for consumers, and there's so much to be done. So our endeavor will be to make sure that we do the fullest of our ability to make sure that we grow and serve customers well and make sure that everything comes together nicely.
But for quick commerce, you recently said that the peak of the investment is behind you,
That's
but
right.
you're still not a contribution margin positive either. So, what is the trajectory there for quick commerce? Because even for your peer, that has been the growth driver.
Right. So how are you looking at the quick commerce business for you in terms of being, is it also going to be the growth driver for you? And sort of trying to get a sense of the path of profitability on that front also.
See, maybe I'll take this. See, I think on quick commerce, what really amazes us is the way consumers are reimagining, things or what can be delivered to them. So it's almost like every quarter we have to recalibrate around, what is the number of categories that we have to be there, what is the number of SKUs we have to launch. And there's a recalibration happening, growth is accelerating. So there'll be a certain amount of, say, new store additions that we'll continue to do. The old stores continue to mature well, which means that they become profitable over a period of time. And the new stores come in because consumers want a lot more. Right. So I think it's a recalibration of, our overall growth trajectory in line with the demonstrated path to...
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: deep cuts on Dalal Street despite a late recovery. The Sensex loses over 900 points. Nifty drops below 24,000. More than 6 lakh crore rupees in market cap wiped out today. The rupee also hitting a fresh record low against the dollar. India Inc. stares at the sharpest earnings downgrade since the pandemic. Nifty 50 companies see a 10% earnings downgrade on an average in October. Cement, energy, financial services and autos are the worst impacted. Tech companies and property developers are the outliers. Less than 24 hours before the US votes, Donald Trump and Kamala Harris launch an all-out campaign blitz in swing states. At least 78 million voters have already cast an early ballot. Harris grabs an unexpected lead in a poll carried out in Iowa, which has traditionally voted Republicans. Israel claims to have killed a Hezbollah commander inside Lebanon as the bombing campaign continues. The World Food Programme warns the humanitarian situation in Gaza could soon escalate into a famine as Israeli forces continue to restrict relief work in the region. At least 36 people are dead after a bus carrying 60 people plunges into a gorge in Uttarakhand. Authorities fear the death toll could rise as rescue operations continue. Auto stocks see heavy selling despite better than expected October sales from M&M, Hero Motor and TVS. Bajaj Auto misses the mark with domestic sales falling 8%. The HSBC manufacturing PMI shows a pickup in factory activity in October after hitting an 8-month low in September. India's auto industry revs up for an electric November. Royal Enfield to launch its first electric motorcycle tonight. Maruti Suzuki set to unveil a premium SUV. Mahindra Group will launch 2 luxury SUVs later this month as the competition heats up. As sugar stocks tumble on Dalal Street, industry calls on the government to increase the minimum support price and ethanol prices. Sugar mills warn of delayed payments to farmers and a potential default if the government does not intervene. Well, let's start with the market action, and it was not a particularly great way to start the trading week. The Sensex lost over 900 points today, and the Nifty down by over 300 points in what was broad-based selling that we saw. So the markets, however, did bear some losses in late trade, but nevertheless, the Sensex closing 941 points lower, the Nifty down by over 1%. The mid-cap index lost over 700 points, and the Nifty Bank was down by about 400 odd points as well. So across the board selling pressure there. Prashant is standing by now to take us through the triggers behind the kind of sell-off that we've seen this afternoon. Prashant.
A little surprising, Shireen, because nothing really gave an indication that you'd have a 300-point cut on the Nifty. Although I must say that from the lows of the day, there was a solid 150-plus point recovery that we saw on the Nifty. The Nifty Bank also came up from the day's lows. And of course, the mid-cap and small-cap indices ending lower, but off the lows there as well. I'll just sort of run through the dateline in terms of the big events which are lined up over the course of the next 4 or 5 days. And I think this is important because the first up, of course, is US elections. By Wednesday morning, we will know who the new US president is. And you are seeing a bit of sort of pairing of risk across the board in global markets as well. It's not very evident, but you look at things like, for example, the US dollar. You look at the rates market in the US. You look at currency crosses like the USD JPY. Markets essentially were priming for a Trump victory. But as you're going closer and closer into the US election, I think there is a bit of pullback which is happening across those positions because betting markets now have also converged closer to where polling averages were. So it's like a 50-50 toss-up right now with just, less than 48 hours to go to the US election verdict. So I mean, that's the first reason. Nobody really wanting to take a position going into the outcome, which is very, very binary in that sense. The other one, of course, is China stimulus. This hope that, I mean, and I think, we spoke with Kotak Institutional Equities on Thursday, and I think the gentleman there put it well. There is competition for flows. And I think that is a big reason why, which was not there. I mean, I think this is a new thing which has happened over the last 1 quarter or so. And I think that's a big reason, that's at the margin a big reason why foreigners have been selling. There was this Reuters article which floated a package of 1.4 trillion with promise of more if Trump wins the US election. Third, of course, is the FOMC, which is, of course, I mean, consensus still expects a 25 basis point cut. Remember, the jobs data was very, very weak. But, of course, there were reasons which we flagged off behind the very weak data. Just to kind of circle back to individual names, etc., which saw large cuts. And again, unanticipated, because Hero MotoCorp, take that stock as an example, 20% from the highs going into today's session and another 4% cut. And sales in the festive month actually have been pretty good. Hero did recover a little bit, about 2% from the day's low. Bajaj was down 3.5%. Sun Pharma was lower. There were names like Grasim, Adani Ports, BPCL, which were some of the other losers. On the upside, you had Mahindra & Mahindra, which looked good. They've been sort of guiding for better tractor sales for a while. Tech Mahindra and Cipla were some of the other names. The broader market pressure shown through in PVR Inox, contrary to sort of the talk that maybe weakened box office collections have been good. Stock was down 6%, one of the biggest volume-led losers. There was Polymedicure. Some of these, Prudent Corp, a mutual fund distributor, some of these are just pullbacks after 3-4 days of very sharp run-ups that we've seen. Manappuram Finance was lower, ABFRL, Edelweiss was down 5%, Chennai Petro, Force Motors, CESE, transformer companies like Voltamp, and a real estate play like Brigade Enterprises were also lower. I just want to just quickly wrap up the gainers as well. Rainbow Hospitals continues its up move from last week. Azad Engineering, we had the company with us on Bazaar earlier. Large order, Jyoti Structures, Walkhart, Taj GVK back above 300 rupee levels once again after it's undergone a bit of a correction. From the all-time highs, this is essentially how the indices really stack up at. Nifty is down about nearly 9%. Nifty Bank is down about 6%. You have the mid-cap index, which is down 8.5%, and small-cap index, which is down about 6% or so from the all-time high levels, which is an improvement. The small-cap index actually was down almost 10%, about 5 days back, and that's corrected, and we're down about just 6% or so. I want to leave you with just one thing, which is not very well understood, but some in the market, Shireen, are talking about this particular factor as well, particularly because there is the AMFI circular on, and the circular is called Standard Practice on Institutional Mechanism for Identification and Deterrence of Market Abuse. So this circular from AMFI is applicable from today. And some are pointing out that traders and asset management companies, local investors, because of this circular, would be less aggressive in buying and selling, even if the price is in their favor. Remember, foreigners have been selling, locals have been buying, everything that FIs have been selling. But what if this circular is dissuading local traders and asset management companies and mutual funds from stepping in an aggressive way as like they've been doing? So this is something which at the margin I've heard, this is more of a technical factor, not a fundamental factor. But we'll investigate more and get you more details. Back to you.
All right, Prashant, many thanks for joining us. Well, some of the factors that could have weighed on the markets this afternoon, as Prashant was pointing out, coming off the intraday lows, but nevertheless closing deep in the red. Now, the lower than expected earnings reported by a clutch of large cap companies have prompted analysts to downgrade their earnings forecast for the full year. Now, according to Bloomberg data, the earnings per share estimate for Nifty 50 companies has been cut by more than 10% in October alone. Cement, energy, financial services and auto are the worst impacted sectors. IT companies and property developers are the outliers. Meanwhile, Jefferies has downgraded earnings estimates of more than 60% of the 98 companies it covers. Jefferies says the cut is the highest since early 2020 and it's attributed this to above normal rainfall as well as weak government spending. So that's a bit of a concern as well. But the big international story, the US presidential election campaign has entered the last leg with less than 24 hours to go for voting to begin. Most opinion polls point towards a dead heat. Democratic nominee Kamala Harris and Republican candidate Donald Trump. It will be an all-out campaign blitz for Harris and Trump across key battleground states today. Harris has urged voters to support free and fair elections and not fall prey to allegations of election fraud. Trump, while speaking at a rally in Georgia, accused Harris of violating her oath and eradicating the sovereign border. The turnout of early voters has been high this time. According to University of Florida's data, over 78 million Americans have already cast an early ballot. This is nearly half of the 160 million votes cast in 2020, the highest turnout in the U.S. presidential polls history.
I would ask, in particular, people who have not yet voted, to not fall for his tactic, which I think includes suggesting to people that if they vote, their vote won't matter. Suggesting to people that somehow the integrity of our voting system is not intact so that they don't vote. And again, I think that it is a tactic. It is meant to distract from the fact that we have and support free and fair elections in our country. We did in 2020. He lost.
With your vote on Tuesday, I will end inflation. I will stop the invasion of massive numbers of criminals coming into our country. Thank you very much, Kamala and Joe. And I will bring back the American dream, and we'll bring it back stronger than ever before. But this is all you need to know. Kamala broke it, and we will fix it, and we're going to fix it fast. Every day, they're talking about extending hours and stuff. Who ever heard of this stuff? We should have one-day voting and paper ballots.
Could be made on Tuesday night if Kamala Harris of the Democratic Party, the incumbent vice president, goes on to defeat Donald Trump of the Republican Party, the former president. She will, if she does that, become the first ever woman president of the United States, something that has never happened in the close to 250-year history of the United States of America. While history is there on the one side, on the other side, there is momentum. Donald Trump seems to be the candidate who has momentum behind him. He has tailwind behind him. He has narrowed the gap, both in the popular vote as well as in the battleground states, to less than 1%. A month and a half ago, Kamala Harris had a 2-point, maybe even a 2.5-point lead. But that has been narrowed, particularly just in the last month of October, leading up to, of course, November 5th, which is election day.
Well, that's the big verdict that is awaited. Kamala Harris versus Donald Trump. And as the curtains come down on what has been a tumultuous campaign season, all eyes are on the 7 swing states. Now, these states account for 93 electoral college votes and hold the keys to the White House. On your screens, we have for you the states that's the success rate for the last 10 years as far as the presidential elections are concerned. So, for example, Nevada has voted for a candidate who went on to win the presidential elections 9 out of the last 10 times. Michigan has voted for a winning candidate 8 out of the last 10 times. Pennsylvania, of course, will be one of the key states to watch out for, and that accounts for 19 electoral college votes. It voted for Trump in 2016. It's backed a Republican for the first time since 1988 and backed Biden in 2020. Now, traditionally, that is what we've been telling you as far as Pennsylvania is concerned. Meanwhile, Kamala Harris has grabbed an unexpected lead in an Iowa poll. The poll conducted by Seltzer & Co. gives Harris a 3 percentage point lead over Trump. This would come as a jolt for the Republicans, as Iowa had voted for Trump in the last 2 elections. It also has a success rate of 70% in the last 10 presidential elections. We will, of course, speak exclusively to Ann Seltzer, the president of the polling firm, at 6:30 p.m. tonight. Well, the U.S. elections will have a significant impact on the global economy, on financial markets and emerging economies like India. Lata is here to explain what it could mean. Lata.
Well, let's start with how Trump and Harris are perceived for each of the financial markets. Trump victory is seen as very positive for equity markets and very negative for bonds. Trump win is also seen making dollar stronger, and that'll have its repercussions. But first, the macros. On the macros, both Trump and Harris policies may lead to widening of the U.S. fiscal deficit, but Trump will widen the fiscal deficit much more than Harris. Trump policies are seen pushing inflation higher. Harris win could mean, therefore, lower inflation. Hence, on growth, because of higher inflation, growth may be lower under Trump policies, but growth could be better under Harris. Trump victory will mean higher interest rates and stronger dollar. Therefore, it will be the opposite under Harris, that is slightly weaker dollar and slightly lower rates. Now, the non-profit think tank called Committee for a Responsible Federal Budget, or CRFB, sees Harris's policies increasing the US deficit by $3.95 trillion by 2035. But Trump is going to be worse. His policies may increase the US deficit by $7.75 trillion, actually by double by 2035. The CFRB says following programs of Harris will increase expenses: extension of tax cuts for families that are earning less than $400,000, expanding the child tax credit to help families in lower income with more children, expanding the Affordable Care Act, which means higher insurance subsidies, supporting affordable housing, and increasing the minimum wage. The amounts are given on the right. I'm not reading them. Now, Harris will also bring in more revenues. She will raise revenues by upping the corporate tax rate from 21 to 28%, increasing capital gains tax. Now, that's why it's equity negative, upping the Medicare tax, reforming international tax rules, and lowering the cost of prescription drugs. That will, of course, mean lower revenue outgo. Trump is going to increase deficit by, of course, cutting taxes. We all know that, cutting taxes for corporates under the TCJA, that is Tax Cuts Job Act, exempt tips and overtime from taxes. Actually, Harris also has promised that. He will also end taxation of Social Security benefits. That's a huge outgo. And he will also spend less by reducing illegal immigrants into the country. Trump is going to raise revenues through tariffs and more tariffs. He will also reverse the energy policy and will exempt oil output. Of course, that's not his area. He will also end some education support programs. Let's come to immigration. On immigration, Harris will favor increasing legal immigration, while Trump is going to reduce all immigration across the board. Thus, Trump may actually end up tightening the labor market, and this can especially hurt infotech companies, IT companies. So what's in it for emerging markets like India? A Harris win may lead to continuation of the present trends largely, but a Trump win by strengthening the US dollar will likely lead to weaker EM currencies. More importantly, China is expected to retaliate the tariffs that Trump is expected to impose by weakening its own currency, weakening the renminbi, which will force other Asian EMs to also depreciate their currencies, including India. They are likely to weaken their currencies in competitive depreciation. Trump may reduce the space for emerging market central banks to cut rates. He may have a negative impact on global growth and therefore emerging market growth because of the likely supply disruptions he may cause by higher tariffs. But here's the silver lining. In the emerging market group, Indian economy and the Indian rupee is seen least affected by Trump's policies.
All right, Lata, many thanks. And you can catch our special coverage of the US elections. All angles will be taken up starting 6 p.m. with the best newsmakers and experts. And, of course, catch that big interview with Ann Selzer, the talked about pollster and the most talked about poll over the last few hours. Tensions in West Asia continue to rise. At least 4 people have been killed and many wounded after the Israeli military conducted an overnight raid in Lebanon. Lebanese officials said that around 10 people were wounded in Israeli attacks on government hospitals in the region. The World Health Organization has appealed for medical workers to be protected after Israel killed more Lebanese paramedics. Meanwhile, the World Food Programme has warned that the humanitarian situation in Gaza could soon escalate into a famine. This as the Israeli military continues to severely restrict the entry of food and other supplies into the enclave. Israel has also attacked a hospital in northern Gaza, severely wounding a child and damaging the facility's nursery. Oil prices surged by over $1 after OPEC Plus said it would delay a planned December output hike by 1 month. The group of oil exporting nations was due to increase output by 180,000 barrels per day in December. Remember, OPEC Plus had delayed the increase in output from October because of falling prices, weak demand and rising supplies. In stock-specific action back home, Sun Pharma shares down in trade after a ruling by a U.S. District Court delayed the launch of its new drug that treats alopecia. The court's ruling granted a preliminary injunction to U.S.-based company Incyte, which claimed Sun Pharma infringed on its patent. The drug launch will be delayed until a favourable court verdict is passed or the patent in question expires, which is slated to expire in December of 2026. Shapoorji Pallonji Group company Afcon's infrastructure listed on the Lal Street today. Shares listed at an 8% discount, but they did recover, ending the day higher by over 2%. Reliance Industries is likely to launch the initial public offer of its telecom arm Jio in 2025. A Reuters report citing sources states that analysts have valued the IPO at over $100 billion and the conglomerate's retail unit will be listed much later. The sugar industry has called on the government to increase the minimum support price and ethanol prices. Sugar mills have warned of delayed payments to farmers and a potential default if the government does not intervene. The industry has also said that sugar prices have fallen below the cost of production owing to excessive build-up of stock. Well, we will head into a break, but up next, India's auto industry is revving up for an electric November. That and more when we return.
That we continue to will demonstrate.
India's manufacturing activity accelerated in October after slowing down for the previous 3 months. The HSBC Purchasing Manufacturing Index compiled by S&P Global rose to 57.5 in October from a reading of 56.5 in September, which was the lowest that we've seen in 8 months. Any PMI reading above 50 indicates expansion. We've been in that territory for a while. Auto stocks saw some heavy selling today in line with the markets. This despite the fact that we saw better October sales from M&M, Hero Motor and TVS. Festive cheer drove both wholesale and retail sales of both passenger vehicles and two-wheelers. However, Bajaj Auto missed the mark with domestic sales down 8%. India's auto industry is revving up for an electric November. Royal Enfield will launch its first electric motorcycle tonight, while Maruti Suzuki is all set to unveil a premium SUV. The Mahindra Group will also launch 2 luxury SUVs later this month as the competition heats up. Parikshit is standing by now with the details. It's an electric November, Parikshit.
Well, exciting times ahead in November. Maruti Suzuki will be unveiling the EVX tonight in Milan. Now, this will be the global unveil of their production-ready electric vehicle, the first from Suzuki Motor Company. This has been built in collaboration with Toyota. The technological inputs have come from Toyota. This car is going to be manufactured in Suzuki's Gujarat plant. At first, it will be exported to markets in Europe, later to Japan. The plan to launch it in India is as follows. It will be first showcased at the Auto Expo in January next year with a commercial launch by May or June next fiscal. So the India launch has actually been delayed by 2 months because of validation and testing related issues. We're told that Maruti Suzuki would like to price this around 25 lakh rupees. It's going to have a range of at least 500 kilometers with a 60 kilowatt hour battery. It will take on the electric Creta, which is being launched early next year. Now let's come to Royal Enfield. Now this is going to be a big one. This is the first mainstream automobile player to launch an electric motorcycle. It could possibly be called the Flying Flea. Why the Flying Flea? Because the teaser that we see on social media has parachutes dropping the motorcycle. And in World War II, we had seen how the Flying Flea was used by the forces and the motorcycle used to be dropped by parachutes. So there is speculation that, that Royal Enfield would call it the Flying Flea. At the same time, this is going to be positioned in the high-end premium segment and will be the costliest Royal Enfield to date. Now let's come to the Mahindra Group. As we had reported, the Mahindra Group will be launching 2 new luxury SUVs on the 26th of November, one of which will be an off-roader. The company announced the names today. One of them will be XCV9E and the other is BE6E. Now, both of them will have a high range. The pricing will be under 35 lakh rupees. We'll have advanced semiconductors and a lot of connected car features. So clearly, lots to expect in November as far as the electric vehicle sector goes.
All right, Parikshit, appreciate you joining us. Now, Indigo is all set to take to the skies with its business class offering from the 14th of November. Madhiya is standing by to tell us what we should expect. Madhiya.
Well, November is an important month for Indian aviation as well. We know that Vistara is merging with Air India, and 14th November is set to be a historic day for Indigo. It will debut the business class product on 6 daily flights on the highly popular Delhi-Mumbai route. The first aircraft with business class cabin landed in India last week and is getting ready to operate these 6 flights every day. The 3 flights from Delhi to Mumbai will be at 7 a.m., 1 p.m. and 7 p.m., while the flights from Mumbai to Delhi will be at 10 a.m., 4 p.m. and 10:15 p.m. Now, each of these flights will feature 12 business class seats. So that makes it 72 business class seats across the 6 flights on the Delhi-Mumbai route every day as of now. Indigo has set a flat fare of 18,000 rupees for all business class seats as compared to a higher fare on other carriers like Air India and Vistara. Looking ahead, Indigo says all flights on the Delhi-Mumbai route are expected to feature a business class cabin by early January. Then by March 2025, business class will be available on all flights from Delhi to Bengaluru and Chennai. And in the next 14 months, Indigo aims to induct a total of 45 aircraft equipped with business class seating. These planes will cater to 12 routes, so 268 Indigo flights are expected to have business class offerings in the next 14 months.
All right, Madhiya, many thanks for joining us. With that, it is time for us to wrap up this edition of Business 360. More news and updates will continue right here on CNBC TV18. Stay tuned.
हमारे को सर्विस मिलेगी नहीं 30-35 साल की मिलेगी कोई सर हमारी चूड़े कहां से चलेंगे सर
These are some of the last 11 remaining aircraft of Jet Airways. After flying non-stop across India and abroad, they are now parked in a corner at the Mumbai airport for the last 5 years. They may never fly with the Jet Airways logo again. Such is the story of this once iconic airline that ruled the Indian skies for nearly 3 decades, ferrying passengers around the world in comfort and luxury. But after facing one turbulence after another, it simply plunged and could never recover.
Well, cheers to the festive season that's raising the bar literally. India's alcobev makers are toasting to the record sales and new launches, hoping to make this the most spirited quarter yet. This quarter alone typically brings in about 30% of the year's volume in the prestige and above category, fueled by celebrations like Diwali and New Year. Let's start with Radico Khaitan, which has seen steady growth in its premium segment during the festive months, marking a 15 to 20% volume increase year on year over the last few years. Meanwhile, Amrut Distilleries is also celebrating success both at home and abroad after 5 years of 30% festive season growth. This season, Radico Khaitan is launching the gold edition of Jaisalmer Indian Team.
Hello and welcome to this special show. I'm Shireen Bhan. Oral diseases are amongst the most common health problems globally, impacting millions and placing a heavy burden on both health and the quality of life. In fact, 9 out of 10 Indians face oral health issues, with 53% not replacing their toothbrush on time and a staggering 80% of urban Indians not brushing twice a day. Now, these statistics highlight the urgent need for change, as conditions like tooth decay, gum disease, tooth loss and even oral cancers have become increasingly prevalent. To discuss the challenges in oral care and how we can tackle them head on, we're joined now by a leader from the FMCG industry, Prabha Narasimhan, Managing Director of Colgate-Palmolive, and of course she is heading the business here in India. Prabha, always a pleasure. Many thanks for joining us here in the studio. You know, let's start with your own journey at Colgate-Palmolive. You've now completed 2 years of stewarding the company forward, and you're no stranger to legacy brands. I mean, you've been at HUL for very long before you actually came to Colgate-Palmolive. How do you take a brand that's existed since 1937 and continue to make it relevant in today's times?
So firstly, Shireen, thank you so much for having me. It's an absolute pleasure to be here and discuss such an important topic. On the question of legacy brands, I guess there are 2 or 3 things that really make any brand, legacy or otherwise, run. The first is making sure that you have the trust of your consumers, and we're very lucky as Colgate, having been in India for 87 years, to really enjoy an exceptionally high level of trust. The second, of course, is not to take that trust for granted, and to make sure that you're moving with the times, to make sure that your products are constantly improving, to make sure that nowadays especially that you have a purpose. And that's where, you know, this entire idea of the oral health movement and our mission of making oral health better for every single Indian comes into play. So that's probably the big ticket things. I could go on and on, but I shall stop.
You know, let's talk about oral care. And I kind of gave a very brief glimpse of some of the data that you're probably diving into much deeper, Prabha. But, you know, what are the trends that you're picking up specifically as far as the market is concerned here in India in terms of habits? And how do you nudge people to change habits? Because, you know, that's a difficult one to do.
Absolutely. So just very recently, just as recent as last year, we did this very large scale mouth audit study where we asked...
Mouth audit study?
Mouth audit, yes, there is such a thing.
That's a mouthful.
And where we asked everybody the A to Z of their oral health, and it threw up some very interesting factors. Firstly, like you rightly said, even in urban India, only 1 in 5 consumers brush their teeth twice a day, and dentists would have you believe that that is absolutely the minimum. And actually, more than anything else, you should brush at night, because your saliva activity drops as you sleep, making any leftover food in your mouth a playground for bacteria. The second, of course, is that only 9% of Indians go to a dentist. And usually they go to a dentist only when they're in serious pain.
Yes.
And unfortunately, out of those visits, half the time they're having a tooth extracted.
Yeah.
That's a real pity, because you need your teeth. I mean, as you get older, you need to be able to live a full life. Food is really important.
Yes.
And you need your teeth. Then to your comment on toothbrushes, the average urban Indian replaces their toothbrush once every 6 months. The average rural Indian once every 15 months. Again, dentists would tell you that you should replace your toothbrush ideally once every 3 to 4 months for optimal cleaning, because you do need both the action of the toothpaste as well as the mechanical action of the toothbrush. And a new toothbrush actually scientifically cleans 95% better than an old toothbrush. So lots of data, lots of facts, but net, I think the sum is that our oral health habits are not great. And the outcome is that we have a lot of oral health issues, whether it be the fact that we have a lot of oral cancer in this country, unfortunately, or it be that half our population is in at least the early stages of having gum disease, or that 8 out of 10 Indians have a cavity that will eventually, lead into all the fun stuff like root canals and teeth extraction.
Fun stuff, yes, absolute fun stuff. No, and and people don't realize often what it eventually leads to, and I think that's an important point to mention. But Prabha, before I talk to you about what's happening on the product side in terms of innovation, let's talk about the communication aspect. And sensitization and creating awareness is important. How has the communication changed over the years, and what do you believe is going to be imperative now? You are the most penetrated oral care brand, so one, of course, you don't have to work that hard in terms of brand recall, but changing behavior habits, changing consumption, how do you do that via communication?
So firstly, oral health's universal penetration that has come about is about maybe 7-8 years old. So till about 7-8 years, every household in this country didn't have a toothpaste and a toothbrush. Luckily now...
Till 7-8 years ago?
Yeah, absolutely. And so now that luckily every household has a toothpaste and a toothbrush, the next job is to get every household to have every individual brush twice a day. And to that end, there are lots of things that we're doing to try and move this consumption. Firstly, at a school level, we run the Bright Smiles, Bright Future program, which we have run for, it's now in its 5th decade. It's reached about 180 million school children, to teach the habit at the stage where you are more prone to picking up good habits. And that's really something that's been the flagship of our program to build consumption. Now we are layering on top of it the work that we are doing on brush at night or brush twice a day, linking it actually to the idea that a lot of Indians eat sweets just after their nighttime meal, just before going to sleep.
Yes.
And in that context, if you don't brush your teeth, then you truly are throwing a party for bacteria in your mouth.
That's a nice way of putting it. Not the right kind of party, though.
Indeed.
Okay, so, as part of this, strategy that you have in terms of reaching out to consumers, changing behavior, let's now talk about what's happening on the product innovation side. Using science to be able to address some of these issues that you spoke of. What's been the interesting revelation for you ever since you got into Colgate, for instance?
So firstly, I think, I don't think there is another company on this planet that has as much investment into oral care technology. So 900 plus full-time scientists, just one of our toothpastes has over 150 patents attached to it. And so first and foremost...
One toothpaste has 150 patents?
Yeah. Colgate total, I think it is perhaps, I may be wrong, is the toothpaste with the most number of patents in the world. So what's really critical to this company and always has been is the fact that what we put into the toothpaste must work. So when we make a promise, we must deliver to that promise, and we must have the clinicals and the technical evidence to be able to deliver to that promise. I had not thought that much about toothpaste before I got into this category. Now I realize the amount of science.
That a toothpaste has 150 patents attached to it.
And that's just one toothpaste that has that many patents. So I think the first is the technical efficacy of the product. I think the second thing, and that's equally important, is to make brushing fun. The fact that your in-mouth experience is something that you want to do, it just makes it easier for all of us, whether it's adults or it's children. The sensorial, the flavor, what impact you create in the mouth, that's become then the second part of the work that we've done to make sure that our products are superior. And the third one is really a commitment that we will put the best tech even into our market standard product. So our market standard product is Colgate Strong Teeth. It uses arginine technology. Arginine is actually something that's already prevalent in your mouth. The added arginine in the toothpaste works along with your mouth microbiome actually to make your teeth stronger. A reasonably expensive technology, but is in the market standard toothpaste for the reason that, our underlying mission is make oral health better for every Indian every day.
Does the consumer care about stuff like this when you say that, oh, this has more arginine or whatever, or is it just more on the sensorial aspect that drives consumption?
So I think you don't really care about your oral health till you have a problem.
Yes.
Unfortunately. But
which is the case with everything. I mean, it's only when it gets to the point of being a disease that you focus on it.
Absolutely. So they don't care in the short run. So that's our job to make sure that when they brush their teeth, we're giving them the best possible product. along with the fact that as they brush their teeth, it's a pleasurable experience. So the two in combination is really what works for the products and the tech that we have in this country.
So given everything that you just told me about and you know the fact that you've delivered a very strong quarter, Prabha, what does it mean from a business standpoint? You know, all of this, of course, at the end of the day has to also result in a business outcome. What does it mean as far as business is concerned?
So I think so far, I mean, in the couple of quarters of the first half of this year or the first half of 2024, we've actually so far done pretty well. We're happy with the outcomes that we've delivered. What we're looking to do actually is to take this performance and the whole idea of better oral health to the next level with what we're calling an oral health movement, which is really what you see on the board as well. And an oral health movement is where we want to put the ability to assess and influence your oral health in the hands of the consumer. And so if I could take 30 seconds to elaborate, it would where it's a tech-enabled solution. You scan a QR code, which is there now on about 600 million packs that we're going to be putting into the market over the next few months. You scan a QR code, it opens up, it doesn't even need an app, it opens, you take a few photographs of your mouth with the tech on your phone, it sends you back near instantly a report of your personal oral health, guiding you on, you know, what you should be doing and talking about cavities, about gum health, about potential for bad breath. And then it allows you to set up a free dental checkup.
Okay.
So we've tied up with the IDA, the Indian Dental Association, and their dentists have kindly offered free dental checkups to anybody who comes through this route to set up an opportunity to just have their teeth taken.
How did this idea come about?
To be honest, it's in our heritage. We used to do something called an oral health month earlier. This was pre-COVID. So a couple of things that we've changed. One, it's not good enough for oral health to be your focus in a single month. It needs to be a movement. It needs to be ongoing. And the second is, of course, the tech has really advanced, and the ability to use your phone to be able to scan your oral health is relatively new. And so that's something that we've taken advantage of with this idea.
You know, you talked about tech, and while you're using this to actually enable this movement to take shape, let's talk about tech and what's happening within the company, both at the front end as well as the back end, on the back of the use of technology.
So this is something that we are very excited about. We are the first, or perhaps among the first Colgate companies to do this anywhere in the world. And so we think this could be quite game-changing. Apart from this, of course, Colgate has a really wide distribution network. We cover 1.7 million outlets. We now have the history of those outlets along with the macro indicators of where that outlet sits. And we're able to marry all of that data into a predictive analytics of what that outlet is likely to be able to sell. Often before the outlet themselves knows that they're likely to be able to sell it. So we come up with a personalized, if I may, recommendation for every one of those 1.7 million outlets, which then travels to our distributor sales representative on his handheld or her handheld. It doesn't require any thought. You go to the store, you open it, this is what you need to sell. It makes it really easy, and that's been quite a game changer for us to manage these 1.7 million outlets. We use image recognition in particularly the self-service stores. We're able to take a picture of the primary shelf and the secondary shelf, be able to understand what is our share of shelf, what is the placement, what is even the pricing, do we have the right, the right SKUs in the right combination. So that's been fantastic as well. We've started using AI for forecasting. We have history on, how much we're going to sell. So forecasting for the next quarter, the out quarter, that's been really good as well. And we've been using it for digital twins of our factories to be able to just mirror what the factory is doing and see problems before they're going to happen and to drive efficiency. So numerous examples off the top of my head. These are a few that come to mind. But it is becoming quite the move with it or get left behind.
Yeah, I would imagine, and that's the challenge that a lot of companies are faced with today, not just in the tech space, but outside of it particularly. But, before we head into a break, I want to ask you whether India is likely to spearhead what is potentially a big pilot for Colgate globally with this movement that you spoke of.
I think certainly, because at the scale at which we want to do it, so we want to reach 500 million consumers with the advertising. I told you that we're already putting out anywhere from 600 million plus packs with the QR codes, and we're hoping that every consumer will take this opportunity to just get a free personal in their home assessment of oral health.
Well, we are going to take a break, but continue our conversation with Prabha. We're right back with you. We're going to talk about what's happening on the shelves and how Prabha is reaching her consumer. That and more when we return after this break.
Colgate Oral Health Movement in partnership with News 18 Network and Indian Dental Association. Tant hit mein jari.
To capture the high spirits of the festivities with the product as luxurious as its audience. Amrut is also making headlines with its limited 2 Indies rum, which is premium blend, is specifically crafted to appeal to India's growing taste for luxury spirits while enhancing Amrut's profile on the global stage as well. Now, Indri is also making waves, winning a prestigious gold medal at the Whiskies of the World Award for its Diwali Collector's Edition 2024. The award not only underscores India's presence in the world of fine whiskies, but also highlights the trend towards premiumization, one that is sweeping the industry. Now let's zoom out to the broader industry trends. Last year, festive season saw a 12% spike in premium and luxury spirit sales, according to CNBC data. With consumer spending high, 2024 is poised to outdo that with even more new launches and robust demand. Many in the industry are leaning into the premiumization strategy, hoping that these high-end products will help offset inflationary costs that have been cutting into the margins. Back to you.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment?
Welcome back. We're in conversation with Prabha Narasimhan of Colgate-Palmolive, and we're talking about the oral care movement that Colgate is spearheading here in India using technology. But Prabha, let's talk about what's happening as far as shelves are concerned. You were talking about the distribution end, and you know, one of the things that's been game-changing in the Indian retail market in the last particularly year and a half is quick commerce, and take us through what Colgate's journey has been on that front.
So I think we've really been surprised by how quickly and how rapidly
quickly quick commerce has taken up.
Exactly. Consumers have adopted quick commerce, and it's been quite dramatic. So I think what we've done so far is really to make sure that we are partnering with all of the players in quick commerce to make sure that we have the right availability in the right dark store, which is really the added advantage. And where we have an advantage is because we have a portfolio of brands, we understand the oral care category, and like I said, we already understand the macro environment that's being served in a given pin code. We do have an understanding of what sells, and so to be able to work with them in partnership to have the right assortment in the right dark store. Then, of course, the fact that we lead this category does help us to be visibly available on the platforms. But the growth has been staggering. Just to give you some numbers, if the company grows at X and e-com grows at 3X, then quick commerce basically grows at 7X, which has been quite
even though a small base, but a very significant growth.
And we're quite happy to see this growth because both e-com and quick com for us are share accretive, premiumization accretive, margin accretive, sales per gram of toothpaste accretive. So we're quite happy to see this progress. It allows the consumer an opportunity to discover different toothpaste which otherwise she may not discover.
So are you going to do things differently now, given the way that we've actually seen quick commerce and e-commerce both take up, and quick commerce particularly so?
So I think we've done a good job so far. We've been quite, off the blocks quite early, and we're doing quite well. And like I said, share a creative platform for us, which means that competitively also we are doing quite well. I think the opportunity for us as we go forward is to have better partnerships on data so that we can even better tailor the experience for consumers and be much sharper on what is the SKU size and what are the benefits combinations that we need to sell in a given geography. And as quick commerce expands its footprint into newer and newer pin codes, we need to make sure that we are bringing to bear our understanding of category married with their understanding of their business and the locality. I think this could be a fabulous partnership going forward.
A terrific combination, as some would call it. But Prabha, let's talk about the challenges as well as the opportunities of being a category creator as well as a category leader, and you enjoy dominant market share. But part of that is not just to retain market share, but is also to grow the market. What are some of the opportunities and challenges that you see there?
To be honest, Shireen, growing consumption is exceptionally hard. And we discussed about how, brushing at night and getting rural consumers to brush every day because only 1 in 2 consumers brush daily, and getting people to replace their toothbrush. These are all easy things for me to say sitting here in Colgate, because I spend, 10 hours of my day, if not more, thinking about this kind of thing.
And price is not the only thing that moves the needle.
Price most certainly is not, because we are available at 10 rupees and, our cheapest toothpaste is available at 25 paisa per gram. Our most expensive toothpaste is 5 rupees per gram. So regardless of what you're looking for, it's available at a given price point. And if you talk to consumers, if I was to ask any single consumer, how many times a day should you brush your teeth? They would all say twice. And yet, even in India, they're not doing it. So getting people to take cognizance of the fact that this is almost an action you take today for a better tomorrow is always hard, because there is no instant gratification. And that's, I think, probably the biggest struggle of driving consumption. But we're committed to it, and we will be at it, and I'm sure we'll get there.
In a social media era, how has communication for you changed, and particularly on an aspect like oral care? Are you likely to use social media much more to drive home the point?
So different brands of ours do different things. So Colgate Strong Teeth continues to use a more traditional media mix, though interestingly, we are able to reach consumers right at the top of the pyramid and right at the bottom of the pyramid with digital. So right at the bottom of the pyramid, we've started reaching consumers through digital in what was otherwise TV dark areas, as they were called. But for our more premium brands, Visible White, for example, and maybe I can take the example of Visible White Purple that we've launched recently.
Okay.
It's a purple toothpaste.
Okay.
It gives you instant
That's
whitening.
An odd choice for a toothpaste.
Very odd, but there is a science to it, as always.
Okay, what is the science behind a purple toothpaste?
Purple sits at the opposite end of the color spectrum from yellow. So when you combine purple and yellow, what you get is white. And that's really the science that sits with it. But like your reaction, it is an unusual play for toothpaste. It is targeted at slightly younger consumers. And therefore, our entire content has been what my marketing head likes to call tighter, harder, personalized. So it goes to a smaller audience. It works harder amongst them, and it is more personalized. And so the bulk of our expenditure, in fact, we don't have a television asset on Purple. We only use influencers, social media, and digital to drive it. And it's a month old, and it's exceeding our expectations so far.
So the purple toothpaste is exceeding your expectations. That's good to know. So what next as far as the innovation pipeline is concerned, Prabha?
So our focus is going to continue to be on driving the science. So we will be having some new news on Colgate Total coming very soon, which just talks about the fact that, we have, this is actually the toothpaste that more Colgate people use than any other toothpaste. They see it as the best everyday health toothpaste that you can use. So there will be some news coming on Colgate Total, and otherwise we will continue to keep pushing the science agenda. We have big plans in the therapeutic segment. I said that only 9% of Indians go to dentists, but 9% of 1.5 billion people is still a lot. And we are very, very lucky that we have exceptional partnerships with the dentist community. We have done for the 87 years that we've been in existence here, and leveraging that partnership to work with them to create problem solution offerings, whether it be in the area of gums or it be in the area of mouthwash for post-implant procedures, etc., is work that we are looking at and looking to take forward.
Okay, let me ask you this, Prabha, as somebody who's leading an FMCG company and somebody who's worked her entire life in FMCG, when you walk into people's homes, are you looking at what are the products that they're using? I mean, is that what your eyes sort of focus on?
Don't tell my friends, but that's absolutely me. It's like, and if they're close enough, I'll be looking at it going, that's the wrong toothpaste. So.
Well, it's been an absolute pleasure to speak with you, Prabha. Thanks very much. We wish you the very best of luck with the new initiatives that you're taking forward at Colgate-Palmolive, and keep us posted on the many changes as well as the many developments that take place.
Thank you very much. It's been a pleasure to be here.
Well, with that, it is time for us to take a break here on this special broadcast. We look forward to expanding this campaign into a nationwide movement, as you just heard there from Prabha, to ensure that every smile counts, because healthy smiles lead to a healthier India. From all of us here on the team for now, goodbye and many thanks for watching.
Colgate Oral Health Movement in partnership with News 18 Network and Indian Dental Association. Tunt hit mein jari.
How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and...
Hello, welcome to News Center. I'm Parikshit Luthra. The countdown to Jharkhand and Maharashtra elections has well and truly begun. While the BJP-led NDA would be setting its eyes on wresting power after 5 years in Jharkhand and will clash with Hemant Soren's JMM and the Congress, the poll fever has reached fever pitch in Maharashtra. First to Jharkhand, Hemant Soren, the de facto supremo of Jharkhand Mukti Morcha, is trying to achieve what no leader has succeeded so far in doing: beat anti-incumbency. The BJP, meanwhile, is trying to wean away the tribal voters by promising that tribals will be kept out of the Uniform Civil Code whenever it comes into existence. Home Minister Amit Shah made the announcement while speaking at a rally in Ranchi yesterday. 28 out of the 81 assembly seats in the state are reserved for the scheduled tribes. The BJP had won only 2 in 2019 elections. We're now joined by Sanjay Kumar Sinha, special correspondent at News 18 Jharkhand. संजय, मैं आपसे जानना चाहूंगा कि बीजेपी ने कहा है कि वो यूनिफॉर्म सिविल कोड को इंप्लीमेंट करेंगे झारखंड में अगर वो चुनाव जीतते हैं, लेकिन ट्राइबल कम्युनिटी को उसके बाहर रखा जाएगा। इसको कैसा देखा गया है अभी तक झारखंड में?
देखिए, बिल्कुल बीजेपी ने जैसे चर्चा जब आई कि संथाल में जो बीजेपी में जो घुसपैठ का मामला जैसे ही सामने आया तो घुसपैठ के मामले को जोड़कर ही झारखंड में यूसीसी को देखा गया। यहां तक कि झारखंड हाईकोर्ट में जब ये मामला चल रहा था घुसपैठ को लेकर, तभी बीजेपी ने वहां से कहा था कि यूसीसी झारखंड के लिए जरूरी है, क्योंकि झारखंड की सीमा जो है वो टच करती है आपको। तो समझ सकते हैं कि ऐसी स्थिति में झारखंड में यूसीसी जो है वो एक बड़ा मुद्दा, चुनावी मुद्दा भी अब बन गया है, चूंकि बयान आ गया है कि झारखंड में अगर सरकार बीजेपी की बनी तो हम यूसीसी को लाएंगे। लेकिन अब यहाँ जो ट्राइबल कम्युनिटी है और ये कह सकते हैं कि जो यहाँ पर जो आपको सत्ताधारी दल है वो कह रहे हैं कि झारखंड को यूसीसी की जरूरत नहीं है, झारखंड को सरना धर्म कोड की जरूरत है, जिसकी चर्चा और मांग लंबे समय से की जा रही है। तो ऐसे में ये देखना है कि वास्तव में यहाँ पर यूसीसी जो संथाल के आसपास के जो संथाल के 6 जिले हैं, उन 6 जिलों में यूसीसी जो है एक बड़ा फैक्टर वहाँ की राजनीति में साबित होगा। चुनावी माहौल की बात करें तो बीजेपी इस मुद्दे को लगातार, घुसपैठ का मुद्दा जो है उसे लगातार उठा रही है और ये बता रही है कि झारखंड में आदिवासियों के वजूद को बचाने के लिए झारखंड में दरअसल यहाँ घुसपैठियों को बाहर भगाना होगा। और जो बीजेपी ने एक मुद्दा लाया है, चुनावी घोषणा पत्र जो अमित शाह ने कल जारी किया, उसमें यह भी कहा गया है कि देखिए हम जब यहाँ बीजेपी की सरकार बनेगी तो हम घुसपैठियों को चुन कर बाहर निकालेंगे और जिन घुसपैठियों को जो उन्होंने यहाँ आकर आदिवासी महिलाओं के साथ विवाह किया, उनके जो बच्चे हैं, उन बच्चों को, आदिवासियों को जो लाभ मिल रहा है उस लाभ से वंचित किया जाएगा। तो कुल मिलाकर
हाँ संजय, मैं आपसे एक सवाल और करना चाहूंगा। जो अलायंस है झारखंड मुक्ति मोर्चा की, आरजेडी की, कांग्रेस की, उनका सबसे बड़ा कैंपेन पॉइंट या चुनाव पॉइंट क्या है अभी तक, और सबसे बड़ा आर्थिक मुद्दा इस वक्त स्टेट में, झारखंड में क्या है?
ठीक है, झारखंड में अगर बात करें कुल विधानसभा से ऐसे समझा जाए कि झारखंड में कुल विधानसभा की सीटें 81 है, लेकिन जो सबसे बड़ी लड़ाई चल रही है वो संथाल और कोल्हान में। संथाल चूंकि माना जाता है कि जो संथाल और कोल्हान जीतेगा झारखंड में वही राज करेगा, तो संथाल में समझ जाए कुल सीटें 18 हैं और कोल्हान में कुल सीटें 14 हैं, मतलब 18, 14, 32 सीटें हैं। अगर एसटी सीटों की बात करें तो संथाल में 7 सीटें हैं, कोल्हान में 9 सीटें हैं, मतलब 16 सीटें यहाँ जो हैं वो सीटें आपको एसटी सीटें हैं। तो मतलब कि जो भी पार्टी अगर इन दोनों जगहों पर बेहतर प्रदर्शन करती है तो जाहिर है कि सरकार उसकी ही बनती नजर आएगी। अगर बात करें, देखिए सबसे बड़ी बात ये आ रही है कि यहाँ पर जो मुद्दा था कि जो अगर हम बात करें आपको महागठबंधन के लिहाज से बात करें, इंडिया गठबंधन के लिहाज से बात करें, वो बार बार ये मुद्दा उठा रहे हैं कि झारखंड में पहले समझने के लिहाज से है कि झारखंड में बुनियादी मुद्दे इसमें पूरी तरीके से नजर नहीं आ रहे हैं। बिजली, सड़क और कह सकते हैं कि जो और भी जो दूसरे जरूरी मुद्दे हैं वो अभी कहीं पर नजर नहीं है। बात हो रही है खाता राशि वाली योजनाओं की, जिसको ठीक चुनाव से 2 महीने पहले जो है मुख्यमंत्री मैया सम्मान योजना जो सत्ताधारी दल की ओर से आती है और हर महिला को फिलहाल जो कह सकते हैं 50 लाख से ज्यादा महिलाओं को 1-1 हजार रुपए खाते में दिए जा रहे हैं, वो एक बड़ा फैक्टर है। और बीजेपी ने इसी के बदले जो अपना मैनिफेस्टो लाया है, जो उन्होंने संकल्प पत्र जारी किया था 5 अक्टूबर को, तो उन्होंने कहा भी था कि हम गोगो दीदी योजना ला रहे हैं और गोगो दीदी योजना में अगर हमारी सरकार बनती है, यानी बीजेपी की सरकार बनती है, तो हम उसमें प्रत्येक महिलाओं को हम उसमें 2100 रुपए देंगे। जैसे ही बीजेपी ये घोषणा करती है, ठीक उसी वक्त कैबिनेट की बैठक होती है 2 दिन के बाद, और कैबिनेट की बैठक में अब यहाँ पर जो है हेमंत सरकार ये कहती है कि अब मुख्यमंत्री जो मैया सम्मान योजना उसकी राशि अब 1000 से बढ़ाकर अब ये राशि होने जा रही है 2500। मतलब कुल मिलाकर समझ जाइए कि जो यहाँ पर इंडिया गठबंधन की ओर से जो मास्टर स्ट्रोक है, वो मास्टर स्ट्रोक जो मुद्दों के हिसाब से वो है इस मुख्यमंत्री मैया सम्मान योजना। कुल मिलाकर पूरी राजनीति इसी सम्मान योजना और बीजेपी की जो गोगो दीदी जो योजना है उसके इर्द गिर्द घूम रही है। मतलब कि जो इसमें भरोसा ज्यादा, चूंकि यहाँ पर बात झारखंड में कही जा रही है कि आधी आबादी की बात हो रही है, जिसकी तरफ आधी आबादी होगी सरकार उसकी बनेगी। तो आधी आबादी को खींचने के लिए खाता राशि वाली योजना है मुख्यमंत्री मैया सम्मान योजना और बीजेपी की गोगो दीदी योजना। जिस पर ज्यादा भरोसा कायम होगा तो मुझे सरकार उसकी ही बनती नजर आएगी। जी
बहुत बहुत शुक्रिया संजय, बहुत बहुत शुक्रिया। आपने बहुत अच्छी तरीके से हमें समझाया कि झारखंड में बड़े मुद्दे क्या हैं और दोनों जो बड़े बड़े ग्रुप्स हैं वो इस वक्त क्या वोटर्स को प्रॉमिस कर रहे हैं। बहुत बहुत शुक्रिया हमसे बात करने के लिए। Moving on to Maharashtra, where seat-sharing drama ahead of elections has taken center stage. The presence of 6 political parties in the fray has made Maharashtra an interesting battle to watch out for. Santya Gora is now joining us. Santya, both the groupings were dealing with issues related to rebels and cross-nominations. Have all these issues been settled now?
Absolutely not, Parikshit. And in fact, today was the last day to withdraw nomination. So if I talk about Mahayuti, so recently Devendra Fadnavis, the Deputy Chief Minister of Maharashtra, said he admitted that there was cross-nomination in Mahayuti alliance on 14 seats. He said that as far as 12 seats are concerned, the BJP, Ajit Pawar, NCP and Shinde Sena, they have resolved the issues, but 2 seats are still throwing a challenge. Now, one of those seats is Mahim, where Raj Thakre's son, Amit Thakre, is making his debut, political debut, but Shiv Sena, Eknath Shinde's Sada Sarvankar also filed his nomination. In fact, he also got his AB form from Eknath Shinde. Today, the whole day was dedicated to that, with Sada Sarvankar claiming that his son tried to meet Raj Thakre, but he did not meet him. He said that I've discussed this with my karyakartas, my party workers and my family, and we're yet to reach any conclusion. So last we checked, Sada Sarvankar, he did not withdraw his nomination. That means on Mahim, the Mahayuti alliance, because Raj Thakre has extended his support to BJP and the alliance, there is cross-nomination on that particular seat. Now, another seat is in the eastern part of the city. We're talking about Mumbai once again, and this time it's Nawab Malik's Mankhurd seat. Nawab Malik, who used to contest from Anushakti Nagar, this time he's contesting from Mankhurd Shivaji Nagar. So Nawab Malik is Ajit Pawar, NCP's candidate. Nawab Malik in the last 5 years, especially in the last 5 years, took heads on to BJP. He criticized BJP. In fact, BJP also there were cases against him. He was sent to jail. A lot of drama happened. So when Ajit Pawar suggested his name, at that time BJP opposed to that move. But despite that, Ajit Pawar ignored that particular warning and he gave the ticket to Nawab Malik. And Nawab Malik, we recently spoke to him and he said that he's not a Mahayuti candidate, but he's an Ajit Pawar candidate. So Eknath Shinde contested his candidate from there. So he's again there. There's no withdrawal of nomination from that particular seat as well. So cross-nomination remains a problem for these alliances. Now, there's another aspect to it, Parikshit, independent candidature, because tall leaders, if I talk about BJP for that matter, Gopal Shetty from Borivali, he filed his nomination as an independent candidate. But in the last 2 days, BJP managed to convince him and he withdraw his nomination. Same can't be said for, as I said, for Sada Sarvankar and other candidates. So cross-nomination is a problem. For Mahayuti also, there are seats where there are problems. So today is the last day. Today, in fact, was the last day to withdraw the nomination. But here we are standing on many controversial seats on both the alliances.
All right, so both the alliance groupings could have some troubles as far as rebels are concerned. But Santya, talking about issues which clearly have taken a backseat in this election because of the high voltage battle we're seeing in Maharashtra, what are the top 3 issues that will take center stage?
See, Parikshit, ideally, in an ideal situation, obviously, when there was supposed to be clarity about the alliances, about the ideologies, about the election issues as well. But because of the khichdi Maharashtra's politics has become, especially in the last 5 years, the voter also feels that the voter does not know anymore what party, what ideology the voter is voting for. So there will be some sort of voter fatigue. So whether it's RSS who is campaigning for BJP and Mahayuti, or whether there are other Maha Vikas Agadi parties, they are requesting voters to step out, because bringing voters to the polling station is going to be a challenge, considering the voter fatigue and all the confusion which has been created by these parties. And unfortunately, because of that, the election issues, the development issues, the issues which concern the people have taken a backseat. Now, despite that, there will be some issues which will still play a dominant role. That will be farmer distress. Farmer distress is going to play an extremely important role, and for every region, the issue is different. For example, in Marathwada, cotton and soybean farmers are facing different issues. They are facing issues like, despite an MSP announcement, the government is not buying MSP, soybean on MSP, that is forcing the farmers to sell their produce at a lower rate. Other than that, cotton farmers, as far as cotton farmers are concerned, they're still waiting for all the compensation for their destroyed crop which was promised to them. So that's not there. The increased production, the increased cost of production is an issue across the state. Now, Nashik belt, the onion farmers have different issues. And in the Lok Sabha, we all saw that how that panned out. So this time, onion farmers might have a slightly different take because at present, the onion prices they're getting good prices for their produce. And the government of India has also lifted the export restrictions. So that is going to play a positive role as far as Mahayuti is concerned for them. But the farmers also are, they have their apprehensions that what if it is just, election limited sort of a scheme. So they have an issue. But if I talk about Mumbai, obviously urban infrastructure, the redevelopment of slum establishments, education, health, good quality schools, all these are going to play a key role. And talking about that, we in fact, CNBC-TV18 spoke to one of the interesting candidates who is contesting from Mahim. Mahim is Aditya Thackeray's traditional seat, but this time Milind Devra is contesting on a Shinde Sena ticket. So we spoke to him about his election issues, his political aspirations, and his battle with Aditya Thackeray. Listen in.
I don't think there's any anger, especially with me.
There are cross nominations across the alliances.
I've been in this party now for 10 months. I have an old relationship with Shiv Sena in this base, even when I was in the Congress party. My late father had a very close relationship with Balasaheb Thackeray. They had different set of views. Politics was very different then, but had a very close personal relationship. In fact, Balasaheb ensured my father became mayor of Mumbai in '76. So sometimes, I believe politics has to transcend these petty lines. And I think politics has, unfortunately, not just in Maharashtra, but around the world really, has become very polarized. You stand for this, then I don't want to see the other side. I stand for a certain view and I'm very rigid, dogmatic, and I don't want to see the other side. People have to become flexible. People have to realize that our systems, India's constitution, America's constitution were designed for differences, but ultimately for people to come together and see the greater good.
Ours is a diverse country, but coming back to my question, the party workers, and this I say for all the parties, because from cross-nomination to the rebel and everything is visible.
There are areas where, look, there are always areas in every party and in every alliance, even in the opposition, and in every election, where especially as you go to state to regional politics, you will find many aspirants. In a parliamentary election, you typically have 1, maybe 2 aspirants from each party. In an assembly election, a local election, you'll have 3, 4, 5 aspirants. That happens, that's but natural. But I can assure you in Worli, there is no such thing. In Worli, everyone is united. All the Mahayuti NDA partners are united. In other areas where there is some rebel, we'll know in a short while what happens.
By today evening, of course. For the longest period of your career, you were associated with Congress, a party which claims that secularism is at the core of everything it does. Now you are with Shiv Sena, the Shinde Sena faction, a party which presents itself as a Hindutva-centric party. So why did you go for Shiv Sena, when you decided to switch sides? Why Shiv Sena?
See, firstly, the Congress party, unfortunately, of 2024 and the Congress party of 1947, there's a huge difference. When parties move to an extreme position, this is what happens. I think Congress was a centrist party under people like Dr. Manmohan Singh. Unfortunately, Congress has now become an extreme left party on social issues, on economic issues. Congress party was a party that brought the new pension scheme, which helped reduce the burden on future generations, made it more attractive for government pensioners to be able to invest in capital markets.
The tailor of that was Mr. Atal Bihari Vajpayee of NPS.
I mean, I would say it was initiated from there, but it ultimately got implemented in 2004. The Congress didn't scuttle that. Today, the Congress is opposing that. They're saying go back to the old pension scheme, which has resulted in the bankruptcy of a state like Himachal Pradesh. So, these kind of views are not, in my opinion, the views of the Congress party that I knew of. a man like Dr. Manmohan Singh believed and still believes in liberalization, still believes in economic reforms. Today the Congress party is sounding more like the communists to me economically than it sounds like the Congress of Dr. Manmohan Singh. So I believe that what I believe in, whether it's for Mumbai, whether it's for Maharashtra, whether it's for India, whether it's socially, economically, politically, my views really haven't changed. Mr. Shinde has given me a broad canvas through which I can work. He's very clear what he wants me for. He wants me to help attract investments for the state.
Okay, this is a question from CNBC-TV18's makeup team, because many of them are, they live in Worli. They have specifically asked me to ask you this, that two hospitals, Kamdar and Podar,
yes,
they are not the way they used to be. They are not the center of treatment they once were known for being. And another thing is, there is a no, reputed per se English medium school in Worli. Do you have any plans for these two aspects, health and education?
I'm grateful for their suggestions, and I'm looking forward during the course of this campaign to hear good suggestions. But I'm very well aware of the issue of Podar Hospital, and this is something which is certainly on my agenda.
Do you have a plan? That's what they want.
Well, I think that, look, Podar Hospital is an Ayurvedic hospital. It's very important to refurbish it. The good thing is that our own party in the center, we have a minister who's the Minister of Ayush, under which this comes under. So we'll work with the center, we'll work with the state to ensure that...
But the allopathic side of things, because, Ayurveda is not something which everybody... It's contested also by medical scientists.
Well, as I said, that ensuring that people of Worli have access to good quality healthcare, have good quality to education, whether it's upgrading a municipal school to take it to a quality of an English medium private school. Those are also things we can look at. But as I said, I'm here to listen to the suggestions, so I'm grateful to your makeup team for their valuable suggestions.
No, they wanted me to ask your plan, this was not a suggestion, they wanted to know your plan.
My plan, look, if I make a plan, Aditya Thackeray made a plan 5 years ago that he'll make Worli A++. What's happened to that plan? So my answer to them,
when you seek votes, you'll have to present a plan.
You have to present a plan that says you'll do your best. Okay. You'll hear people. Anyone who promises a plan that says, I'll do this to Podar Hospital and I'll do that, is basically over-promising and may under-deliver.
And coming up, 19 Indian entities and individuals face US sanctions after the State Department accuses them of aiding Russia's war on Ukraine. More details in just a bit. We will be speaking to India's former ambassador to the WTO, Jayant Dasgupta, on the other side.
News show India Business Hour drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. You're watching News Center. The United States has sanctioned 19 Indian entities, which includes companies and individuals, accusing them of aiding Russia's war in Ukraine. More than 400 entities worldwide were targeted by the US State Department. These include companies from China, Switzerland, Thailand, Turkey, along with 19 entities in India. Some of the Indian companies on the list include Abhar Technologies, Denvis Services, Galaxy Bearings, Lokesh Machines. In fact, Lokesh Machines is a listed company that has supplied weapons to the Indian Armed Forces. Shares of Lokesh Machines tumbled on Dalal Street today. In a statement to the exchanges, Lokesh Machines said they have been exporting machines to Russia since 2011 and none of its distributors have been featured in any sanctions list. The company also said it is in the process of reaching out to US authorities. What do these sanctions imply? All assets and properties in the US will be frozen with immediate effect. Any other entities owned by the sanctioned companies or individuals will also be blocked. Sanctioned entities will not be allowed to undertake any transactions. Responding to the sanctions, India's External Affairs Ministry said the sanctions companies are not in violation of the Indian law and the government is working towards sensitizing them on applicable export control provisions. Joining us now to discuss more is Jayant Dasgupta, ex-Indian envoy to the WTO. Ambassador Dasgupta, thank you very much for joining us. How do you see these sanctions, the language used by the US Treasury Department, saying that these 19 entities in a group of 400 are responsible for providing dual-use technology to the Russian government, and this has been used by Russia in making weapons which have been used to fight Ukraine. So, first of all, the number of Indian companies, do you find that unprecedented?
Yes, number 19, I think, and two individuals, Vivek Kumar Mishra and Sudhir Kumar, who are co-directors of their respective companies, they have also been sanctioned. So the total number comes to 21 out of 400, and this is very high. And mind you, the sanctions have been imposed not for products which are being manufactured in India, because they are mainly microelectronics or computer numerical controls, which can be used for missiles and other weapons. But a lot of them can be used for medical electronics and for even mobile phones. So dual-use technology is obviously a key point. But the main targets of the US sanctions were China, Turkey, Thailand, and one more country, and Switzerland, from where these items are getting imported and then resent. Now, China, of course, bears the brunt of the sanctions because the largest number of companies from there have been sanctioned. So, to answer your question, the number is quite large. But mind you, many of these companies have a turnover of 15 crores or 70 crores or even less. So, and many of the companies have their main exports only to Russia. They are not trading with the US at all. And they are also not importing products from the US, which they are re-exporting to Russia. So that is another aspect which has to be borne in mind. And lastly, I wanted to mention that this is all about non-proliferation. And India stands by 3 of the international agreements, the Wassenaar Agreement, the Australia Group, and the Missile Technology Control Regime, as well as the UN sanction number 1540 on non-proliferation.
Right. Mr. Dasgupta, how do you think this will impact the export operation of these 19 companies? While the domestic operations may not suffer, but tomorrow if they want to export to any country in the West or anywhere in the world or to Russia, how is it directly impacted?
As far as their exports to Russia is concerned, one of the company's spokesperson has also mentioned that the Indian government is not preventing it, and the Director General of Foreign Trade, for instance, is charged with this responsibility to ensure that all the export control measures and the regimes are abided by. And that the DGFT has, I think, unofficially confirmed that is taking place. As far as the Russian exports are concerned, they will carry on unless the government of India decides to stop that. And the second point is that the Russian payments are being made in Indian rupees because of the bilateral trade agreement that we have. As far as exporting to third countries is concerned, other than the US. No exports can take place to the US. And if any assets of these companies are in the US, they will immediately be confiscated and handed over to the Office of Foreign Assets Control.
Right, that is an important point. I would also like to ask you, how important is it for India to get these companies, these 19 companies, off the sanctions list?
That will, I think the Indian government is already engaging. The MEA has approached the US authorities because about 120 sanctions were issued by the State Department, and 270 plus sanctions were issued by the Treasury Department. And the OFAC, the Office of Foreign Assets Control, comes under the purview of the Department of Treasury. So two departments are involved. We have to see whether these 19 plus 2 sanctions, which department issued the sanctions. So we'll have to engage with them and get into more details and assure them, because some of the companies are saying that what they have exported is not going to get into military use at all. It is basically about medical electronics and for other non-military users.
Right. Mr. Dasgupta, do you also feel that as a result of these sanctions, because the Treasury Department statement listing out the violations by each of the companies is in public domain, could this impact access to credit for these companies even in India?
As long as they are taking credit from the nationalized banks, unless the RBI steps in and prevents them from utilizing the credit flows. They are also, I think, in touch with, in contact with, and perhaps they have commercial dealings with Sberbank, SBER Bank of Russia. So the credit flow may not get interrupted only by putting restrictions in India. That may continue unless the government of India decides to step in and prevent them from exporting, and also from tapping the normal credit channels that they are utilizing at the moment.
Right. Ambassador Dasgupta, thank you so much for joining us on the program. We've completely run out of time. With that, it's a wrap on this edition of News Center. More news and updates continue right here.
On the street, they say, "Ye dil mange more," right? Now that you're listing, you also have a listed peer. With the trajectory that we've seen on them, on a lot of the parameters, they're above, what Swiggy is right now, which is not to say that you're any less. It's just that you're on different stages of growth in your life.
Correct. I think, look, there's a lot of context. We each have our own context, and we are in very, very exciting categories. And our strategy, our capital allocation, everything's going to be a function of our excitement and what we can go after in each of these. Like Rahul mentioned, we've demonstrated the profitability in the food business. We feel good about its future going forward. As for quick commerce, I think it's in a once in a lifetime category, and I think we are seeing consumption patterns change for consumers, and there's so much to be done. So our endeavor will be to make sure that we do the fullest of our ability to make sure that we grow and serve customers well and